October, Bitcoin hit an all-time high, then sold off, and then gold hit an all-time high and then held up. There was a bunch of other headlines like Apple and AMD, and we'll get into all of that. But now tomorrow we get big data with the JOLTS jobs openings, and then we hear from Jerome Powell, and this is going to kick off this week in terms of where do we go next and where do we go for the month of March. So, Chad, we got a lot to talk about. I got the plays for you. I have the keys. We're going to talk a little bit about today, a little bit about tomorrow, and then the broadness, and then go over all of the plays for today and the ones we're looking at for tomorrow. So what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Walking to the couch, it's the 2020 last. Live in the hills, but still get a spread. Started with a live, but I still reinvest it. Feel how I feel, do you feel like a blessing? I just want the last shit, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, like I already told you, it was a pretty bad day. However, there's a lot of context that goes into it. I told you there was bad Apple news. If you haven't seen their chart, you should check it out because a lot of people are saying there is a huge divergence between Apple stock and where the NASDAQ is currently trading at. But the news that came out today was that the demand for the iPhone in China for the first 6 weeks of 2024, it was down like 16 to 20% compared to last year. That was bad news. Then AMD, they actually didn't close that bad, but they had news that they ran into issues with one of the chips that they were selling to China. Apparently, it was too overpowered, and now they need to apply for a license, but they're still near all-time highs right there. And then finally, there was news from the Fed. It was based off of Bostic's comments, and he talked about cutting rates and then pausing, but essentially this was a new idea from the Fed. Lately, we've been hearing a lot of the same back and forth. Well, this has kind of been a new thought, and this is one that Bostic is getting behind, and this introduced a little bit of doubt about rate policy because everyone's been saying, no, we either stay the same or we cut by 3 or we cut by 7, but what about this scenario where now we cut and then go back to pausing and waiting for a while? Well, that is now being discussed, and that all introduced some of the negativity to it for today. So, like I'm saying, it was a pretty bad down day. You take a look at everything. NASDAQ down 165. It was down as much as 2% intraday. S&P closed down 1. Same thing for the Dow and Russell, and we pretty much sold off all day. Even pre-market, we were doing pretty bad, and from the high of yesterday, I think it was almost 100 points on the SPX. So had people feeling a certain type of way, but to give you a little bit more context, where we traded to today, it was to the low of last Tuesday. So essentially, we are still holding that gain from the NVIDIA earnings. Even a lot of the gains of last week, you are still elevated. Just about 2 weeks ago, the all-time high was 5,000. We broke above that to 50.50, and then we sold off to 49.24, almost 100 points in a day. Bounced back up, sold back off, and then before you know it, you started going crazy again. So maybe we do this all over again because this was NVIDIA catalyst, and well, by the end of this week, we're going to have the jobs catalyst, and then next week, CPI, and then the next week, Jerome Powell. So Chatadonia, I hope you're ready for all of it, but today was a pretty wild one, and now, like I told you, tomorrow is about to get a little wild. So the job openings, that is going to kick off the first set of jobs data this week. You're going to get private payrolls the day after that, then jobless claims, and then you end the week with non-farm payrolls. But job openings lately, this has been getting the market moving. But now why making a big deal? One, it's going to kick off the data, but two, the jobs data this week is going to be very hard to read. why I'm making such a big deal about this. I was reminding people today, you have to remember what happened at the last jobs report. The last job openings last week or last month, the market reacted favorably to it, but what I really want you to understand is what happened on the last non-farm payrolls. I brought this up on stream, and if you do not remember, the last non-farms was forecasted to be about 175,000, 180,000 jobs. It came in at 353,000. It was a monster beat. This time around, we're expecting a little bit higher than what we were expecting last month, so we'll see what happens. Last month did have a lot of revisions, and they did revive the month before that a lot, but why I'm bringing this up and why I'm saying this is all going to be difficult because, one, last month when we had this data, we had our own little reaction to the JOLTS jobs report and all the data. Everybody was very favorable, and then the non-farms came in, and that surprised everybody, and then we went down, we went up, then we went down, and then a couple days later, we started rocketing back up. If you don't remember that last non-farms payrolls, it was on February 2nd. Like I'm saying, we reacted a little bit throughout that week. We rocketed up here, and I don't have the daily, but I don't know if you remember what happened that day on stream. The market was down. People were like, are we down because of the non-farms for about 30 minutes an hour? I was saying, yeah. 2 hours later, the market was up, and they're like, why is this happening? Is it because of the non-farms? Or like, maybe you could say that, and then 4 hours later, the market is trading back again lower, and then you're saying, well, is it the non-farms? And why I have the daily up here is because the market proceeded to go on and hit several new highs after all of that happened, even though it was a very strong report and even though that would have been seen as negative by the market. And now putting this into context, we have a lot of wild cards this week with all the jobs data because given that last reaction, who's to say how the market is really going to react? Is one thing how it's going to affect bonds, but is good news going to be bad news? Is bad going to be good? It will be hard to say. Even today, a little bit of an ISM miss had a big reaction on the bonds. Market still stayed down. It will be difficult to tell. There is still so many divergences going on right now that we are going to have to keep our head on a swivel this week. So generally, if it is another beat, since it isn't a month of big revisions, I don't think we should have a good reaction. It should be very negative. Again, multiple big jobs beats in a row. That would be very negative for the market, in my opinion, but who knows? We'll have to keep on a parachute or put on your seatbelt. Anything could happen, but then if we do get a big jobs miss, I think that could cool down a lot of things. So high jobs report, I don't know if it would be bearish. I want to say it would be. Can't say it with confidence given what we saw last time. And then I do think a miss, as long as it's not a huge negative miss, then the market will eat that up and everybody will love it. So keep that in mind. The next thing we got to be looking out for tomorrow is going to be Powell. I don't have any notes on it. It's very simple. The last time Powell moved the markets before Congress, that was in March of 2022. So if March in 2024, 2 years later, he wants to bring that same mentality and use this as an opportunity to lead into what's happening and talk about policy or kind of keep this strategic ambiguity, keep the same message and pound it home and stick to that. That's going to be up to Powell, but most people are not expecting for him to move things. He will get a lot of attention, but we'll keep our eyes out. We are definitely going to listen on stream. If he does say something, we will be there. Otherwise, most people are expecting that he is not going to say much. So keep that in mind. There will be questions towards quantitative tightening, and that may add a little bit of a bullish tailwind, if anything. So watch out for that. That is key number 2. And then finally, the final thing, man, related to today and moving forward, there's 2 little factors. One, gold. We've been talking about the dollar being strong. Gold keeps climbing, even Bitcoin. Gold really does not like something here. It could be in regards to credit, debt, the government shutdown. I mean, we have the election, so many things happening, but gold going up, this is really starting to add to the amount of divergences because it's not like the rate cut odds or the Russell is going up with it. Gold is trading like it is the NASDAQ, and that one should be making you scratch your head, especially if the dollar is going up. So keep your eyes out on this, especially after the data and into Powell. And then the final thing we talked about, we had a lot of discussions today, but just keep in mind where oil is right now. Maybe the gold and all these divergences are happening. The market's not really responding. NVIDIA, again, even went up today with SMCI, but maybe we will get a reaction if the final straw that breaks the camel's back is once again going to be oil. If that starts breaking out above $80, $90 again, watch if that moves. It shouldn't go above there. That's why I'm saying maybe that is why people are feeling confident. Oil is staying subdued. Maybe they will lose confidence, and maybe other things are just front running the way. But either way, keep your eyes out for gold until Powell. Watch all the data with all of it. Get ready for the data tomorrow. See if anything new comes out of it. But now, let us get into the plays. So, right off the bat, I got to
general election rematch in November after racking up several wins on Super Tuesday. As expected, both Biden and Trump prevailed in nearly every Super Tuesday nominating contest. Nikki Haley clinched her second victory over Donald Trump, but reports out this morning indicate Haley will shortly exit the Republican presidential race, leaving Donald Trump on course to become the Republican nominee. Here are the key takeaways from the day. Separate reports suggest the Republican frontrunner also met with Elon Musk recently as he seeks to woo donors. Mixed messages. Price spikes for Bitcoin and gold are sending mixed messages about global risk appetite. For a brief moment, nearly everyone who ever invested in Bitcoin was profitable, as the digital asset surged to $69,191 on Tuesday before retreating. But a simultaneous record high for gold, traditionally a safe haven, makes for a jarring contrast. The two assets are typically driven by markedly different drivers. Bitcoin is generally considered a speculative play, whereas a boost for gold suggests traders are taking a defensive position on concerns of geopolitical tension or a possible pullback in equities. What's going on? Some say the twin spikes could be down to traders chasing short-term momentum across asset classes. It could also be that both Bitcoin and gold are viewed as beneficiaries of expectations of looser monetary policy, with swaps markets now showing a 62% chance of a Federal Reserve interest rate cut in June. Powell heads to Capitol Hill. And we'll hear more from the Federal Reserve today as Chair Jerome Powell heads to Capitol Hill for his semi-annual testimony before Congress. Unsurprisingly, the focus is on when those interest rate cuts are likely to come. Stocks rose after a two-day sell-off and Treasury slipped ahead of Powell's testimony, in which he's expected to reiterate that the Fed is in no hurry to cut rates. After hotter-than-expected January prints, the U.S. central bank chief and nearly all of his colleagues have said in recent weeks that they can afford to be patient in deciding when to cut rates given underlying strength in the U.S. economy. But lawmakers will likely press the Fed chief on why officials are keeping borrowing costs so high, risking damage to the economy, when they've made so much progress on inflation. OpenAI hits back. OpenAI has fired back against a lawsuit filed against it by Elon Musk, using the billionaire's own emails to show he backed the company's plans to become a for-profit business. In a blog post on Tuesday, OpenAI said Musk insisted it raise billions of dollars to be relevant compared with Google. Musk filed the lawsuit last week against OpenAI, alleging the startup had strayed from its mission to build responsible AI and that it had become beholden to its largest investor Microsoft. In the blog post, OpenAI said that Musk was lashing out after trying and failing to make the company part of Tesla. Top overnight news. Chinese policymakers held a rare joint news conference to defend the new economic targets for 2024 and ensure that additional tools exist to bolster growth. Nikkei. China set a bullish target of around 5% growth this year as top leaders try to boost confidence in the world's second-largest economy. But for analysts, Premier Li Chang's lack of details on how to get there was out of step with the nation's deep challenges. BBG. The PBOC has room for further cuts to the reserve requirement ratio and will push for financing costs to trend lower, Governor Peng Gongchang said. That suggests the PBOC will be more active in easing to bolster demand, Mizuho said. China's 10-year yield slipped. BBG. South Korea's headline CPI ticks up to plus 3.1% in February while core is unchanged and inline at plus 2.5%. Wall Street Journal. Some Bank of Japan board members are likely to say that lifting negative interest rates is reasonable at a policy meeting this month, GG Press reported on Wednesday without citing sources. If a majority of the 9-member board vote in favor of ending negative rates, it would pave the way for the first rate hike since 2007. RTRS. Biden urges Hamas to agree to a ceasefire, warning of a very, very dangerous situation if one isn't reached by the start of Ramadan on 3/10. SCMP. Super Tuesday saw Trump and Biden dominate their respective parties. But with some large warning signs for each, Trump continues to perform poorly with suburban and educated voters while Biden's uncommitted and third-party problem is very real in certain critical swing states. Politico. Trump met with Elon Musk and a few wealthy GOP donors on Sunday as the former president looks for a major financial influx to bolster his campaign. Musk apparently thinks it's essential that Biden be defeated in NYT. Nikki Haley plans to suspend her Republican presidential primary bid in a speech Wednesday morning. Her decision arrived the day after Super Tuesday, when she won only Vermont among 15 states that held GOP contests. Haley won't announce an endorsement Wednesday, the People said. She will encourage Donald Trump, who is close to having the delegates needed to win the GOP nomination, to earn the support of Republican and independent voters who backed her. Wall Street Journal.
Wall Street Journal. So there it is. Not that bad. Not that bad. Still a little bit more. S&P futures are up by 0.5 Wednesday morning after U.S. equities finished lower on Tuesday, with the Dow, S&P, and NASDAQ all off more than 1%. Tech, a notable lagger, particularly in terms of mega cap and software names, while bulk and semis are also down. Other momentum growth plays lagged as well, though some value cyclical pockets have moved higher, including banks. Treasuries little changed after rallying on Tuesday. Dollar down by 0.2. Gold is up by 0.1. Bitcoin up over 6. WTI is up 1.2. Market trying to bounce following Tuesday weakness, chalked up more to technical than fundamental dynamics. Sell-side desk noted lots of questions but few good answers on Tuesday's move. Tech has been a big beneficiary of the ramp in equity flows and a key area of scrutiny from a positioning perspective. Also some semblance of a positive spin surrounding improved price action and cyclicals, which plays though upside participation should broaden and given better U.S. growth backdrop. Software earnings crowd a bright spot following recent batch of cautious headlines. In addition, Powell seemingly de-risked by the barrage of Fed speak and hawkish repricing of Fed pivot expectations. Powell reiterated it will likely be appropriate to begin dialing back policy restraint at some point this year, though he reiterated Fed still needs greater confidence inflation moving sustainably towards 2% target. Highlighted risk of both cutting too soon or too much and too little or too late. Daly and Kashkari also set to speak today. February ADP private payrolls missed, while pay gains and job changers accelerated for the first time since November 22, though gains for job stayers are the lowest since August 21. JOLTS job openings at 10 a.m. Fed Beige Book at 2 Eastern. Also, crowd beat on key metrics, including NNARR, while full year 25 revenue guidance ahead of company and push back against recent spending fatigue and pricing concerns. Ross, big Q4 comp, street positive on share gains. EPS beat, while full year EPS guide was just missed consensus at high end of company. Company is typically conservative. I forgot about Ross. THO cut guidance as management flagged ongoing weak demand. A&F beat and guided above, but expectations elevated. JWM Q4 revenue, GMB, EBITDA light, while RAC inflected positive. Nordstrom banner still pressured, and full year guide light at midpoint. CPB fiscal quarter 2 a bit better, reiterated full year guide. Foot Locker hit by push out of margin expansion timeline. Base up big on ARR, growing Capella mix and upbeat Q1 guidance. CMA reiterated Q1 NII guide outside of earnings, and then Dexcom said Stello cleared by FDA for over-the-counter use. I think that's it. I don't think there is it. Margin debate. Bubble debate grows as S&P nears 5,000. Big tech dispersion. CrowdStrike earnings were good. Private payrolls missed. Printed 140 versus consensus of 150. And January's upwardly revised 111. Bulk of new job gains in service and industry, with leisure, hospitality, and trade seeing strong gains. Pay gains for job changers accelerated for the first time in more than a year, though job stayers continue to decelerate. And then Powell prepared remarks published ahead. Again, he believes that Fed policy is likely to peak for this tightening cycle. It would likely be appropriate to dial back at some point earlier this year. Economic outlook is uncertain, and ongoing progress towards Fed 2% is not assured. He said cutting too soon or too much could reverse progress. Remarks in line with expectations that Powell would continue with patient stance and risk of inflation reaccelerating. Ba-da-ba-ba-bop. Yeah, THO did bad. We might hit on that one, but we'll see. We went a little further out. It's the only problem. But don't worry, Chad. There's a lot of other plays out there. So CrowdStrike, they're up 23%. Earnings and acquisition. Palantir up 7.8, $178 million U.S. Army contract. Marvel up 4.2. SMCI up 3.4. Argus Research initiates buy. IoT up 3.0. Dexcom up 2.8. Stello glucose biosensor to be cleared by FDA as over-the-counter. PGR up 2.1. Morgan Stanley upgrade. Base up 12.6 off earnings. SMR 10.5 nothing. SGHC up 7.4 off earnings. SoundHound up 4.8. MDGL up 4.2 off Citi initiating buy. ACMR up 4. IonQ up 4. Powell up 3.8. BL up 3.8. RGNX up 3.6. Levering Partners upgrade. GitLab up 3.2. ALTM up 3.1. Box up 3.1 off of earnings. PAC-B up 3.0. RevG up 3.0 off earnings. AI up 3.0. AISP up 59.6. Follow-through contract. EVA up 25.0. Nothing. Hippo 25.4 off of earnings. STRC 25.4. William Blair discloses William Kerber discloses 8.1% stake. VINC up 20% to present clinical data of VIP 236 at AACR. Krev up 15.1. Evigo 14.4 off earnings. Holo up 13.8. Cout up 13.2. Additional 7-year orphan drug exclusivity period for Tarpeo. OCEA up 12.0. JL up 11.7. WVE up 10.6 off earnings. B-Way up 9.7 off earnings. LLAP up 9.4. 45 million. IDIQ by NASA. YS up 8.6. ABSI 6.5. DCJO up 6.2. PCT up 4.1. Crypto stocks all trading higher, and China ADRs and JD had earnings and $3 billion buyback. Trading lower, BFB down 2.9 off earnings, Ross down 2.8 off earnings, Estee Lauder down 2.6. FDA citizen petition of benzoyl peroxide acne products. There people are saying it causes cancer. I forgot about that one. EL. Ally down 1.4 off of guidance. THO down 17.5 off of earnings. ODD down 11.7 off earnings. Foot Locker down 10.8 earnings. Nordstrom 10.6 earnings. NVEI down 9.0. XRX down 8.9. Oh, that's a watch list. Which one was it? To offer a $300 million convertible note. NSCC down 5.6, Goggle down 3.6, DWAC down 3.5, Genie down 2.8 off of earnings, Abercrombie down 2.8 off of earnings, Taro down 2.6, FDA citizen position of benzoyl peroxide products, EVC down 45% off of earnings, Meta to wind down ASP program, that's like 50% of their income. AFMD down 18, 1 for 10 reverse stock split. Fund down 13, BYSI down 12, DTSS down 7, KMDA down 7.4, XCRS down 2.6, and Vinda down 1.4 CRL from FDA for supplemental NDA for Hetlios. Ba-da-bop-bop-bop. Perfect timing. Honestly, we're making great timing. Great timing. I think we're a little bit ahead. I got a couple of plays for you. So, Chad, hopefully you like the video. Okay, we're here bright and early. We got a lot of data today. There's even a couple plays off of the morning. I'm going to be watching JD. I sold my shares, but that ended up hitting. We got a good gain on that. CrowdStrike, watch out for Crowd, but also watch out for all of the sympathies. I think even GitLab went up, and then even Zscaler, they're benefiting off of it. Palantir, that could be a hype play with the government contract. Still in oil, going to be watching that. And then Apple, watch if they lag or lead. Then MAIA, biotech with data. I don't know how that one's going to play out. Ross, I thought they kind of sandbagged. Maybe we get a little bit of a bounce, but we'll find out within the first hour. And then Estee Lauder, I do think that there's those cancer headlines regarding the benzoyl products. So we'll see how those all play out. But Chattadonia, that is all I have. Nothing too crazy. We'll see where it takes us. But now you got a couple of minutes here. So I'm going to go to the bathroom. I want you to think about your plays. Listen to the people on the TV. And when I come back, I hope you are ready with a lot of plays, ladies and gentlemen. So like that video. Let's get ready. The morning's about to start. Follow me on Instagram at The Trading Fraternity. And I will BRB. I will BRB.
And be supported by Congress in doing so. And what that does is two things. It perpetuates a support to the macroeconomy and the continued strength. Yeah. In addition to the fact of creating all that bond supply to fund those large deficits on an ongoing basis.
Yeah, well, let's see what the ratings agencies have got to say about that, depending on who sits on Capitol Hill. Jim, it's probably a bit too early, and I think you make this point, which is it's a bit too early to put together baskets of higher tax, lower tax companies, or is it?
No, I think it is too early. I agree with Bob that on a fiscal standpoint, they're both going to spend money, and that's going to make the economy stay strong, and that's going to keep the borrowing higher, full stop. Now, where they might differ is when you start getting into non-economic numbers, you know, whether or not you're talking about foreign policy or you're talking about the south border or something like that and how that might impact it. But then again, even if we start getting into those types of things, it's really hard to say one policy differs from the other. So here's a basket of stocks you'd buy one way, or here's a basket of stocks or what you would do with the bond market the other way. So right now, I don't think that this is really playing. I know we like to ask the question, is the Fed really playing in the markets? And the answer might be yes or no. I would actually turn that around and say politics really isn't playing in the markets. But again, it's still 9 months away.
If I said to the two of you, what is a gray swan event from the political spectrum, Bob, what would you say that could look like?
I think the main question is dysfunction and whether or not they can continue to operate the government in a time where we we still have divided government, and it may become more divisive heading into the election, and that could create second and third order consequences and a drag on the economy if they can't get things like budget and spending done.
And for you, Jim, what would you say could be a grey and disruptive emanating from political landscape?
That the two candidates that we assume are going to be the nominees, that one or both of them doesn't. One's on trial and might be convicted, and the other one is running behind, and his party is very, very upset or very worried that he can't win, and that we might see a change. It's a low probability.
Jim, are those low probabilities very left-tail risks?
Yeah, I think so. But I mean, they could really change. They could be very, very disruptive if you see one or the other or both winding up changing between now and, say, the conventions or election
both.
day.
Yeah, Egypt, IMF agree on new $8 billion loan. The Egyptian pound is getting rocked right now. Shout out my people, but that's not good for them. But ladies and gentlemen, boys and gals, you've heard the TV. Everyone talking politics. We just got over Super Tuesday. You got Powell before Congress. So on that note, Chattadonia, a couple of minutes to the bell. You're here, right now. Tell me, what is your first play of the day? Post it in the chat. What do you got for me, baby? NVIDIA. Crowd to 400, LUXA, SPY all day, closing Mara, NVIDIA, SPY puts, SOXL long, selling Coupang, JD, EVgo, Jake from State Farm, baby, Labu, Amazon calls, CL, SPY calls, Palantir long term, Palantir calls, AMD, JD, Gold short Shiba, full port, Palantir, AMD, 450,000, QQQ calls, Meta calls, GCT, SPY put, EL calls, EL puts, THO puts, Boeing 215, Apple shares, you better say AMD, K put, puts on PETA, AMD, Beto, Palantir calls, XPEL, SPY both ways in time, Tesla, IonQ, Amazon, AMD, DWalk, Avago, selling Mara calls, full port AMD, Costco, Pfizer, Apple, Google, UCAR, AMD calls, Google puts, Putlocker, cutting my losses, buying 100 GROY, Hello Shiba, Snap, Google puts, AMD, Beto, SPX long, JWN Day, buying Starbucks, Trump, MSFT, ChatGPT, buy more Apple, CRM, Google, IWM, long-term Pfizer, TSM, post Powell, Google puts, SPY calls, long calls, and the final plays of the day. AMD, SPY 0-day 515s, root puts, TLT calls, Google calls, and top ticking SPY puts. Wow. Not bad. Honestly, a little all over the place. Again, yesterday we had a decently sized down day. Now we're up. I'm seeing calls. I'm seeing puts. I'm seeing earnings plays. Oh, man. We got a good one in front of us. And bonds are green now. So I already told you guys my plays I'm going to be watching. I will be looking for a double dip there on JD. And then there's a couple of other movers pre-market. So, Chad, we got the plays. We've made good time. You have 30 seconds for any questions. We also got a little bit of time here to like the video. Remember, we need that 1,000 likes, baby. We need that 1,000 likes, baby. Hit that like. We're almost there, too. 15 seconds. Any questions? Any questions? Any questions? Why? Well, I got out of my JD play. So that's the beauty of it. I used the JD to get out of a play that I was down on for like 5 months. So that was a good one there. But we'll talk about it here. So we already cleared the JD. We'll find out. But ladies and gentlemen, there's something more important than all of it. More important than the plays, the info, the Powell, the jobs. And here at the Colt, every single morning, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has sacrificed more than most of us ever have and ever will. And I am talking about the veterans of the United States of America. So on behalf of the Colt, the people here, the people not here, want to give a huge special shout out, all the active servicemen, past servicemen, anybody who has served this country, even their family. For real, Thank you for making the ultimate sacrifice. Whether or not people have appreciated it, whether or not you agreed with everything you had to do, I hope you know we love you, and thank you for your service, and thank you for making it where we have this freedom we do today. So veterans, God bless all of you, and I encourage every single one of you to show that love and appreciation to those vets who deserve it. So God bless you, and thank you, thank you, thank you, and big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the garbage men, the coaches, anybody giving back, making their community run. That's where it all happens, baby, so keep it up. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Jets! Oh, it's game time, baby. Horna. Let's go. Oh, Chadadonia. Chadadonia. My goodness. The Jets have been sent. We're ready to go. Powell and Data, 30 minutes after the bell. JD keeps climbing. You got a lot to do. SMCI got to upgrade. Apple's not dying. The bonds are in the green. Bitcoin is still going. Oh, my goodness. We have a lot to talk about. So, Chad, you got about a minute and a half until the bell. You are just shy about 50 likes on the likes. We're almost there, though. So run it up. You got a minute. But after a minute, the fee does go up, unfortunately. It's our policy, the check-ins, the savings. Anyway, so like the video. If you have any questions, you got a little bit of time. We got about 1 minute here until the bell. So like that video, drop any questions, and we'll go from there. And again, JD, I'm out of. I closed JD pre-market. I walked away. I made $6,000 from yesterday, and then 2,005 or 2.2 net. So remember, I was down on that play yesterday. I showed you I was down almost $4,000. So I was able to walk away with a profit. So that's why I was saying, like, JD, I only have BABA for the long term, and then I'm still holding those Baidu swings. But the general idea is JD, watch around 25. JD could squeeze here because of a lot of people shorting it. But I want to see, but I didn't want to get too greedy. Wanted to take my profit and call it a day. Oh, we hit the likes, baby. Let's go. So let's go, man. Thank you guys for liking the video. I'm going to be looking for a couple of plays here right after the open, and then we'll go from there, and then we'll see where it all takes us. And good luck. Yeah, you got 10 seconds, baby. So post any plays, questions, news, and good luck. Good luck, my brethren. Good luck. Good luck, good luck, good luck. 3, 2, 1. Round 1. Fight. All right. Look at Pfizer. I'll look at it in a second. I got to go shopping. Market on close 415. Market on opening imbalance. Oh my gosh. Hey, we getting real data dependent out here. All right, some of the JD options, they've already moved a decent amount. Let me check Pfizer. Oh wow, they're up 3.6. They're killing it. And then even MO is up 2.6. I love it. AMD again, SMCI and the other ones got a upgrade. Again, I like some of the buy. The JDs are up 100%. All right, we'll see if it comes down. I'm waiting a little bit on there. Big Pfizer buys. Oh, yeah, THO. That one should hit. We were a little further, though. Remember, I went with the cheap contract. That's the only problem. THO, yeah, it's not open. I'm looking at one play for now. CCJ came up a little bit. AMD, again, chipmakers still running. CPB, too. That was one from yesterday. NVIDIA's in the green. SMCI is up there. Where's Estee Lauder? Estee Lauder's break even. And then check Zscaler and any of those. Zscaler's already coming down. Again, crowd had a couple of the plays there. Oh, I don't think they're going to fill that. All right. All right, I made one play. This is what I'm starting off with this. I don't know if I like it as much, though. We'll see. GC, the THO open? Or is that one still closed? Yeah, THO, I don't see anything on the chain yet. Or at least my options didn't go up. I don't think the THO option chain isn't open yet. So that thing is still closed, even though the stock's down 18. That is the unfortunate. Crowd starting to move up. You might get a follow-up play on there. But yeah, the whole option trade on THO is not moving at all. So be mindful. But not a recommendation. You will lose money. I went with a JD call. So I did a April 19th $30 call on JD. I grabbed one for 35 cents. So I want the double dip. I just don't want the same exposure I had. But those contracts, they're up like 80% on the day. That's the only problem. GLD, Apple, Foot Locker just open. So one JD call to start out. Again, we'll see if they get anything semblance of a squeeze. MO. Bro, value plays got a big bid today, bro. Both Pfizer and MO went up 3% today. But, again, MO is literally at 41.32 now. That's a huge pop, actually, out of nowhere. Spot gold hits record high, $20.43 an ounce. Oh, my goodness. Josh Med special dividend, $8. Sounds good. Why not JD for the long term? I only like Baba for the long term. That's like the only China play that I have in there. I'm still swinging Baidu. We've talked about that for a little bit. I had JD and Baidu. I made these plays at the same time. So I held JD from August, and I was killed on it. So then I made a big average down yesterday, and then it allowed me to get out. But those were never long-term plays. Alibaba, though, that's the only one I have there. THO is open. Are you sure about that? Let's see. I don't see THO open yet. Oh, there it is. Yeah, THO's open. The ones with more time don't show up. But where is it? So the contracts went up 200%, but we had the 90s. I thought we had the 105s. Boo. Yeah, the THOs, they only went up like 300%. Even the ones that are in the money. So that one's kind of clapped. We'll see where that takes us. Again, SPY going lower. Watch where JD goes. Dell on the high. Don't forget about that one. Remember, they were a big post-earnings runner the other day. You sure you only paid 19 on the JD? No. I spent 30. Did I say 19? Where is it? 35. You said April 19th. Yeah, it says 35. Yeah, April 19th. All right, THO, those are starting to go up. Target's running now, 175. That could have been a post-earnings. Powell's statements were uneventful. The pre-written statement, yeah. So, again, this is what we were saying. We're not really expecting much out of Powell today. If anything, during the Congress thing, it's going to be when they ask him questions. That's it. It's so just like any other Q&A. It's the pre-written. We already know what he's going to bring up. But the real question is, what is he, how does he respond to, getting grilled? And does he bring up something that's kind of new? AMD. Yeah, those THOs kind of moving a little bit. But THO literally, option chain opened up. THO just ripped. That's like the FedEx, if you remember that one. T-Mobile on the high. Remember yesterday? We brought that one up a couple of times. They kept running. And then those Celsiuses are still up too. Keep in mind, they're hugging 90 still. I still like Ross, but they're kind of not moving as much. CrowdStrike, did they start rocketing up? They're kind of holding. Kind of looks like JD. Again, JD went up a little bit, but otherwise still holding. And Baidu's right at 100. Costco, 52-week high. Again, they have earnings tomorrow. Bristol Meyer on the high. SPY is near the low of the day, but, we're still up a lot. Remember, NASDAQ was down like 2 to 1.5 yesterday. NASDAQ's up 0.7 right now. Russell 0.8. SPY 0.5. Dow 0.4. We're like right at 5,100, right above it again. We were 50 points below that yesterday. My goodness. T-Mobile on the high. Philip Morris is going up. Again, Bristol Myers up 2.5. Is there any news on that? Estee Lauder. Oh, those guys are. Estee Lauder puts are expensive. Yeah, Target 175 is insane. Because again, yesterday, this pretty much you got post earnings. You just didn't get to any intraday activity on it. MO, bro, I'm so happy with MO right now. I don't think they even had any catalyst. Same reason when they dropped, but literally MO's up 4% now almost, 3.8. We just need that to actually hold. Banks kind of selling. Remember, they were holding up the last couple of days. There's JD. NVO on the high. Amazon is still green. Google's barely green. Remember, they had a good late day run yesterday. AMD 52-week high, 213. The JOLTS hasn't came out yet. The ADP private payrolls, that's the one that came out. I thought it was hot, but some people were saying it was in line. So depending on what estimate you looked at, but I do think it was hot. I think the wages wasn't good. Gold is going to make me cry, bro. I should have been in that move. I hit every other gold move except that one. But yeah, I can't get into gold at 21. All I could do is just hit my gold coins together. Which is fun, which I have a lot of fun doing. I'm not mad about that. MTN, Vail up 6. Did they have earnings? Yeah, bro. Pfizer's up 3.5 too. Today was a very good day for value. So far, at least. Considering yesterday, a lot of the value still held up, even though the market was down. Crypto rises. Mara's up. Where's Coinbase? Holo. That was running up earlier in the morning. VRNT. Tesla's still down 1. SPY, a little bounce off the bottom, haven't moved. Again, we got data in 20 minutes. Dollar's down 1/4. Ethereum up 7. My goodness. Pfizer. Either way, any of the plays. Because I wanted either Pfizer or MO. We went with MO, but both of those had a nice literal just drop and pop over the last 48 hours. Meta 502. Yo, why is Meta breaking out? Myrna's on the high now as well. Myrna getting a pop. 2% into the high. AMD, NVIDIA still running. Abivi's getting involved now. Oh, Airbnb's even at 162. Jeez. But yeah, watch Meta. Meta is waking up out of nowhere. 3 mariners missing from bulk carrier off Yemen. 4s have sustained serious burns. And then we're still up on the oil play from yesterday. That one came up. Jobs report is going to be in 18 minutes. Job openings. And then I have one caveat for the jobs report, actually, or the job openings. It's kind of a fun fact. And since you guys already liked the video, I'm not going to bore you with asking you to like the video. You know what I'm saying? I love you. God bless you. So here's the fun fact. This JOLTS jobs report, are you ready for it? Although it's like important, not important, and there's a lot that could come from it, here's the problem. This JOLTS jobs openings, this is for January. So that's kind of a problem. Oh, no. Was I looking? Yeah, right here. So do you see why that's a problem? Because remember, the last non-farms, any of these last surprisers that have like really messed with us, and like it's a huge data set and then the market like does its own thing, unfortunately, it's all been January. So it's like it's going through the beginning of the year, updates, revisions, all of that. So there might be some changes that could skew this number. But remember, the last non-farms, this is essentially kind of equating to that for January. So that is the only caveat dealing with. Is good news. Well, I don't know. I have no idea if good news is. Theoretically, I believe that I think a low, like a bad print, like where we see that job openings like actually went down, I think the market would love it. But if the number goes too high, I think it would be bad. But then again, last non-farm payrolls, we had a 4 standard deviation beat, and the way that it moved was wicked. I brought this up on the watch list yesterday because, like, if you were here at the last jobs on like last month on non-farms, it was kind of funny because the data came out, we dumped, and everyone's like, oh, wow, we're dumping because the data. And then literally 30 minutes later, we're hitting a new high, and everyone's like, well, why? Is that because the non-farms? And we're like, I guess. And then 2 hours later, we're hitting another low. So you're going to go back and forth with it. And then again, that day ended up red. And then 3 days later, you hit another all-time high, 50 points, 100 points higher. So it's going to be very hard to read, but I don't know if good news is bad news, bad is good. I have an assumption that, data that supports this job market or a weakening job market will be better for the equities, but I can't confirm that until I see it. So thankfully, we only have to wait 15 minutes. And then again, Friday, too, is going to be the 1-2 punch. TSM is running. Again, Meta's at the high. Canada Bank of Interest Rate decision, 5% versus estimate of 5. Bonds running. Chips. ANET, a couple of software names going up. Even Spotify now, too. Oh, is that the weed stocks? They're down here again. Real on the high. Macklem, senior deputy to hold conference 10:30. Oh, you guys don't see the wire? My bad. Macklem, some signs wage pressure may be easing. Labor market shifting towards better balance. Economic growth remains weak below potential. He just sounds exactly like Powell. Bro, TSM 52-week high. Weed stocks starting to wake up a little bit, but again, TSM running. IoT on the high. JD starting to wake up now. So watch it again. Above 25 could get interesting on that one. Airbnb up. Altria. Pfizer. UPS. Pfizer coming down a little. TMO. My reasoning behind MO, I just like it. I've held the company for a while. And it's very rare that like every time how many times, let me just ask you this. How many times have you seen me pull up a MO chart on the yearly and then cry about not getting it below 40? I feel like I've done that a lot in my life. So every time it goes below 40, I never pick it up, and I cry about it a couple months later. So I just figured it dropped 3.5% that day on nothing. Dividend was right around the corner. I got my deposit. I was like, we just added Pfizer, so I wanted to go for the yield there and decided to go with it. But, I mean, it has been a stock we've held for several years. DKS up again. GitLab. I don't know if did the GitLab contracts wake up from yesterday? I don't think they did. They clapped us. Are those JDs moving? We might get a little bit. Oh, did they balance this out? Let me check the fidelity. And then TSM coming down again. Chip moves there. Unity on the low, and then Google. Palantir 52-week high. JD hit 25. Good. I wish I still had the shares, but I just didn't want to get greedy. Because that was nice. We got it. But the JDs are up 8% on the contract. So, again, if it really runs, we'll get lucky on the option. But other than that, though, I'm glad. Again, I'll do that play. I was down on JD since August. So to walk away with that play with like a green, I'm very happy about that. But yeah, JD's starting to run a little. Again, JD is like heavily shorted. You guys got to realize this was a name people thought was going to die in China. So that's what's helping it here. But now you're just getting back to where it was at like a month ago. So there's still a pretty wicked range on that stock. And CCJ came up a little bit. I'm still down on that from the beginning of the week. Oh, nope, now it's dropping. Qualcomm, Skyworks on the high. And NVIDIA's still going up. My goodness, bro. NVIDIA, SMCI, Macy's on the high. And gold. Bro, are you guys not weirded out? I'm getting very, very weirded out by it. That's why I'm saying maybe oil will get the market freaking out or something or whatever. We're about to find something out. But, like, dude, gold? Nah, bro. Gold is weird. Gold up, Bitcoin up. Again, there was a news article on it this morning. But, like, I'm not the only one who's, like, getting freaked out by it. But it is, bro, it's hitting new all-time highs. Gold has never been this expensive. And now compared to any of the other, like, cyclicals or rate-sensitive plays, gold is running in its own little way. Is that worrying? It is, but it's like we just don't know what to worry about, though. Right? That's what I'm saying is, like, it's definitely saying something, but I don't know what it's saying. I wish I had the acumen to tell you, but I really don't think anybody could. That's why, because, again, it's London. It's a London exchange. Like, gold is a very controlled price. That's why, like, on top, that's the cherry on top. But to see it doing all of this with a strong dollar and then, again, equities and all, even real rates. So, like, real rates are positive right now. Technically speaking, our rates are higher than inflation. If the inflation rate is at 3 and our rate is at 5.25, our real rate right now is at 2.25. So you're telling me in an environment with positive real rates, gold is appreciating 5-10%? What the fuck? That makes no sense. So that is the problem there, because it's saying that people are worried about both debt, the government, and God knows whatever else it could be, but it's still like it kind of highlights a sense of fear more or less. But then again, there's not really fear. That's what I'm sure we all can observe. Airbnb, Allah Habibi. Okay, yeah, I adjusted. Bonds keep going. SPY near the low. JD selling off a little bit from 25. Carts on the high. Nordstrom still on the low. Estee Lauder coming down. I was looking at some of those puts. eBay up though. I still have that contract. Where's it at? It's up 140. We have what, 52 calls? 52 calls and we got another week. Oh, they kind of been running. I'm down to hold that for a little bit, but that one, if eBay gets any sort of red candle, you're screwed on that. And then is MPW climbing? Again, Estee Lauder at the low. Bonds are still catching a bid. Yeah, MPW up 3.5. They're running up now. ARM on the high now. ARM's at 138. ARM's actually trading a lot. Again, we sold it a lot higher the other day. Amazon's on the low. Yeah, MPW breaking out right now. Foot Locker post-earnings sell-off. Damn, they're down 25. So they're still kind of getting clobbered. Baba's up. Baidu. Could gold be election hedge? Maybe they're uneasy about election and positioning in a safety. It could be, but then that just means people are worried about the election. But I don't think people have that general fear. But then again, it's like that part of that thing we read this morning. It was even just talking about how there's very competing arguments. Like, look at Bitcoin and gold. Both of them are near all-time highs. Both of them you could use to, like, if you buy them if you're worrying. But then also, like, gold is more fear-based. Bitcoin is more speculative. So why are, like, you mean, so people are both scared and speculative at the same time? That's a very weird combo. I don't know where GLD could go to. Like I'm saying, anytime, both market or not, I thought gold was going to stay more subdued because of the dollar and other factors. But now that it's going up, I mean, dude, I think gold, just like when it makes its other crazy moves, there's no telling where this thing could go. Microsoft red. ARM is still running. Again, they're still below 140. Again, we sold at like 140 something. We bought it like 135 a couple weeks ago or a week ago. CCJ trying to climb back up. UAL on the high. UAL's like kind of running. Even Boeing trying to get up. SPR, they came down a little bit. Yeah, value plays doing good. Pfizer's coming down though, but still up 2.8. MO still holding 3.6. That helped out a lot. Is up because of the threat of war with Russia. Well, here's the deal. I don't know. So all of your answers are as good as mine. And like that's all I'm saying is that wow, you should pay attention because it's fascinating. It truly is. It'll definitely get the gears turning and make you think about what's your answer is as good as mine. It could be a lot of things, but it also could be nothing, and it could just be momentum and God knows what else. But it is just something I pay attention to, but unfortunately, it doesn't provide us like a signal to be like, oh wow, this is exactly what's going on right now. But it's like it's one of those things where it's like one of these is not like the other. Like it should stand out to you, and it should be something where that doesn't just happen. There's been many instances where gold goes up, but very few of them are like where we're at right now. Again, it was kind of like this, leading into 08. And that's what we talked about around the rate cut when they had their own like 06, 07 rate cuts. But for the most part, in real time with how everyone's feeling, it's quite phenomenal. Powell is going to be in 4 minutes. Yeah, and the jolts too. So that's going to be the crazy part. We already have the pre-written statement. So realistically, the jolts is going to move us more. So I'd get ready when it does come out. 3 minutes, wait for the jolts. We'll have Powell, but Powell isn't going to give you any new info for like 10 minutes. Does that make sense? The market already has his pre-written statements. So he has to get on there. They're all going to introduce themselves, spend 3 to 5 minutes talking about whatever their number one priority is. And then Powell's going to say his pre-written statement. And then they're going to go back, do more intros, and then ask questions. And then we're going to want to like really listen intently. Other than that, though, the jobs report here in about 2 minutes, that's going to be the key. So again, the number we're expecting is 8.9. A higher number would be bad. A lower number would be good. But then again, take that with a grain of salt considering what we witnessed last time. Abivide coming up now. They're in the green. They were red earlier. I hope Kennedy is there. I hope. This is Powell's semi-annual appearance before Congress. So twice a year, Congress, they sit Powell down and then they grill him. Oh, he's going to be there. He'll show up. I don't know climate activists. This one's in government. It's not like out in public. Estee Lauder going down again. Yeah, weird news today. MPW still up. Baba selling off. JD gave up some too. And Baidu. So all the China names are starting to come down. You got 30 seconds. Get ready, Chad. 30 seconds. 8.9 is the number. Lower is good. Higher is bad. 15 seconds. Target. There's a lot of things going crazy right now. And then watch gold. I really want to trade gold, but I don't think I got it like that. Alrighty. Where is it? 8.86. See, so again, it came in lower. You would think that'd be good. Bro, that was the lowest one since October. Yeah, 8.86 versus 8.9. I guess it was only a little bit lower by like what? 8.9. It came in at 8.8, 8.86. So, honestly, not a big deal. No, I think it's too small. 8.86 versus 8.9 is literally this. It's 50,000 job difference. I think non-event, low-key. And then quits reported at 3.38 versus 3.39. That's the same. So slightly more job quits, which is good. We might get a little, but again, I think generally neutral. Slight positive tilt, but it shouldn't be anything. I see the forecast at 8.9. And then it came in at 8.86. That's why I'm like, it's like 500,000 difference. It's really not that much. So I think it's more neutral than anything. And then TLT bonds are still too high. I think no playoff of that. Is that Baba on the low again? Couple of names coming down here. We didn't move too much. Again, let's get Powell now. Come on, where are they? They're supposed to be on here. Just watch your speakers. I have the audio for Powell. It's going to cut in at any moment. Yeah, so we have more jobs. That's it. But I think so far, kind of a dud to the start of jobs data. Again, like we're saying, I think that data is neutral, slightly positive. Bonds are already substantially higher than the day before. That's the only weird part. That's why I'm like, I don't even know if you could really make a play on this. Does the 2-year even move off that? No. And then SPY going a little lower. Shop on the low. Google, Mara dumping. Coin. IBM on the high. That was running and Win. Both of those are running. Yeah, bro. MPW is just going up 5. I think they're about to fill the gap, no? So they're getting back to some of these previous levels, but if they get back to 498, I mean, that's going to be a very good recovery for them. Good morning. Blessings on blessing. What up, Sauce? How you living, man? Good morning. We are waiting for Powell right now. So Powell should be on any moment. Yeah, MPW. Isn't Snap getting killed? Remember, Snap was up, though, at 1160 off the TikTok shit yesterday. So keep that in mind. And then Meta, they were running up at highs all day earlier. They're still in the green. They came down. Cart's almost at 34. That one's ripping. Yeah, Powell is speaking tomorrow as well, too. He's -3. Estimate was -1. Trade was 1.7 minus. Estimate was positive. So bad trade data, too, or wholesale. All seems good, though, but I do think the Jolts was a little bit there. I think Jolts came in line. I guess it depends on who's, what's it called, consensus you're using. Oh, is this happening right now? Well, here, we're waiting for Powell. I'm going to go to the bathroom. Follow me on Instagram at The Trading Fraternity. You can listen to Nikki Haley and her 2024 bid. I thought they'd be talking about jobs.
Gratitude for the outpouring of support we've
BRB.
received from
Follow
all
me on Instagram
across
at The
our
Trading
great
Fraternity.
country.
Good morning.
But the time has now come to suspend my campaign. I said I wanted Americans to have their voices heard. I have done that. I have no regrets. And although I will no longer be a candidate, I will not stop using my voice for the things I believe in. Our national debt will eventually crush our economy. A smaller federal government is not only necessary for our freedom, it is necessary for our survival. The road to socialism is the road to ruin for America. Our Congress is dysfunctional and only getting worse. It is filled with followers, not leaders. Term limits for Washington politicians are needed now more than ever. Our world is on fire because of America's retreat. Standing by our allies in Ukraine, Israel, and Taiwan is a moral imperative. But it's also more than that. If we retreat further, there will be more war, not less.
The hearing is titled
As
The Federal
important,
Reserve's
while we stand
Semi-Annual
strong for the
Monetary
cause of
Policy
freedom,
Report.
we must
Inventive title
bind
we
together
use
as Americans.
Semi-annually here on the
We
Committee.
must turn
Without
away from the
objection, all members
darkness
will
of
have 5
hatred
legislative
and
days
division.
within which to submit extraneous
I will
materials.
continue
Share
to
for
promote
inclusion in the
all
record.
those values,
I will note at the
as is
outset
the right
that this
of
hearing has a
every
hard stop at
American.
1 p.m., which will be strictly
I sought the
observed.
honor of being your president. But in
Very
our
pleased.
great
I see
country,
Chairman Powell
being
smile.
a private citizen
It's
is
3 hours,
privilege
so
enough in itself.
I'll now recognize myself
And
for
that's
4
a
minutes to give
privilege
an
I
opening
very
statement,
much
and
look
welcome back,
forward
Chair
to
Powell.
enjoying.
Since you last appeared before
In
the
all
committee in
likelihood,
June
Donald
of
Trump will be the
2023,
My bad.
the conversation in Washington surrounding inflation has shifted significantly. To
Bow
be clear,
tie.
it's not because the inflationary fire has been extinguished. From the most recent data available, food costs are up 21% since President Biden took office. Energy costs are up nearly 32%. Shelter costs are up more than 19%. And you'll pay 37% more for a dozen eggs in America today. As you stated in January, people are still paying more for the basics of life, and the prices they're paying are still high. Families aren't happy about it, as you know, and as our colleagues know. But according to the Biden administration, many of my Democrat colleagues, they should be thrilled. In an attempt to score political points, many in Washington have decided the best strategy is to tell people what they're feeling isn't actually accurate. They claim Bidenomics has brought down costs, and their partisan so-called American Rescue Plan put our economy back on the right track. Of course, we know the opposite is true since inflation skyrocketed soon after the American Rescue Plan was enacted, which was predicted by several former Obama administration economic officials. Instead of working to solve the underlying issues causing high prices, the administration has played the blame game, citing corporate greed and so-called shrinkflation. Some Democrats have even trained fire on you, Chair Powell, blaming interest rate hikes, which were necessitated by Democrat spending, for the high cost and brazenly calling you to make cuts prematurely. It's highly inappropriate for lawmakers to attempt to influence monetary policy. Chairman Powell, I have faith that you will not allow politics to cloud your judgment in the fight to tackle inflation. As I have always said, you are a steady hand, and I believe you are committed to the Federal Reserve's independence, as am I. Just as you have rejected the outside pressures of politically motivated agendas, I hope you will be just as attuned to the threats of politicization when the calling is coming from inside the House. Vice Chairman Michael Barr's so-called holistic review of capital requirements and the fatally flawed Basel III endgame proposal represent a concerning trend of partisan proposals taking priority over supervision. This has real-world impacts, as we saw 1 year ago this month when the supervision and regulation arm of the Fed was late catching up to the effects of the acceleration of interest rates on the banking system. Americans were understandably shaken by last year's banking turbulence. As we continue to monitor potential instability, including bank exposure to commercial real estate, it's critical that the Fed keep its eye on the ball. This does not include enacting new, far-reaching, and ultimately harmful regulatory policy, though. As you know, members on both sides of the aisle, on this committee and in Congress, have made clear that the Basel III endgame proposal would be catastrophic for families, communities, and small businesses. Regulators should withdraw it and start over. I think that's the proper course with something as deeply flawed as the current proposal. Additionally, given that other significant proposals would have to fit holistically together, regulators cannot simply proceed with them as separate modules or using a cut and paste approach. Most importantly, as the Basel III endgame proposal is discarded or altered, I strongly urge you and other regulators not to finalize the long-term debt proposal. Instead, Chairman Powell, I would encourage you to stick to the task at hand and follow the data. The stakes are way too high to put politics over sound policy. With that, I yield back, and I'll now recognize the ranking member of the full committee.
Thank you very much, Mr. Chairman. Good morning, everyone. Welcome back, Chair Powell. While I am pleased by the progress the Fed and the Biden administration have made to tackle inflation, we're not out of the woods yet. In fact, even though my Republican colleagues refuse to acknowledge this fact, housing is still the #1 driver of inflation. Based on the latest data, housing costs continue.
This is an early investor of FTX.
70% of overall price increases, outpacing modest wage gains. This means that until we address the underlying housing supply shortage, Americans will continue to pay an increasing share of their income on housing. The affordability crisis will worsen, and inflation will remain too high. With that said, it's hard to understand why Republicans feign concern about the economy
Dad, I have a
when they're
disgusting
unwilling to
idea.
address the key driver of inflation, housing.
I'm gonna wait.
In fact,
But I want a
Republicans have
short
only
goal.
put forward legislation that makes things worse for millions of Americans.
I don't want to do it
including
though. I'm scared,
moving
but I'm not.
legislation
But I want to.
to
But
slash
I am. I don't
funding
know.
for federal housing
I'm
programs,
just staring at it, bro.
including in rural America,
I'm
where
just
homelessness
sitting
is
here, just
rising.
staring at me.
This abysmal record on housing is par for the course for Republicans. Since they have been in the majority, they have convened only 6 hearings on housing, on top of launching baseless impeachment efforts, censoring members, and pushing our government to the brink of multiple government shutdowns. It's clear that Republicans are too focused on drama and chaos to deliver anything.
And then
for the
bond yield's
American
still ticking
people.
up
That's
here.
not how Democrats' role. When I was chair of the committee during the 116th and 117th Congress, not only did we
back
hold
above
55
25.
hearings on housing, but I and my fellow Democrats enacted 12 critical housing bills into law
And then another
in
ship
the
hit by
last Congress
Houthis.
alone that helped stymie a tsunami of evictions, foreclosures, and homelessness, keeping millions of people stably housed during and after the pandemic. Unlike Republicans, we don't just talk about the issue. Democrats make law. As House Republicans continue to disappoint, committee Democrats are offering evidence-based solutions to keep a fair and affordable housing
Meta on
agenda
the low now, too.
the
And then
top
bonds near the
priority
high.
in Congress. That's why I and my Democratic colleagues reintroduced 3 groundbreaking bills to address the housing crisis and bring down inflation once and for all. This includes Housing Crisis Response Act, the Ending Homelessness Act, and the Down Payment Toward Equity Act. Together, these bills would create nearly 1.4 million affordable, accessible, and resilient homes, reduce housing costs in homelessness, and revive the American dream of home ownership for all. So, when my Republican colleagues are ready to get serious about our nation's economy and inflation, Democrats are ready to work with you to pass the bills into law. In fact, tomorrow at noon,
All right, I did it. I didn't go big,
Democrats and more than 30
I did short
housing
2
advocates
MGCs
will join together at a press conference to share just how important
214,920.
ending the affordable housing crisis
I'm doing
is
2 of them,
to the
2
state
micros.
of our union. And so I invite all of my Republican colleagues who say they care about this issue to come on and join us. I look forward to discussing this critical issue with Chair Powell today. And, Mr. Chairman, I yield back my time.
The chair recognizes Mr. Barr, Chairman of the Subcommittee on Financial Institutions and Monetary Policy, for 1 minute.
Welcome, Chairman Powell. Runaway inflation and increased interest rates still have Americans reeling. And while the rate of price increases have come down thanks to monetary tightening, the overall level of prices remain high. The toothpaste is out of the tube, and Americans, the average American family, still is paying about $15,000 more for the same goods and services that they were purchasing just 3 years ago before the Biden administration. So Americans have suffered years of eroding purchasing power in their paychecks. And while I'm pleased the Fed is resolved in getting inflation back under control, I'm not pleased by the numerous recent unjustified, politicized, and underanalyzed regulatory proposals. The Fed needs to withdraw and repropose the irredeemably flawed Basel III Endgame proposal, especially given that 97% of public comments across the ideological spectrum expressed disapproval of the proposal. Chair Powell, I urge you to listen to the American people, withdraw the Basel III Endgame proposal, and tell us today what the Fed's plans are moving forward. I yield.
The chair now recognizes the ranking member of the Subcommittee on Financial Institutions and Monetary Policy, Mr. Foster, for 1 minute.
Thank you, Chair Powell, for being here today. And I had a chance to actually read the monetary policy report from cover to cover thanks to an exceptionally long airport delay, again, going back home last weekend. And the feeling I got again and again is that things are fairly well recovered from COVID and getting back to normal, that we're in the range where ordinary monetary policy and fiscal policy will allow us to satisfy your dual mandate. Today, unemployment remains near historic lows. Core PCE inflation is down to 2.8% year over year compared to a peak of 5.6% in 2022, and the major stock indices are hovering around record highs. GDP growth continues to beat expectations, and the U.S. economy has added more than 14 million jobs since President Biden took office. The GDP itself is pretty much back on the trajectory that it would have been pre-COVID. U.S. manufacturers alone have added nearly 800,000 jobs, employing more workers now than any point since 2008. And so my lesson from that is that the fiscal response that we engaged in was appropriately tailored, and the soft landing is within sight. So thank you. I yield back.
Gentleman yields back. Today we welcome the testimony of Jerome Powell, Chair of the Federal Reserve's Board of Governors. As you know, you'll be recognized for 5 minutes for a summary of an oral presentation of your testimony. Without objection, your written testimony will be made a part of the record. Chair Powell, we're now recognized for 5 minutes.
Chairman McHenry, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward these objectives over the past year. While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains relatively tight, but supply and demand conditions have continued to come into better balance. Since the middle of last year, payroll job gains have averaged 239,000 jobs per month, and the unemployment rate has remained near historical lows at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers, particularly among individuals aged 25 to 54, and a continued strong pace of immigration. Job vacancies have declined, and nominal wage growth has been easing. Although the jobs-to-workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped to narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption expenditures prices rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Long-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We've also continued to shrink our balance sheet at a brisk pace and in a predictable manner. A restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% objective for inflation is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-run inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, We understand that our actions affect communities, families, and businesses across the country. Everything we do
This is pretty
in
much his
service to
last
our public
FOMC
mission.
statement.
We at the
So get
Federal
ready
Reserve
to
will do
questions. This
everything
is where
can
we
to
should
achieve
get
our maximum employment
some
and
new
price
info.
stability goals. Thank you.
Thank you, Chairman Powell. And I should have noted this at the outset, but this is your 25th testimony before the U.S. Congress as Chair of the Federal Reserve, and we thank you for your service and your commitment to congressional oversight. Very much appreciated. I'll now recognize myself for 5 minutes for the purposes of questions. Let's begin with what's top of mind. We have two issues that are top of mind with the Fed: regulatory policy, with the Barr proposal, the Michael Barr proposal on capital, and interest rates. We're in a political year, and the lens of a political year falls heavily on all government, all parts of government. There's a lot of debate about the past 3 years of high inflation and impact on American families. And now that inflation is receding, there's been a great deal of speculation about when the Fed would cut rates. Some say that it's going to be a lot of rate cutting this year. Some say none. What say you?
I say that really it will depend on the path of the economy. Our focus is on maximum employment and price stability, and the incoming data as they affect the outlook, and those are the things we'll be looking at. I can go further if you'd like.
So at what point will the Fed be forced to cut rates? What does the data, what kind of data would you point to, and do you have any updates there?
What we've said is that the committee would like to see more data that confirm and make us more confident that inflation is moving sustainably down to 2%. We have some confidence of that. Inflation, headline inflation has moved down more than 3 full percentage points now to 2.4%, as I mentioned in my remarks. We want to see a little bit more data so that we can become confident and so that we can take that step of beginning to reduce policy rates. It's a very important step. We think because of the strength in the economy and the strength in the labor market and the progress we've made, we can approach that step carefully and thoughtfully and with greater confidence. And when we reach that confidence, the expectation is we will do so sometime this year. We can then begin dialing back the restriction on our policy.
Well, let's pivot to regulatory policy. Chair Powell, as you know, there have been serious concerns expressed on both sides of the aisle and across America and across industries about the Basel III endgame proposal that Vice Chair Michael Barr has proposed and that the Fed is taking up. The concern is on both process, meaning how the proposed rule was developed, analyzed, and released for comment, the general concern of a lack of economic justification for these actions, but also on the substance. The proposal goes much further than the Basel III committee recommended on capital requirements, putting us at a great disadvantage internationally, potentially. So my first question is on substance. Is the Fed listening to these comments that have been nearly unanimous in opposition to this rule? Is the Fed listening to these comments on the impact the rule will have on everyday Americans? And what is the status on rulemaking, and what is the plan moving forward?
So you're right. We've received voluminous and very substantive comments, as well as the quantitative impact study that we put out. We got those responses in mid-January, and we're carefully analyzing them. We had asked for very specific, detailed, data-based comments, and I'm happy to say that we did get that. So we're just now reaching the stage where we can begin to make decisions about how to proceed. We really haven't made any decisions yet, but I think I can say a few things. First, we do hear the concerns, and I do expect that there will be broad and material changes to the proposal. I'll add that I'm confident that the final product will be one that does have broad support both at the Fed and in the broader world. As far as process is concerned, we're really not at the stage of making decisions about that. That's down the road at least a bit. I will say the question we get is reproposal, and I will say that we haven't made that decision, but if when we get to that point that turns out to be the appropriate thing, we won't hesitate to do it.
You won't rule that out? You would not rule that out at this stage of the game? reproposal?
Not at all. No, I think it's a very plausible option. It will depend on how things lie at the time when we reach that point.
Okay. And there's a lot of concern about the interplay between different parts of the rule. And if you change one, what does the economic analysis look like for the new proposal? So it is good to hear that you'll be methodical and the Fed will do its traditional role of building consensus around the substantive changes. And that is your intention.
That is right. I said this would be a thoughtful, deliberative process. It's more important that we get this right than that we do it fast. We understand that. This is an important rulemaking, and it's going to have potential implications for the economy and the people we serve. We're going to take our time and do it right.
Thank you, Chairman Powell. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much, Mr. Chairman. Chair Powell, I want to talk to you about housing, but before I get there, let me address the issue of mergers. Last week, I led a letter along with 15 committee Democrats to you as well as DOJ, OCC, and FDIC, expressing my strong concern about the lack of progress you have made in updating your bank merger review procedures. This is critical now that we just learned of another mega merger involving Capital One and Discover, which would create the 6th largest U.S. commercial bank with a major role in the credit card market. For far too long, experts have raised alarm that there is a rubber stamping process of bank mergers where virtually all applications are approved. All the while, unbridled market consolidation poses great risk to consumers and entrepreneurs. What is the status of your updates to the merger review process? And does the Fed plan to convene public hearings on the Capital One and Discover merger?
So I believe we're in regular contact with the Justice Department on what's going on with their review of merger practices. We're looking at that and considering. I think on the potential merger with that you mentioned, we haven't received an application, so there's really not much to say yet. It's early days. When we do get that application, though, we're going to evaluate that merger as always under the factors laid out under the law, and that's our commitment.
So you do believe that your bank merger procedures are ready to
Paramount in talks to sell India TV stake to Reliance.
Merger. I do.
Parapop.
Are you supportive of?
I'm not playing it. I never hit any of those.
Organizing community hearings on this merger?
I haven't talked about that with anybody. I will say this: we've done that in many large mergers, but that's not a conversation we've had yet. We literally don't even have an application for the merger yet.
Thank you. We'll stay
Oil
in touch
numbers
with you
dropping
on that.
now too.
So turning
Oil
to the
inventory
National
is
Affordable
1.3.
Housing
Estimate
and
was
Homelessness
2.7
crisis,
million.
where we've seen steady increases year
rocketing
after
above 80
year
right now.
in home prices and rent costs, which are a symptom of the chronic undersupply of affordable housing. Indeed, more renters and homeowners are now spending more of their income than ever on housing costs. And as you know, housing costs continue to be a primary driver of inflation. Do you think the Fed has sufficiently emphasized the role that housing costs play in keeping us from your 2% inflation goal? Do you think it's reasonable to believe that monetary policy can accomplish this goal without a fiscal policy response? And if you do, how long will it take to get there?
Housing services inflation is one of the three components that we look at that make up the core PCE index, and it has been coming down from its heights of a couple years back. It's part of the story. I think the overall story is that goods price inflation has turned negative. Goods prices are actually coming down a bit. Housing services inflation, you can see from currently entered into leases that as leases turn over, the increases are going to be smaller. So in our forecast and in everyone's forecast, housing services inflation comes down.
It's been reported that the methodology used to assess housing costs as an indicator of inflation is imperfect, namely because it considers costs based on both new and old rent, including for owner-occupied housing on a month-to-month basis. This results in stale data since families' housing costs typically do not change unless they move or their lease is up for renewal. So to address these imperfections in the housing cost indicators, the Bureau of Labor Statistics and Cleveland Fed created an improved methodology based solely on new lease rents, which is referred to as new tenant repeat rent index. Has the Fed incorporated this new indicator into its economic assessments? If not, why not? And so, what changes has it had on the level of housing inflation observed by the Fed?
So we're well aware of that, and we do incorporate it into our thinking. As I was starting to mention, that is the reason, the fact that market rents are moving up at a much slower pace is the reason why forecasts are for housing services inflation to come down, and that absolutely plays a role in our thinking.
Thank you, and I yield back.
Gentlelady yields back. The Vice Chair, Mr. Barr, I'm sorry.
Wrong Vice Chair.
Wrong Vice Chair. The gentleman from Arkansas, the Vice Chair of the full committee, Mr. Hill, is recognized for 5 minutes.
Thank you, Chairman. I want to welcome you, Chairman Powell, to the committee. We're glad to have you back and your expertise. And I want to pick up where Chairman McHenry left off on his conversation about Basel III Endgame. You made a good point saying you're not taking the whole concept of reproposal off the table as you review the analytics, and you all discuss the interactivity of that rule with other rules. So if you were to repropose the Basel III Endgame, would the Federal Reserve delay then the long-term debt proposal that's on the table? In other words, would you agree that the agency should not finalize this long-term debt proposal for bank holding companies until banks have a better understanding of what their capital obligations under Basel III Endgame might be?
So we haven't made the first decision yet, so it's hard, I couldn't say definitively. But yeah, that's a question we'd be asking ourselves is what would be the implication for other rules, including the long-term debt?
Well, and is the Fed considering changes to the requirement for regional banks to issue long-term debt? Right now, it's stated to be issued at 6% of risk-weighted assets, in abundance of caution in case there needs to be a resolution, obviously. We know the logic for it. But as I understand it, it's being required at both the holding company level and down at the bank level, and that seems redundant to me. Are you aware of that, and have you considered changing that in your discussions?
Yeah, so that's another area where the comment period ended a little while back, and so once again, we're in the process of evaluating the comments. There will be a thoughtful, deliberative process around that. We welcome comments on these kinds of things. They're very important implications for the banks that are affected. We want to understand the effects, make sure we understand them correctly so that we can evaluate, what a final rule should look like.
Good. Let me turn to the monetary policy outlook. As the chairman noted, consumer prices are 17% higher for American households since President Biden was inaugurated back in January of 21. And yet, in spite of that 17% increase in cost, real wages have actually fallen 2% over that period. So there's no doubt that inflation is the biggest issue facing American households, and in my view, there's three principal causing. Certainly we had supply disruptions, but we've had unprecedented fiscal policy laxity. You described it in a recent interview as unsustainable, but we also think that the Federal Reserve, in my view, and many people on this committee commented, should have reduced accommodation after the pandemic sooner. One of the things coincident with that, which is what I want to talk to you about, is that the FOMC announced in August of 2020 this flexible average inflation targeting framework right in the middle of the pandemic, which many of us didn't understand why the Fed would take that decision then, but it would give you flexibility on the 2%, saying the Fed could allow inflation to rise above 2% and stay there above that level for some time because the Fed had such challenges in getting the price level to 2%. That was a major shift in the Fed's approach. Do you think, in retrospect of now what we've witnessed over the past 4 years, that was a mistake in hindsight to change that framework, and is it under review?
So we said we would do a review on a 5-year basis, and that means we'll be starting that review toward the end of this year. So we really haven't started. I do think that the question you raised will be one of the questions we look at, but the bigger question really is that change in the approach was really based on the fact that we'd had very low interest rates and very low inflation for a long period of time, and policy was always very close to the effective lower bound, so there wasn't any firepower for central banks, and so it was a way to keep inflation expectations anchored at 2% and not have them slide down. Now we have entered a different period. The pandemic really may have changed that in a sustained way. We don't know that yet, but that's the big question we'll be asking ourselves is the effective lower bound to be thought of in a different way now? And if it were, that would have ramifications for our framework. But we haven't begun the review yet. It'll begin at the end of this year and probably end late the next year.
Thank you. Yield back, Mr. Chairman.
Gentleman yields back. We'll now go to the gentleman from New York, Mr. Meeks, for 5 minutes.
Thank you, Mr. Chairman. Thank you, Chairman Powell, for being here. And I think I want to pick up a little bit right where we are. 2019, 2020, the entire world was under the unprecedented pandemic with COVID rate. Is that correct?
Yes.
At the time. And that changed a lot of things with reference because not just for the United States, but for the entire world. And it affected the economies of countries just about on the planet. That's not also correct?
Yes.
And
asking him when the
supply
pandemic
chains
happened,
were disrupted. In fact, I can remember many Americans and people around the world could not get toilet paper or paper towels and some of the basics. And so the prices, because of the
if I'm not mistaken,
of supply and demand, skyrocketed, causing the inflation.
Correct?
Not only in the United States, but basically all over the world. Is that correct?
Yes.
And so therefore, the Fed had to do certain things because of what we were in at that particular time. We couldn't just go back and act like the pandemic wasn't there. We had to do something to try to make sure that we were able to get through the pandemic. Is that not correct?
Yes.
And now we're at that point where we're about to get through this pandemic. And we can look at the rest of the world, what they did or didn't do at that time, but what we did at that time. And as a result of that, 3 years post the pandemic, when you look around the world, I think that you were correct with what you stated, that by most accounts, our economy is doing well. In fact, I would say our economy is doing better than most of the other countries in the world. Would you say that's correct?
Waking up.
I would.
And
then those Pfizer contracts are
I would
like
say
300%.
then that some of the other countries of the world maybe should have looked at the policies that we put in place thereafter so that they could get out of it, so that they could have a labor market that is strong, where the unemployment rate is near a 50-year low. And as you've stated, inflation is also now coming down faster than any place else on the planet just about. Is that not correct?
I think that's right, yeah.
And I think that you also recognize a mismatch between the strength of the economy, that's what we're talking about, in the field. And I think that Ranking Member Waters touched on one of those big issues of housing, of which is now, we're still trying to get that
Strip
under
Pop,
control.
Remember, they've been in buyout talks.
The Ranking Member has
They're
some
the ones
ideas
who added
of
those
how we
people
can
to
do
the
that,
board.
and that may be something
they're kind of
that you
holding
need to
that
consider
premium,
so that we can further get
so be
down
careful there.
The inflation
and then
rate.
Intel rocketing.
And the other would be the commodity markets, because the cost of food is too high and people. So that's something else that we need to get in control. Is that not correct?
Tell us.
And let me just ask this. Can you say that there's a connection, for example, between conflicts in other areas of the world, like Russia's war against Ukraine and or the turmoil in the Middle East and the economic pressures that the United States feels? Does that not also go into the reason why the cost of commodities
JD contracts
can be
up
still
20.
higher?
I just wish I had the shares still.
Mr.
I would have made another like $2
Chairman?
grand now.
Certainly the war in Ukraine caused commodity prices to move up sharply.
So could you tell you what is the, what would the connection lead you to believe that there is an urgent need for us, I would think, for, and we're running out of time, for us to do everything that is in our power in Congress to support Ukraine so that we can make sure that that and other strategic partners that we can help the commodities market, and that would help lower the cost of some of the commodities, bringing food prices down, if we would just be able to pass certain things that's going to help Ukraine right here in the United States Congress. Is that correct?
Here's where it gets outside of our jurisdiction, so I wouldn't have an opinion on Ukraine funding.
But if we had more grain that was going through, wasn't blocked by Russia, things of that nature, that generally just, says that helps bring the cost down. Cost is higher because of the disruption in the Black Sea that's happened because of this war. So that would help bring the cost down. That is not necessarily the policies just here in the United States, but that's the policy because of what's going on in Russia, and we need to make sure that we do something to prevent that if we really are serious about bringing inflation down. Is that not correct?
I think it's correct that a full supply of grain would help with commodity prices.
And so, instead of
I'm not gonna say the whole
us
thing was
playing
correct, but the
politics with
grain
this
thing was
and acting like it is your fault or anyone else's fault that we had to go and do what we did because of the unprecedented pandemic, what we did was save the economy then, knowing we got some problems that we had now, and now we are recovering quicker and better than any other country on this planet as a result of your policies and the policies of Joe Biden.
He's like complimented him so aggressively. He's like, this is what you did, and we're better than everybody because of you. Do you agree with that or not?
I cautioned against raising
This is
capital
what you
requirements
did.
on commodity derivatives.
You did this.
That our agricultural and energy producers use back home to keep prices of food and power stable for consumers. At the time, you said that was a very specific concern and you weren't sure the proposal would even address commodity derivatives. And in fairness, that was before the Boswell proposal was officially
Always love Powell
published.
getting grilled, man. This is
Unfortunately, we now know that the proposal does impact commodity derivatives, and in fact, they are among the most penalized financial products that banks offer. And I would note for just a moment, I very much appreciate your comments and responses
Oil hit a new high on that,
to
too.
Chairman McHenry about the nature of the overall proposal. Congress wanted end users to be able to secure their hedges without posting margin to keep derivatives markets affordable. But I've seen estimates that some of these types of transactions for end users
couple of hype plays running
face
today.
10 times the capital
I think
requirement.
we just had one up here too.
Chairman Powell, make me feel a little better. Ease my concerns here. Will you and the Fed work to fix this?
Let me start by saying I want to echo the fact that our commodity markets and our capital markets
another
are a
high.
huge
That one's starting to
national
go.
asset, and
Contracts
we need to be
30%.
functioning well and with as little friction as
I wanted
possible.
those.
I
Did
now
Baba go up
understand
too?
that what you're referring to is the things that were done to increase capital requirements for various kinds of derivative activities.
Yeah, we'll take it.
And I'll just say that's an area we're aware of the concerns, and it's an area that we're taking a very close look at.
I appreciate that. I was a member of the Dodd-Frank Conference Committee, where there was bipartisan support to not disadvantage end users.
He's not
farmers,
talking about the
ranchers, small
70s.
businesses.
There was one recently.
This had broad bipartisan support then,
Like he was
and
in
still
Bretton
does
Woods?
today.
That's amazing.
Unfortunately, the Fed could undermine this long-standing work done by Congress. I'd like to enter a few letters into the record, Mr. Chairman, that discuss the detrimental impact to end users. First, a joint Agricultural Trade Association letter from the American Farm Bureau Federation, the National Cattlemen's Beef Association, among 7 others. Next, a joint Energy Trade Association letter from the American Gas Association and 4 others. And lastly, a letter from the American Public Power Association and the National Rural Electric
JD, another
Cooperative
high
Association.
Intel.
Without objection.
And then this is a
Thank you,
huge
Mr.
level.
Chairman.
We're like right above 5100.
Chairman
SPY right
Powell,
below VWAP.
I'd now like to focus on how the proposal is set to significantly disincentivize banks from offering clearing
Nothing out of
services.
Powell has moved the market.
In Dodd-Frank, Congress
anything,
mandated
bonds
central
still kind of
clearing
in,
as a
and
way
market
to
all
reduce
at the JOLTS
risk
level.
in the system. The number of banks that can clear derivatives for end users has reduced over time, making it harder for end users to find a bank to offer this service. There are some estimates that the Fed's proposal will increase capital for this activity by 80%. I'm worried that this will make it even harder for end users to find a bank to clear their hedges. This also comes at a time when the SEC, our friends at the Securities and Exchange Commission, has just finalized a rule in December that will increase clearing in cost in Treasury markets. This will have a real impact on market access and liquidity, not just in commodities, but the $26 trillion treasury market that plays a critical role in the world economy. Will you work with the CFTC to address this problem?
Again, I'll say that we're
Honestly,
aware
the amount
of
of
those
commodity
concerns, and
questions
we're prepared
to start off the
work
day.
with other agencies and also to make sure that our capital proposal appropriately addresses them.
The strength of central clearing is entirely dependent on
Qualcomm
banks' willingness to
52 week high. Wow,
participate.
bonds are coming up here too.
And
SPY above
problems with the
VWAP.
pause will in-game
You're at the first
warrant
flush level of the
full
day. Again, we're still
reproposal.
green on everything all day, though.
Give us time to
Again,
appreciate
the aura
the
of
consequences.
relief has
And
remained.
there are real consequences, as you and I both know, Mr. Chairman. And with that, Mr. Chairman, I yield back the balance of my time.
Gentleman yields
Yeah,
back.
dollar
The
did
gentleman
drop
from
there in the last
Texas,
couple
Mr. Green,
minutes,
is
pretty
recognized for 5
harshly
minutes.
too.
Thank
Again,
you, Mr.
bonds ran up
Chairman.
too.
And welcome again, Mr. Powell. It's an honor to have you before us today. I always enjoy hearing your commentary. As you know, recession and inflation, these are buzzwords, and they are used in some circumstances to
He's recent. I was going to say, man, this guy sounds very soothing.
a dim light on perhaps the Fed and others who are working to end some of these troubling circumstances we're dealing with. Are you now at a point where you believe that there will not be a recession? There was much talk about recession, and many people worried that we would find ourselves having to negotiate.
So I don't think the
our
market
way
will get
out
too
of a
much juice.
recession.
Again, bonds moving with that dollar.
What is your position currently on a recession?
So U.S. growth last year was in excess of 3%. What we're seeing so far this year is continued solid growth. My expectation and that of other forecasters and of my colleagues is that we'll see continued growth at a solid pace. I will say, so there's no evidence or no reason to think that the U.S. economy is in or in some kind of short-term risk of falling into recession. Having said that, though, there's always a possibility.
Tell that to
a meaningful
gold, Powell.
possibility that an economy will fall into recession. I don't think that possibility, though, is elevated at the current time.
Thank you. I appreciate your saying this because we want to, at some point, eliminate the great deal of fear associated with just the term recession.
Intel again.
Next point, the December FOMC projections showcase a slightly lower unemployment rate than last June's projections and slightly higher GDP, suggesting a soft landing remains likely. Are you of the opinion that we're headed to a soft landing, Mr. Powell?
I'll just say that what we've seen so far is an economy that's growing at a solid pace. We're seeing a labor market that is still tight, still strong. Wages are moving up, but the labor market's coming into better balance between supply and demand. And inflation has come down sharply, really, since the middle of last year. So those are the conditions we see. They're very attractive conditions, and we're trying to use our policies to keep that growth going and to keep that labor market strong while also achieving further progress on inflation. That's our goal. And do I think there's a possibility we can achieve all of that while keeping
bonds,
the
big
market strong
candles,
and the
SPY
economy
breaking
growing?
out
Yes, I
again.
think
Dollar
there's a possibility.
dropped a lot
Indeed,
there.
that
Even
is what
oil's
we're trying
climbing
to
to a
achieve.
new high as well. Everything's
A
kind of
soft
going up.
landing can be
Everything
difficult
except gold.
to
Gold stained pin though.
identify. We could possibly have
Japan
a
on the
soft
high,
landing
too.
and miss the point at which the landing took place. How do you define the soft landing such that a member of the public, a layperson, would understand that we have indeed had a soft landing?
So we really think about it in the terms I just discussed, which is we want to keep the economy growing. We want the labor market to remain strong. 3.7% unemployment is pretty near 50-year historical lows. And we want inflation to continue to move down closer and closer to that 2% objective. And we've made quite good progress on that over just the past year. So we want to continue those conditions. And I don't want to put the label on it. Other people can do that. But I would just say we're using our tools to, keep a strong labor market and strong growth while, making further progress on getting inflation down to 2% for the benefit of the public. That's the economy that we're trying to achieve. And I think there's we're on a good path so far to be able to get there.
Well, I concur, but I would ask this as my last question. Will there be some announcement at some point that we've had a soft landing? Because we have people who are continually indicating that we're not having a soft landing.
Can we get like a formal,
so will there
like
ever
when
be
it does
some
happen, can we do
official
like a
statement
holiday?
That would give people some comfort?
I
they
don't
had
think
the
by
inflation.
us, no.
Can we do
I
a
think we're
party
just
at the
going to
White
keep our
House?
heads down and do our jobs
Something
and try to
along those
deliver
lines?
what the public is expecting from us. We wouldn't be, declaring victory like that. But
no high.
The gentleman's time has expired.
Thank you, Mr. Chair.
Thank you.
The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Mr. Chairman, thank you very
formally
much.
inform everybody.
Chairman, welcome back.
Welcome.
I think we enjoy this. I hope you do too. I know there's some bit of trepidation about all the things that are available to us and you to answer. I learned a long time ago on a campaign trail, every problem can be solved on a campaign. Reality's a little bit different. Welcome back despite all that. Looking at the Monetary Policy Report, March 1st, 2024. And as I review this, I would like to focus on the term that I would say high prices are here to stay. Because what I've heard you say today in this report really go to is you got everything under control, but we're going to keep the high prices. And I think the high prices really take a toll on the American people, as you're hearing from our colleagues, no matter whether they be Republican or Democrat. Page 7 of your report, you don't have to go focus on it, it says, while current services, core service price inflation has been slowing, but remains elevated. It does. Labor costs, as you know, and energy costs are a driver to your monetary policy. The question that I have is, because you began referencing policy, 2 weeks ago or so, the president announced that he was going to slow down the gifting of opportunities in Texas for natural gas to be able to continue the exploration. And this in Texas is a $1 trillion answer problem to us, because if we do not constantly go find through these new finds, but also through the permitting process, we're in trouble. But we're also putting in trouble our contracts that we have with Germany and a lot of other countries. This is going to mean also that business in America continues to have high prices because, as you know, wages are already high and now energy is high. There's no resiliency to continue this and see the American people win. You talked about policy, so what's your advice to policy about energy and what this administration is doing on a policy perspective?
We have, broad, significant, important responsibilities, but we're really not responsible for energy policy, and we try to avoid commenting on.
But it has a huge impact on this report. It arbitrarily keeps prices high. It arbitrarily means that business is not, while they're making money, and while households, people do buy that, it's diminishing their long-term advantages to make progress. So you're just going to leave that alone?
Really not appropriate for us to comment. On if I'm commenting on energy policy, I should comment on everything. We have a mandate which is maximum employment and price stability. We take decisions by the legislature and by the administration as a given. We're not in charge of second guessing them. It's just not our job.
Okay, well, all right, let's say we're not going to second guess them. I will. I believe that the energy policies that this president and the Democratic Party have supported are causing a huge boom in prices staying high. They will not come down. A boom in attacking the energy industry, jobs that are associated with it, our foreign policy as it relates to contracts that we have signed with foreign countries, giving up the natural gas market almost entirely on a world market to Qatar. It has a huge impact on whether we are going to keep prices high or control these prices. It has a huge impact on, I think, your monetary report about how many houses get built, how many jobs get filled, whether we have jobs in place, whether we continue to have more jobs available than workers that are there, because over-regulation is having a lot to do with the nervousness not only on this panel, but also by the American people. It would be my hope that you would pass some sort of a memo and tell them you have no opinion, but you want them to see what the impact is. I want to thank you for being here. Thank you, Mr. Chairman. I yield back my time.
Gentleman yields back. The gentleman from Connecticut, Mr. Himes, is recognized for 5 minutes.
Thank you, Mr. Chairman, and Chairman Powell, thanks for being with us today. I have a question, but I want to start by acknowledging, not celebrating, but acknowledging what has been a really remarkable soft landing in our economy. And I'm not celebrating because the American people, consumers, are still feeling the effects of high prices. Wages haven't caught up with prices in some instances. But I think that it would be fair to say that observers would never have predicted the conduct of this economy. You yourself said it in the final press conference of 2023 when you said a very high proportion of forecasters predicted very weak growth or a recession. Not only did that not happen, we actually had a very strong year. So I want to acknowledge that and acknowledge your commitment to independent monetary policy. And because I'm still burdened with this idea that truth and facts matter, I want to point out, especially having listened to my good friend Mr. Sessions talk about the energy market, truth and facts matter. We are producing more oil and natural gas today than any other country on the planet. We are the world's #1 energy producer. I could spend my entire 5 minutes sort of pointing out facts. The fact I want to point out here, and this comes right out of the report, is that the premise that inflation is Joe Biden's fault, is fiscal policy's fault, first is faulty because half the fiscal stimulus that occurred in the face of the pandemic happened under the previous president, Donald Trump, and it has faded, and this report makes the case. Core, and I quote from it, core goods prices have been declining as supply bottlenecks ease and import price inflation falls. So, Mr. Chairman, I don't want you to comment on that because it gets a little bit political, but I do think it's important that we keep some foot on the plane of facts. I do want to ask you a question, though, Mr. Chairman, because I always worry about risks that we see and risks that we don't see. And I want to use the remainder of my time to talk about a risk you're very conscious of, which is the overhang in the commercial real estate market. As you know, the Financial Stability Oversight Council identified commercial real estate as perhaps the most salient risk to the financial system, $6 trillion roughly in loans, half of that on bank balance sheets. In a 60 Minutes interview a few weeks ago, you characterized distress in the commercial real estate market as sizable but manageable. Do you still feel like that risk is manageable? Do you feel like you've got the visibility and the transparency and the tools to address it? It makes me nervous because this has echoes of 2008, 2009, when vacancy rates were declined relatively rapidly. We're not seeing that right now. So how do you feel? Does that risk continue to be manageable, and do you have the tools to manage it?
Yeah, I would say yes to that. I think it is manageable, and we've been working hard to management for some time now, really. And what it really is it's a lot of downtown real estate where there's too much office supply because of work from home, and also the kind of downtown retail that is no longer as profitable, and things like that are really at the heart of it. So what we've done is we've looked at banks that have
You're approaching high of the day.
And and we've been in touch with them to
he's
make sure
saying
that
real
they have a
estate's
plan
manageable. That
to
headline's
deal with
hitting
that. There will be
commercial real
losses
estate, but other than
by
that,
some banks.
we're not
It
really
isn't
moving
really
up
the big
out.
banks. It's really medium and small
They're
size
about to hit
banks that
high
have
of the
these
day.
higher concentrations.
NASDAQ, everything's still under 1%.
It's going to
but
be
about
with
to be
us. It's
there.
a problem we'll be working through, I think, for several years. And the idea is you've got to have enough capital, enough liquidity, and a plan to take the losses that you're probably going to take. And so that's what we're doing. We're very active in this space with small, medium-sized.
So let me ask you about that. Sorry to interrupt, but let me ask you about that. Silicon Valley Bank, wild irresponsibility inside the bank, egregious irresponsibility on the part of corporate treasurers who put so much on deposit. The Fed also had some self-examination to do because the examiners and the supervisors of the bank, quite frankly, were not doing what they should have been. So we might be forgiven for being a bit skeptical of claims of being on this. What has changed in the context of Silicon Valley Bank that gives you the confidence that the supervisors and the examiners will be on top of this?
I see it with my own eyes, but frankly, there's a risk that we would overreact to something as significant as that. It's not like we wouldn't have reacted very, very strongly to what happened with Silicon Valley Bank, and we have. So I know that our supervisors are out there, and we're hearing back from media reports that we have been engaged with medium and small-sized banks principally on this. So I am confident that we're doing the right things there, and I do believe it's a manageable problem. If that changes, then I'll say so.
Thank you. Thank you, Mr. Chairman. Yield back.
The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Powell, for being here today. I'd like to associate my remarks, or myself, with Mr. Hill's remarks earlier with regards to the FDIC proposed long-term debt requirements that are based on risk weighting of assets. I think it's an ill-thought-out proposal, and hopefully your position on FSOC, you'll be able to advise them and hopefully guide them that this is going to be held up until we actually get a Basel III rule. In October 2023, the board issued a proposal to update the debit interchange fee cap and regulation II. This is very concerning, given the data from both the GAO and Fed's own studies show that Reg II has significantly harmed access to free checking and other banking services for the country's poorest citizens. Yesterday, I introduced the Secure Payments Act, which would prohibit final rulemaking until the Fed, among other things, studies the impact of the board's proposed rule, completes a quantitative impact analysis specifically as it relates to affordable banking services for low-income Americans, and reports those findings to Congress. I understand the Fed acted here because you feel you're facing litigation, but I urge the board to proceed with extreme caution with any type of price control proposals, especially since the first iteration was so clearly harmful. Chairman Powell, knowing of the hardship caused by this policy on low-income consumers, does it give you any pause to continue down this road?
As you know, this rule is out for comment. We extended the comment period to May 12, so we don't have all the comments yet. We'll evaluate them carefully and make an assessment. I mean, the law does assign us a specific job, which is to assess whether an interchange fee received by a large debit issuer for processing a debit card transaction is reasonable and proportional to issuer costs. This is the obligation that Congress has bestowed upon us. Not something we thought we sought, but that's our obligation under the law, and we don't know what else to do than to keep doing it for as long as that's our assignment. That's all we think we're doing, but I think that the concerns that have been raised will be things that we...
Well, hopefully you'll study this and understand that from the previous types of rules along this line, they were very detrimental to a lot of low-income, middle-income folks. As you know, the price reductions that were promised during the Durbin Amendment, for instance, the added profits actually went to the largest retailers rather than go to the consumers as they were talked about. 98% was one of the studies that showed that the retailers kept all the money instead of lowering prices as they were telling us that were going to happen. So I'm very concerned about that. So what's the legal basis for updating your regulation? You've talked about it a little bit. You believe that there is something in the law that says that you need to be doing this updating all the time, or should you be studying it before you actually propose a rule and make all these things more appropriate?
Well, again, I think our reading of the law is that it's not something you do once and leave it there. It's supposed to be reasonable and proportional to certain identified issuer costs. The implication being there, if those costs change, then this should change. So that's our reading. I think we do a lot of work. We waited a long time to change it. It's been many years since we did.
A little
change
pop
it,
on Mobileye Check News.
One of the things,
make this assessment, and we'll review the comments.
Mobileye,
one
MBLY.
of the things I hope that you consider is the fact that even though it's supposed to be on $10 billion and up, this stuff all rolls downhill. And as the last study showed, the smaller banks, the community banks, are also feeling effects of this. So be sure and consider that when you start talking and thinking about this. I appreciate that. One of the things, yesterday I had two different foreign banker CEOs in my office, and one of them brought up the subject to me, which is very concerning with regards to artificial intelligence being able to impact financial institutions in this country and our banking system. And I tell people, I said, think about this for a second. You find some individual who is a well-known individual, perhaps Larry Kudlow, Dave Ramsey, Bloomberg, somebody who has got credibility, and suddenly you see an artificially produced advertisement or Facebook post, and this person says, look here, we've got 100 banks that have got a problem today. Now, that individual didn't do this. It's artificially produced. I've seen a commercial already with individual. You couldn't tell the difference between that individual and the real thing. We have just come through the Silicon Valley situation. And if you have real-time payments, FedNow, where you can instantaneously transfer money, and you have people scared to death
started by Dave
by
Ramsey,
some well-known
telling you to
individual
pull your
to
money
an
out of
artificial
banks.
intelligence situation, and I can tell you that China is watching this like a hawk.
By a deep
They are
fake.
ready to pounce on this situation. To me, I've got some bills that actually would solve the problem. Do you think there's some issues here we need to be taking a look at?
Yeah, I think we're very focused on AI, many government agencies and law enforcement agencies in particular. It's very challenging. You paint one picture, there are lots of pictures.
Gentleman's time has expired.
It's interesting because the foreign banks
time's
actually are watching this. Thank you.
We'll now go to the gentlewoman from Texas, Ms. Garcia, for 5 minutes.
Thank you, Mr. Chairman. And
I don't have
Chairman
anything
Powell,
on
thank you for
Mobileye, but
being
that's
with us
going
this
up.
morning. It's always
Again,
a
Intel was
delight
just
to
running
have
there
you,
too.
Before us.
But that's
Chair
like
Powell,
2.5%,
Congressional
triple the
Budget
volume
Office
on
report
Mobileye.
estimated
No news.
that the U.S. economy will grow an estimated $7 trillion over the next decade, thanks to, in large part, to the surge in immigration, creating a larger labor force. Immigration also increases demand for goods and services. I know you mentioned in your report that that the growth sometime during COVID was held down due to some restrictions in COVID and restrictions on immigration. Can you detail how immigrants have been fueling our national growth? And did you consider this report from the CBO in this current report?
So I am very familiar with the CBO report. I've read the demographic projections and I've read the economic projections, so I do understand what they did. And
so you do agree with a $7 trillion growth in the next decade?
I have no judgment on that. I haven't tried to make a parallel assessment, but I'm familiar with the assessment. What they're doing is they're saying more people working, bigger economy, and it makes the economy bigger. It's just arithmetic. If you say that if you add a couple million people to an economy,
yeah,
percentage of
still
them
going.
will work.
Don't have
there will
anything
be
on
more
it.
Output, and
options aren't that bad, but we just need to know why it's moving. And that APM stock keeps going up.
We don't make immigration policy. We don't comment on immigration policy.
There's APM and
indirectly or directly.
And then Nvidia getting a candle, SPY going up, GE on the high, bonds still holding. I think dollar's still down, and then oil is hitting a high too.
The immigration surge has added to our strong labor force, which is necessary. I think you said that. We expect a continued
Gold's
growth
even popping
at a
now
solid
too.
pace. So to be able to continue on a solid pace, then we need that labor force. Wouldn't you agree?
Well, so last year we got a big increase in workers, and it came from two sources. One was participation increased from people who were already here, and in addition, we got a significant increase in immigration, and many of those people take part in the working economy, and so there was a big increase in labor supply. That will have increased output. It will have made more people. It will have all kinds of economic effects. I'm just reporting the facts there.
Right.
I'm not going to say anything is needed for the future or good policy. indirectly or directly, but I mean, I think it's just reporting the facts to say that immigration and labor force participation both contributed to the very strong economic output growth that we had last year.
Right. Is it possible for the Fed to conduct a formal assessment into the positive impact immigrants have on our economy and report back to Congress?
Not really, no. I think that's a job for the CBO. We don't. That's precisely what the Congressional Budget Office does, not what we do.
All right, but the other question that you've not addressed is, did you consider the CBO's assessment that the growth in the next 10 years would be $7 trillion and about $1 trillion in added revenues? Was that considered in this report? Because that was the February report, and this, I believe, is through February 29th.
So I think that the answer to your question is 10-year growth projections by CBO don't have big implications. They don't have any implications really for the current stance of monetary policy. But I will say that the immigration that we saw was a notable factor of the 2023 and 2024 economic outcomes. And of course, we're aware of that, and it plays a role in our thinking about appropriate policy and the path of the economy.
Okay, well, thank you for that. And related to that, I know that the last time that you were here, you and I talked about diversity and diversity inclusion efforts, both at the Fed, and I applauded you and applauded the president for his appointment of Dr. Adriana Kubler. I expect to visit with her this week. What other strategies and programs are you using in the Fed, not only in here, but in all the branches to ensure that there is diversity and inclusion?
So in terms of intake of people, when we go to hire when the Reserve Banks go to hire a new president, those processes are very focused on having a diverse applicant pool, and you see the results of that more and more over the years. That happens. We don't have any role in appointments of governors, so that's not our job. The administration does that. In terms of, I'll just say internally, we're very focused on having an open and inclusive place to work, and also in hiring, we work hard to have diverse.
Gentlelady's time's expired. The gentleman from Michigan, Mr. Heising, is now recognized for 5 minutes.
Chairman Powell, good to see you in person. Mr. Chairman, I've got to make a comment here. It's stunning to me that equating an underground economy, which is very different and not a healthy alternative to the regular economy.
Yeah, Mobileye did another 4.
And basing
I got you the call out. Again, I think those options all written
not
now.
legally able to
the
work
spreads are still pretty
ultimately
jacked up
will
on
fail.
it.
That is not a strategy to my colleagues on the other side. So just ask any farmer who's going to then have somebody, a regulator, come in and fine them for employing people who are not legally allowed to be here in the country. That is one of their greatest fears. So that's just a fallacy of growth within this economy that is not sustainable. Chair Powell, last fall I sent Vice Chairman Barr a letter expressing my concern over the cumulative impact pending rulemakings governing products and services will have on consumers. This morning, there's been a fair amount of time spent on Basel III, but among the agencies, and here I'm including Fed, FDIC, OCC, CFPB, and the number of pending or final rules is frankly just staggering. Regulators last year finalized new rules for the Community Reinvestment Act. The Fed is also looking at Reg II, which in my opinion would unintentionally undermine recent significant progress in bringing low and moderate income consumers into the mainstream banking system. And just yesterday, the CFPB unveiled a rule that would cap late fees for banks. And I just literally walked out of a meeting with my credit unions who are very concerned about those things that may be in their future as well. So I think it's critical that we don't look at any of these rules in a vacuum, and we need to consider their total impact and full scope on that. So I'm going to ask you a question I've asked some of the other regulators. How much do you, as the Fed, and you personally, consult with other agencies on their own rulemaking agenda? Do you coordinate? Do you talk?
I don't lead that area of our business, but I know there's a lot of talking, coordination. I'm not sure there is coordination.
We're in government. There's always a lot of talking. I'm concerned about the coordinating.
New high.
All right. Well, let me ask you this way: when a rule is finalized,
Mobileye, bro. Do we have anything on that?
Are you mandated or have any kind of policy?
Yeah,
to go
APM
back
as a small cap
and look
stock.
at your other pending rules under your
I think something
purview
else is
and see if
moving too.
changes need to be made because of these other agencies' rule makings?
There's no mandate like that. I think
Oil
where
and
it made
gold.
sense
I'm glad
to
I
do
went
that,
mini
though,
on
we
the
would
gold.
do it.
But you genuinely have some sort of review of that. It's conscious.
I don't think there is a formal review.
Okay.
No.
I've heard repeatedly that elements of Basel III overlap with the Fed's annual stress tests. What are you going to do to address that overlap?
Mobilize up 12 now, 13.
So we're in the
Damn,
middle
all right, I
of,
could have hit those contracts.
just at the beginning,
They would've
actually,
went up 100%,
of deciding what to
yeah.
do about Basel III.
I was going to do
part
it.
of
I
that
said the
may
April's,
be
they didn't
the
look
interaction
that
with
bad.
stress tests. So I haven't got anything for
was
you on
gonna
that
take
today,
'em.
but that's certainly
Yeah, I
an issue.
have no
that
idea what's
presents
going on.
We'd
It's up
like to
12%
continue
though.
that conversation. I do want to touch on the bank failures of last year very quickly. Do you think that the banks that ultimately needed the government bailout lacked sufficient capital, or was it more of a management problem?
So with Silicon Valley Bank, it wasn't really. Could they have used more capital? I mean, they were actually raising capital. It was a capital raise that they announced that triggered the run and everything. So you can argue that it needed more capital, but I wouldn't say that that was the proximate cause. Really, it was a funding structure
Oil
that was
again.
all about.
Bro, Mobilize
too
up
much
15, bro.
concentration
What
of,
the hell? I
many of
butchered
us are,
those. Those
I'm
went up
asking you a question because
300%
many of us
off
are very
nothing.
concerned that those failures are being used as an excuse to raise
are they at a
capital standards
conference?
across the board. And because the SEC just released its climate disclosure
No
rule
headlines,
this morning,
15%
I'm going to
move.
touch on the climate related question for you. FSOC, the FSOC chair has repeatedly stated that climate change is, quote, an existential threat. Presumably a threat that is existential affects banks and financial institutions of all sizes. Why then have FSOC member regulatory agencies, including the Fed, limited their guidance on climate-related risks
Morgan
only
Stanley
to
Tech,
large
Media,
financial
Telecom,
institutions? Why not
Fireside
everybody?
Chat. So yeah, they're live right now.
It's a new thing, and we are not.
It's a heck of a new thing. Yes.
We're not climate change policymakers. It's
Seven
this is
minutes
something that
into
needs
the
to be
conference.
handled by elected representatives, and so we're starting this,
MO still
this
going?
very
SPY still up?
carefully with
Yeah,
large
MO, even
institutions
Pfizer
who are
was going
already
up.
doing it. By the way, the things that we're doing, they're doing this because to remain active internationally, they have to be doing it. So we started with them because they understand it. Imposing it on smaller banks, it's not something I'm for.
Yep.
Gentleman's time has expired.
We'll
The
be
gentleman-
following up on the Taylor rules.
The gentlelady from Michigan is recognized for 5 minutes. Ms. Salib.
Thank you so much, Chairman. Thank you, Chair Powell, for being here. Do you agree with the April Federal Reserve report that compensation incentives contributed to Silicon Valley's bank failure?
I'm sorry, did I didn't
So the April Federal Reserve report, it said that compensation incentives contributed to the Silicon Valley bank's failure. Do you agree with that?
I would say it's at best a tertiary factor, but it probably had something to do with it. For me, not a major.
So that's no?
That's very small.
Okay, so it did. Okay. So do you agree the appropriate rules on incentive compensation could have reduced the likelihood of Silicon Valley's failure? Maybe? You know, if they didn't take all that money.
No, I really don't think so. I mean,
So if they
I don't
didn't
think
take all
it's
that money?
I don't think it's a first order question for Silicon Valley. A lot went wrong there.
Yeah.
Incentive comp would be
They actually blame
way
you
down the
guys.
list.
They
Sorry?
blame the oversight.
Caught the Mobilize.
Even
there
though they
you
didn't
go,
respond to
baby.
your
Good work,
correspondences.
John B.
We took our
Hell
medicine.
yeah.
Yeah.
Warren,
Do you
it's
think it
time to
also has something to
legalize
do with the fact
marijuana.
that
There
Section
you-
956
We're just talking the weed
of
stocks.
the
Are they still
Dodd-Frank
cheap?
rule hasn't been finalized by you?
Elizabeth?
No, I don't.
It's
You
still
don't
down
think it's
from
the reason?
yesterday.
I don't.
You don't think it's because people made money off of the failure?
I think nothing.
You don't think money drove them to do what they did?
I didn't say that. What I said, there are lots
So
of.
they made money from it. They actually, it was a lottery
I do
for
not
them, right?
think that incentive compensation arrangements were at the heart of the Silicon Valley Bank failure. No.
Okay. Do you support a robust rulemaking for executive compensation, Chairman?
I know that the
Was it
Oh,
money?
you don't?
I'm sorry.
Oh, that's the simple. Do you support robust rulemaking
I like her. She's
for
brilliant.
executive compensation? Do you believe in Section 956?
Section 956s are looking at doing something. It's been 12 or 13 years, right?
Yeah, multiple
Nothing has
agencies.
I
happened.
did 1,000 shares.
It's been hard to get it done. I lived through the
flip,
last episodes of
840.
trying to get it done.
I'd be down to swing
So,
it too.
so do you believe in a robust
I
rulemaking
believe
process for executive compensation?
I do.
We'll
I
go
do,
off
yeah.
the
Oh,
Warren
great.
pump.
Oh, that's awesome. Will you commit to helping finalize the Dodd-Frank section of 956 this year?
I wouldn't
It's been
say
12 years, Chairman.
that. Yeah, no, I want.
It played a role in the bank failure, Chairman.
If I can answer, what I would like to do is
So you don't want to do it this year? I mean, I'm being serious. You're saying no?
If the member will allow the witness to answer the question, we've had a good day today, and the gentleman's trying to answer the question.
I would like to understand the problem we're solving, and then I would like to see a proposal that addresses that problem.
Okay. Do you believe people should profit off of bank failure? The executives that made those decisions?
No, not the
They should not
executives.
profit.
Well, I would say executives who are responsible for a failed bank should not profit from the failure. Absolutely not.
So they get to walk away with compensation based on their failure?
Well, you're asking,
true,
you're asking
it
about a different rule.
She has a point.
Do you have clawback and things like that?
Yeah.
She kind of has a point.
That's something I know you've been looking at for a while.
Yeah.
That's certainly an appropriate thing to look
Is that
at.
what you want?
Yeah, because
Is that
it's
what you
just
want,
going to
clawback,
continue
huh?
to happen, is my opinion. It doesn't have to be yours, but it sure the heck could have helped here if they knew they were going to walk away, if they could walk away with not the bonuses, the compensation. I mean, they made money, a significant amount of money for their bank failure. Last question, Chair Powell. Do you believe that the impacts of climate change pose a risk? Have you been talking about that more?
I certainly believe that climate change is real and poses risks over the longer term, sure.
So there have been some that say, higher interest rates actually makes it more difficult to build out the renewable energy projects and other investments required to prevent climate impacts. Do you believe that to be true?
Yeah, lower rates for climate.
It's not our.
Yeah.
I believe that we need to do our job that you've assigned us, which is maximum employment and price stability, and we do it through interest rates. It's not our job to consider the effect on climate change of that, and I think any effect on climate change of that would be kind of minuscule.
Okay. Last question, Chair Powell. Who do you see as the major winners and losers from high interest rates in terms of income groups, age groups, and racial or other demographics?
So the point of high interest rates in the current environment is to bring inflation under control. The people who are hurt the most by inflation, as you know, are people who are on a fixed income, who right away are in trouble when the cost of transportation, food, energy, and when those things go up, they don't have financial resources to deal with it.
Have you looked
We're
at the
accountable to provide price stability to the American people. Those people benefit the most over time from stable prices.
Gentlelady's time's expired. We'll go to the gentlelady from Missouri, Ms. Wagner, for 5 minutes.
I thank you, Mr. Chairman, and I thank you, Chair Powell, for your service. I want to associate myself with the comments of my colleague, Mr. Himes. I am concerned about banks' commercial real estate exposure, and I do hope that the Fed is doing everything it can to ensure that the exposure that these banks have will continue to be, in your words, manageable, because this is a looming crisis
It's just
out there,
crazy,
given
dog.
the workplace changes and dynamics. Chair Powell, in remarks on Bloomberg, Larry Summers, former Treasury Secretary during the Obama administration, stated that, and I quote, "It would be much more productive for our central bank to be focused on the question of real estate portfolios in the banks they supervise than, quote, some of the more abstract and politically driven arguments about various kinds of capital charges on the largest banks." Do you agree, sir, that it would be more productive for Fed supervisors and
AMD on the low?
regulators to keep their eye on the
Interesting.
ball?
AMD kind of flushing
in
here?
this case, commercial real estate and other real estate investments.
I absolutely think we
House
need to keep our eye
Republican
on the ball
Gallagher
on-
says
on
American
commercial real
ByteDance
estate,
investors
and,
should urge
yeah, I think we're
Chinese
doing that.
government to allow sale of
I
TikTok.
hope so. According to your semi-annual report, the median of members on your Monetary Policy Committee estimate that your target overnight interest rate will average 4.1% in 2024. Does that mean that the median number of members anticipate that you will be cutting interest rates sometime this year by as much or more than a full percentage point?
No, it doesn't mean that. Actually, the summary of economic projection showed a median of, this is in the December FOMC, so this is now 3 months old, showed 3 rate cuts this year. So that would be 75 basis points, 3/4 of 1 percentage point. You were quoting the next year's number, so you would add that on. That was through 2025, I believe.
So are you anticipating that there would be more cuts here coming?
The way I would say it is, we're making economic projections.
You read the wrong box.
So we write down a path of growth, what's happening in the labor market, what happens with inflation, and what goes with those forecasts is an appropriate monetary policy, appropriate interest rates. So we expect inflation to come down, the economy to keep growing, it will be appropriate for interest rates to come down, significantly over the coming years.
Good.
What will really happen, though? It's not a plan. What will happen is actually what the economy needs. The economy will do something different from that, and that's what will actually happen.
Chairman Powell, 15 members of Congress, including myself, Ranking Member Sherman, Chairman Barr, and Ranking Member Foster, sent a letter to the prudential regulators regarding the impact that Basel will have on U.S. capital markets activities. The letter highlighted critical areas of our U.S. markets, including securities underwriting, securitization, and derivatives that will be severely impacted by the Basel proposal. This was also a common theme represented throughout the comment file on the Basel proposal, over 95% of them. Considering that 75% of financing in the U.S. is done through our capital markets, which are the deepest and most liquid in the world, why would the Fed continue to pursue this flawed proposal instead of re-proposing a rule that would not have such a drastic impact on the U.S. economy?
Well, in fact, the capital markets concerns you raised are among those that I raised myself in our open board meeting when we put this out for comment.
You said you wanted broad support, and obviously there is dissent among some of your governors, the FDIC, others. So how are we coming on this, and how are we we're working our way through the comments, and we're coming to the point where it'll be appropriate for us to begin to evaluate what changes are appropriate. I've said I think those changes will be broad and material.
Pfizer even Altria.
And that's where that is. But we haven't made any decisions yet. We just got the comments.
In my role as chairman of the Capital Markets Subcommittee, I have seen SEC Chair Gensler push the envelope in terms of rules and regulations that go well beyond the congressional mandate, even encroaching on the jurisdiction of other financial regulators. What is the Fed's response to another agency encroaching on its jurisdiction?
Mobilize said something during a conference about inventories.
We do not comment on other agencies' regulation. However,
Bob is even still up.
If they were actually, to take your hypothetical at face value, if they were to come into our jurisdiction.
Oh, it's more than a hypothetical.
And we would react.
Good. Well, I hope you do. I yield back.
Lady from New York, Ms. Velasquez is recognized for 5 minutes.
Thank you, Mr. Chairman. Right here.
Hi.
Hi. Thank you for being here, Chairman Powell. Property insurance rates are becoming prohibitively expensive or inaccessible for homeowners and developers in my community. The FSOC's annual report identifies property insurance rates as an increasing risk, and I recently raised this issue with Secretary Yellen. Is the Fed monitoring the rising cost of insurance and its impact on macroeconomy?
What happened? They just cut the audio?
Well, we'll pause the clock. You have staff take a look at the microphone.
Always so much drama lately with Powell.
We need
clock being frozen is out of respect for Ms. Velasquez.
They don't have. They're going to have a recess, I think. Remember, this is a 2-day event.
But we'll get staff.
You got like what 4.5 more hours event of today. So get the body moving, baby. Relax those shoulders. No trauma traps.
We're trying to do electronic voting.
Release the trauma. You'll be okay. Everything will be okay.
It's hard enough to just get the microphones to work. Madam Clerk, thank you.
Yeah, man, relax the jaw too. Do the dragon breath, chest to the sun,
So
flex
all
the
the
core, tuck
photographers
the
have
hips
left,
in.
so
Do all
awkward
of it. They're
photos
fixing the
for,
microphone right now.
Trish
Get your
will be
body moving.
less
I'm gonna
awkward.
stand up a little bit. Yeah, and market's hitting a high right now. Again, Mobileye, they were during a conference. A couple of the China names came up. Oil's been running. Gold even popped up. The dollar dropped. I'm trying to think. Puts on mic. I think their mic is literally broken right now. I don't think we've watched a lot of these. I don't think we've ever seen this happen. Yeah, man. Lift is lifting. And even the market, again, this 5120, this is going to be a pretty key level. This is where on Friday you kind of like ran through, and yesterday when we kind of dropped below here, I mean, you just started dying yesterday. You were even way below that. So we're in a nice little weird middle ground.
It may not be better, but it's a different one.
A little recap. But yeah, get moving. I'm standing up. I'm going to balance. I'm going to hit my resistance. Yalla, it's early, man. It's early. Just Euro close. So keep in mind, again, Euro close is right at this level. We will see where it takes us. I'm down on gold. I'm down $100 on that off the 2 micros. I'm glad I didn't go bigger on that, but yeah, I went for the gold. And then I grabbed the weed play. It's literally right where I grabbed it. And then again, a lot of things. MO's doing literally. It's on the high right now. Long term's loving today. So a lot of things. JD came down. Those contracts were up earlier. And NASDAQ, everything's 3/4. Russell's doing better at 0.91. Actually, let me give you a quick little checkup here. Again, we're post data.
Now this one's back.
We're in between Powell. Powell really hasn't said anything. If you've been looking for
Doesn't
any
want to be
quotes,
replaced.
I mean, I've been listening.
Okay.
But right now, damn, you have 413 names green on the
Right,
SPY.
we'll start over. We're going to restore
89
the clock.
red.
Thanks for members' indulgence. Ms. Velasquez, you're recognized for 5 minutes.
Ms. Velasquez.
So,
Dow
Mr.
Jones,
Chairman, I
5
was
red,
asking you
25
about
green.
the property insurance rates
NASDAQ
are
100, 23
becoming
red, 78
prohibitively
green.
expensive or inaccessible for homeowners
Yeah, this is
and
a good
developers in our community. The SOX annual report identifies property insurance rates as an increasing risk. And I recently raised this issue with Secretary Yellen. Is the Fed monitoring the rising cost of insurance and its impact
AMD is
on
getting clapped.
macroeconomy?
So yes, we are very much aware of increases in insurance, including property insurance, and it's been adding meaningfully to inflation. It's not something we have any control or authority over.
Right at Euro
Same
close.
is true of auto insurance. They're just insurance generally prices have gone up a lot.
So when we talk about the lack of affordability when it comes to housing, the insurance, the rising cost of insurance is an important factor that is affecting the availability of affordable housing in our communities. And I hope that there are some discussions among the Feds because it is an increasing risk and it's going to have a direct impact on our economy. Chairman Powell, I know you spoke with Chairman McHenry a little bit on inflation and interest rates. Can you explain what evidence you're looking for before inflation has returned to 2% and interest rates can be cut?
Sure. So we're not looking for inflation to go all the way down to 2%. That's not what we're looking for. What we want is just more evidence that will give us more confidence that inflation is on a path down to 2% sustainably. So that will come in the form of good inflation readings, really. We want to see, just a bit more evidence so that we can be confident. We don't want to have a situation where it turns out that the 6 months of good inflation data we had last year, that didn't turn out to be an accurate signal of where underlying inflation is. So we're just being careful, and because the economy is so strong and the labor market's so strong, we think we can and should be careful as we approach that decision.
And when you say evidence, what evidence? If there's anything.
So just more, we'd like to see more good, relatively low inflation readings. We're not looking for better inflation readings than we've had. We're just looking for more of them. And what will happen is as we go forward, the 12-month inflation will continue to drop because it'll be lower than early last year.
Thank you. Mr. Chairman, I would like to pick up on where Ms. Talib left off and reiterate the importance of the rulemaking on Section 956. This is an issue that I also raised with Vice Chair Barr, Chairman Grunberg, Acting Comptroller Sue, and I told them when they came before this committee that I will be asking for a status update on the rulemaking at every future hearing because it's well past time, 12, 13, 14 years. If you are employed in a company and you are given a task, I will think that you will be fired if you don't get it done, and it has taken 12 long years. So you are the chairman of the Fed. How is the Fed working with other agencies to propose the rule?
So there's a lot going on in regulation at the Fed right now. My understanding on 956 is that there have been discussions between the regulatory agencies, and I think it's not 3, I think it's more like 6 agencies that have to agree.
I know.
I have not seen a proposal. I think something is under consideration, but it's not something that's gotten to me yet.
I will ask the next time, and believe me, I'll be here.
Great.
Thank you.
Gentleman yields back. Gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Mr. Chairman, good to see you. You have said numerous times that the capital framework is about right and that banks are well capitalized. Do you still believe this?
I do.
Given that you believe that, and given the fact that the Basel III Endgame proposal dramatically increases capital requirements on banks, would a reproposal that implemented Basel III in a capital neutral way, could it do so without jeopardizing financial stability?
Could. I mean, hypothetically, yeah.
Okay. According to Latham and Watkins, 97% of the comment letters either opposed, called for a reproposal, or expressed substantial concerns about the Basel III Endgame proposal. And those negative comments came from across the ideological spectrum and from various interests. Without objection, I would ask the chair to include that report into the record. Without objection, I'd ask the chair to include that report.
Without objection.
Thank you. And Mr. Chairman, did you see that report?
I did.
Does that concern you, that 97% of the comments were negative?
So we didn't do our own count, so I can't make an assessment, but I would say it's unlike anything I've seen.
The Basel III comment period ended on the same day as the Fed's data collection on the proposal, which is an odd process since the data should have been collected far earlier, analyzed, and the results should have been available for the public to comment on before the comment period ended. Why did the Federal Reserve choose to do a quantitative impact study during the comment period for the proposal, foreclosing any ability by the public to comment on the results of the study?
Well, I mean, the movie's not over. We are where we are, and Vice Chair Barr did commit to putting the QIS out for comment. We will receive those comments, and those comments will be taken into consideration as we think about the path ahead.
Well, speaking of process, you've got your excellent general counsel right behind you there, and I don't want to get into privilege here, but have the lawyers at the Fed raised any process concerns or Administrative Procedure Act issues with the board?
Let me just say that we're committed to doing transparent and reasonable and data-based rulemaking in compliance with the Administrative Procedure Act.
Well, of course, giving the public the ability to comment on the quantitative data that has been provided obviously is consistent with good process. Sir, Governors Bowman and Waller, Vice Chair Hill, and Director McKernan all dissented on the proposal, and Vice Chair Jefferson expressed concerns with it during his statement. Under your tenure as chair, can you identify any other regulatory proposal which has elicited this much dissent?
No.
Have you in the past acknowledged in front of this committee that you will not move forward with proposals without consensus? Or you have acknowledged that in the past, and we appreciate that commitment to consensus. Have you achieved consensus yet on the Basel proposal?
Let me say I am confident that we will, but that's a process that as I mentioned, we're evaluating the comments. We're just coming to the place where we're going to start talking about the path ahead. And I am confident that we'll achieve very broad support on the board.
Mr. Chairman, do you agree that the heterogeneity and business model diversity within the banking sector contributes to system-wide financial stability?
I strongly do.
And do you agree that a concentrated business model in the banking sector would present a potentially systemic risk?
Potentially, yeah.
And this is one of my major concerns with the proposal, Mr. Chairman, because by de facto repealing regulatory tailoring, subjecting Category 3 and 4 regional banks to one-size-fits-all standards that currently only apply to large GSIBs, discouraging securitization, which is the private sector solution for dispersing risk, eliminating the use of internal risk models, and transitioning the industry and regulators toward only a standardized framework, actually would push the industry into a smaller and more concentrated-looking industry, and as a result would, in my view, actually increase systemic risk and decrease market competition. Do you share that concern?
I think it's a real concern. And again, I think that's part of what goes into my thinking, certainly, about the proposal and where it needs to go.
Well, given all of these concerns, we hope that you can commit to reproposing the Basel III endgame, and we strongly urge you to take that into consideration. With that, Mr. Chairman, I
Gentleman from
appreciate the
Massachusetts,
time.
Mr. Lynch, is recognized for 5 minutes.
Good morning, Mr. Chairman. Welcome. Good to see you again. I want to go a little deeper into the commercial real estate issue and the potential impact on regional banks. This morning, Scott Rector, who's a member of the New York Fed Board of Directors, released a white paper on CNBC this morning describing the trillions of dollars in commercial real estate loans that will come due over the next couple of years. He described it as a, quote, slow-moving train wreck, close quote, and for our regional banks. He went on to predict that it will force a little over 500 banks, thereabouts, to either fail or consolidate. He also described what he termed as a doom loop where, similar to Silicon Valley Bank, when people lose confidence, when depositors lose confidence in the bank, they pull their money out and we end up in a bad situation. Now, I don't believe everything that I read or hear, but in Congress we do tend to repeat it. And I just wanted to get a sense from you. I am seeing in my own city of Boston, we've got 20% vacancy rates in office space. We rely on that for a lot of the tax revenues for the city. But I'm just wondering your thoughts on that issue. Is there a systemic concern here, or is this isolated? And might lowering the interest rates help some of those banks? Because I hear from my developers in our area that no one's lending. So, yeah, crack at it.
Sure. So I haven't seen that report, so I can't comment on it, but I can comment on commercial real estate. So we've had a secular change in the economy, which has left office rentals in many places, office buildings. The demand for them is significantly lower, at least temporarily and perhaps for a long time. And also the same is true for downtown, in some places, downtown retail that's associated with office workers. So it's a shock to the system, and we've known this for some time, and we've gone through the commercial banks in the United States, and so have the other regulators. We've done it jointly and identified the ones that have high concentration and are going to need to deal with that. And so we've been in contact with those banks and talking to them about how they're going to deal with this, how are they going to absorb these losses, do they have enough capital, do they have the liquidity, do they have a plan to do this, and is it consistent with their lending practices and that kind of thing. So it's going to be something we work through over a period of years, and I do think it's slow moving. I think that part of it is right. You ask about 500 banks. I have no idea about that number, but certainly there would be some banks, probably smaller ones, that have these high concentrations. It's not the very large banks. It's really a manageable thing at the large banks. So I think that's what it's going to be, and it's a serious problem, and more serious in some locations and jurisdictions and with some banks than others, but it's one we'll be working through, and I think that's how I would think about it.
Does you know, the Silicon Valley Bank situation, Signature, you know, the money moves so quickly in those cases. It was instantaneous now. The velocity of money moving out of those banks really, I think, in some ways contributed to their failures. Are we looking at anything technologically that might be able to address some of that or mitigate it?
Sure. So we also, after Silicon Valley Bank, we got in contact with and worked with financial institutions that had high concentrations of uninsured deposits, and many of them have greatly improved their liquidity position. So that's the thing that we're working on.
Okay.
As you probably know, we're also working on some liquidity rules which will strengthen our framework of liquidity rules, but that's something we haven't proposed yet.
Let me ask you something off topic. So we know that Russia has about $300 billion in U.S. We've frozen assets, Russian assets of about $300 billion between U.S. and European banks. You want to comment on that? What I'd like to see is us give that to Ukraine, to be honest with you. I know that's a very simplistic idea, but I'm just wondering if there's any historic example that we could look to if Congress has to take the necessary steps to redirect that money to Ukraine so they can feed their people and fight that war.
This whole area of sanctions and foreign assets and things like that is really controlled and directed by the administration, by the elected branch of government. All we are is just a technical seat around, in the back row to help. We don't make those decisions, and I wouldn't comment.
I know you're big on history. I was just wondering if there was any examples out there that we might provide guidance to us.
Gentleman's time's expired. The gentleman from Texas, Mr. Williams, now recognized for 5 minutes.
Mr. Chairman, thank you for being here. When I'm back in my district in Texas, I'm constantly hearing concerns surrounding the fundamentally flawed Basel III. We've talked at length about that today, endgame proposal. These concerns are not only coming from my banking industry, but also from farmers, ranchers, small business owners who are concerned about how this proposal will impact the ability to access capital in the future. And to all of us, did it not raise alarms? And we've heard about the 97% today of public comments on this proposal, and they all came out negative. And Americans across all sectors are worried about the disastrous implications that will follow this proposal and have tried to make that known to banking regulators who continue to ignore them. It is time for federal regulators to take these concerns seriously and, quite frankly, just, I believe, start over. So I urge you and your colleagues to rethink the misguided policy and do what is best for American people, small business, Main Street America, and withdraw the Basel III proposal. Now, Chairman Powell, given the concerns raised by financial institutions, again, farmers, ranchers, et cetera, and other communities across the country, can you elaborate on how the Federal Reserve is responding to and addressing these comments that are mostly negative and request modification, delay, or complete withdrawal of the proposal of Basel?
Yes, I will. So we're in the process of reviewing the comments. They were quite voluminous. They were very detailed, a lot of data, a lot of analysis, and that's just what we wanted. So we've got those, and now it's a lot. It's hundreds of them, and we're going through them, and we're just at the point where we're about to begin then turning to the question of what changes should we make to the proposal. We haven't made any decisions. We haven't really gotten to that stage yet, but we're getting, remember, we only got the comments less than 2 months ago, so it's just we're at that stage. So we're looking at it. As I mentioned, my own view is that there will be material and broad changes to the proposal as we go forward, and we haven't really made decisions yet, though. It's just a little bit early for that.
We're glad you're looking at it. I want to bring up the long-term debt proposal rule, which would require banks to issue enough long-term debt to cover capital losses. Now, Congress worked to pass legislation requiring the tailoring of regulations to the size of a financial institution. This is meant to protect banks of all sizes and allow for families and businesses in my district to have options to meet their lending needs. So the Fed's long-term debt proposal would undo any sort of regulatory tailoring and puts into place a new long-term debt issuance requirements on regional banks, which require these banks to issue long-term debt both at the parent holding company level and the IDI level. Now, these regional banks will face increased costs when they are already facing towering regulatory burdens from this administration, and those are the banks that people do business with. So, Mr. Chairman, do you believe that this proposal rule goes against the requirements of S 2155 the Economic Growth, Regulatory Relief, and Consumer Protection Act? And will you commit to exploring this issue further with your colleagues?
So we're committed to implementing 2155. We believe that the regulatory and supervision regulation and supervision of banks needs to reflect their size and activities, and that's something we'll be considering as we go forward with this.
Okay. Short time I got left. Americans continue to feel the pain from runaway inflation created by the Biden administration as everyday costs continue to stay expensive. As you know, I'm in the car business, and inflation is just running rampant in my industry. And the irresponsible and partisan American Rescue Plan forced through Congress by Democrats only made inflation more of a problem. And now American families and businesses have been forced to deal with runaway inflation for 3 full years now, which has caused some major hardships. So quickly, the ARPA injected nearly $2 trillion of deficit spending to our already struggling economy. And how does this type of inflated spending, combined with economic headwinds like supply chain shortages, impact the economy? And doesn't this kind of reckless spending actually fuel the pressures of inflation?
I think there are a lot of causes of the inflation we've seen. We saw this inflation everywhere in the world. So the reopening of the economy after with very strong demand and constrained supply, you saw inflation in all the advanced economies. It was a little sharper here at the beginning. I think there's a role for monetary policy in that. There's a role for fiscal policy. There's a role for the pandemic, a starring role for the pandemic. Our job is to deal with it, and that's what we've been doing.
Well, thank you for always keeping small business in Main Street America in your calculations. And with that, Mr. Chairman, I yield back.
Gentleman yields back. Gentleman from California, Mr. Sherman's recognized for 5 minutes.
Mr. Chairman, I want to thank you for recognizing in your opening statement the importance of immigrants in keeping costs down. And I want to thank you and the administration for what has been an excellent 2023 economic report. We've got 3.1% economic growth, by far the best in the developed world. Headline inflation, 2.4%. And that's not a little blip, a 1-month number. That's for the whole of 2023 and compares very favorably with the pre-pandemic portion of the Trump administration when we had inflation of 3.5%. My goal here is to convince you to cut more and sooner because for a number of reasons. The first is that I know, if you ask a constituent, they want zero inflation and zero unemployment. You know that we can't have that and have concluded that the economy works best with a 2% inflation rate target. But I've looked at the history of that 2% number. It seems to come from Auckland from the 1980s. And there's a lot of arguments that your target should be just a little bit higher. Larry Summers recently produced a study arguing that the cost of money is part of the cost of living. So we have this weird paradox where you're trying to keep the cost of groceries down by raising interest rates, but as the ranking member points out, the big issue is housing. And your measure of inflation seems to treat all Americans as renters, even though 2/3 are homeowners. So
big pop on bonds.
When interest rates go up, that's an increase in the cost of living for anyone with an adjustable rate mortgage, anybody looking to buy a house, anybody with a home equity loan. Obviously, we would cut interest rates a little sooner and a little more if your target was something closer to 2.3%. So I'll ask you, is there substantial economic analysis that argues that your target rate and the economy would work better if we had a slightly higher target than 2%?
Not really, no. What's happened is
New York Community Bank seeks capital raise.
2% has become the global
they might be
standard.
going.
It's a pretty durable standard.
NYCB may be dead.
That it's a problem for the United States.
They're seeking a capital raise.
We're at 2.4%.
Stock's only at $2, so
Headline
play it
inflation.
accordingly.
I would ask leave to add to the
NYCB
transcript of
seeking
this
capital
hearing
rate. That's why the
numerous
bonds are
articles that argue for something between 2.3 and
Literally,
even 3%.
bonds are moving
I'm not
off the
arguing
banks
for as
there.
high as 3%. Let's look at
I was
Basel.
expecting that, but I don't
There's
wanna
nothing
chase it there.
free
Yeah,
here.
ZB's popping
If
off the bank.
the standards are too high, we lose economic growth. If they're too low, we have bailouts and bankruptcies. But I think everybody agrees that the standard should be well crafted. You've got a system where everybody drafting this is well-dressed
Equities
and
are
focused
still
on
up, but
Wall
this is all
Street.
dude, I
And
think
you've
you
got
can feel it now
Basel
with
rules
bonds.
that discriminate against
Maybe that's what gold
Main
it could
Street
be,
and for Wall
honestly.
Street. I'll give you some examples.
Maybe that's what gold was
65
tipping
basis,
out.
it's
But literally, bonds are
65% if
catching
you're
a
a
bit off
publicly
of that.
traded
See how long
company.
it lasts for.
Make a loan to a publicly traded company. You make a loan to CalPERS, they're not publicly traded, without objection, I'd like to put in their
Yeah,
article into the
NYCB
record.
halted. That's big news. Again,
And
I've always
so
told you guys,
they're,
if they
in
go to
effect,
raise capital,
going to have a
usually after
tougher
getting
time
clapped,
getting a
that's,
loan.
like, really
the local
bad.
pizzeria is going to have a tougher time getting
Again,
a
that's
loan.
literally what happened with
You've
SVB.
got in Basel III ignoring
I mean, the odds of a
mortgage
crash just got really
insurance,
high if
which
they need,
obviously
depending on how
makes
bad
the
they
loan,
need that capital.
more prudentially sound for the bank, and is very necessary for first-time home buyers. And you've got a system where if you make investments in long-term bonds on Wall Street and you put them in the hold-to-maturity category, you don't have to recognize the losses and mark-to-market.
It's funny he's talking about this as
So
this is happening.
I hope you'll look at these in terms of the competition between Wayne Street and Wall Street for bank loans. Finally, we go to clean energy investment. Can I count on you to personally look at the paradox where Basel III treats clean energy tax credits much more harshly than low-income housing tax credits for no ascertainable reason? Can you?
Yes.
Thank you.
Gentleman's time has expired. The gentleman from Georgia, Mr. Loudermilk, is recognized for 5 minutes.
Well, thank you, Mr. Chairman. Mr. Powell, thank you for being here today. I'm concerned with the small dollar credit for businesses. As a former business owner for over 20 years, I can attest that as the small dollar business credit becomes more expensive and less convenient, businesses are going to turn to credit cards and other alternative financing for business purchases. These inevitably result in even higher costs, which goes down to the consumer, which means that they're going to pay more for the services or the products.
Yeah, even
But in
gold,
February
literally
this
gold
year,
hit a new
total
high
credit
off of
card
that.
debt reached a record of $1.7 trillion. According to Intuit's Small Business Index annual report, average monthly credit card balances were 27% higher in 2023 than they were in 2019. What do you view as the driving force behind these record high levels of credit card debt?
Part of it would be growth in the economy, so that'll be part of it, just that it's a bigger economy and a bigger number. I'm not sure what that is. You know, as you know, people had lots of extra cash during the pandemic from forced savings. They've spent that down, now they're borrowing. I'm not sure.
So, if there was a rule to force banks to tighten lending, do you think the rule would drive businesses and consumers to alternative forms of credit?
I do. I think, you know, if you raise lending costs for banks, then at the margin that will make non-bank lenders, you know, they'll get some of that business.
And if it becomes more complex or less convenient, then businesses will turn to these alternative forms like credit card. I can tell you that from experience. Yes. Well, I've called for the withdrawal of the Basel III endgame proposal entirely. Will you commit to an analysis of how bank
equity
capital
firms
proposals
on
like
possible
Basel
sale.
affect small business credit access and the small dollar lending before finalizing such proposals?
They're seeking to raise capital in a bid to shore up confidence.
Well, I commit to that. Let me look into that. I don't want to make a commitment that I'll undertake some big study, but we'll look at the issue.
Do you feel it's important that we do have an understanding the effect it's going to have on small businesses? The backbone. It's the bloodline of our
economy. They create the jobs.
Walmart
I do
52-week
agree.
highs.
Okay. The chairman asked you for your thoughts on withdrawing or reproposing the Basel III endgame proposal. Have you specifically discussed withdrawing the proposal with Vice Chairman Michael Barr or the other governors?
So I don't want to get into our internal doings. But I will say that I understand it
Fed
is
Daily making comments
a live
too.
option. Again, we're not at a stage
know
of
if it
being able
outweighs
to
Powell,
even
but
have
again,
that
Powell,
discussion yet because
he's been
we're
hitting
not
the
really,
headlines, but
we don't have
not anything
we've got to decide first what changes do we think are appropriate.
Again, I think
And
that
that'll take a little
NYCB
time.
news
And then the question will be
an effect
reproposal.
on bonds and gold
What
is
I
a
said
little
is,
bigger there.
when we get to that point, if reproposal is the right thing to do, we're not going to hesitate at all. It's a perfectly live option.
All right.
NYCB is back
In the
unhalted,
current environment we have.
down 13.
In politics in this country, there's not a lot that you find bipartisan agreement on, but I think you could find some agreement in withdrawing that proposal. Can you explain the importance of broad consensus at the Fed on proposals like B3E? Are you concerned with recent trends of disagreement among
Is it
board
halted
members
again?
related to major proposals?
I think it already got
So
halted.
I think we're going to get to broad consensus.
KRE
at the
dying
Fed.
too.
I do. I think it's very important. This is
Yeah, the whole
in our
index.
culture.
Yesterday,
that we,
last
we
time
try to
NYCB
find
died,
common ground.
KRE held
And,
up.
We've been able to do that.
So
in
I think they're
the
all getting kind of
regulatory
affected
space,
there.
and I expect we will be here as well. And
So,
I'm committed to that.
Are
Could
big
it be
banks going
that
down a little bit?
We're seeing this level of disagreement because of extreme measures that are being taken now that may not have been taken in the past. I mean, a total difference of opinion and understanding and philosophy regarding free market economy.
I won't speculate, but I will point out that 4 of the 7 governors during the open
You could
board
probably play
meeting at which we put it
KRE
up for
or
comment,
FAS if you
expressed
want.
real
I don't think
concerns, very
NYCB, I
specific
think it's
concerns
very
about the
difficult to
proposal
play to
and-
the downside.
And said we would look
Very
at the comments
low-
when they came in, and that's what we're doing.
Low
You feel
return,
that
high
they
risk.
have validity in their concerns?
I was one of the 4, so yes.
With the few seconds I have remaining, there's a recent report of FinCEN working with financial institutions to query legal purchases made by American citizens. Has the Federal Reserve been instructed within the past 3 years by Treasury or anyone else to search Americans' legal transactions?
Not that I know of, no.
Okay, thank you. I yield back.
Gentleman from Illinois, Mr. Foster is recognized for 5 minutes.
Thank you, Mr. Chair, and thank you for being here. As Ben remarked, there's a near-term emergency to get the $60 billion in military assistance to Ukraine. And separate from that, there remains a longer-term need for reconstruction assistance to Ukraine, which the World Bank estimates is somewhere north of $400 billion. Now, at the start of the Russian invasion, the free democracies of the world froze roughly $300 billion in Russian currency assets, primarily at European banks and financial institutions. And the Biden administration and many of our allies have recently taken the stance that those assets should be leveraged somehow to provide reconstruction resources to Ukraine. I support this concept, and I believe that additional action should be taken to ensure that we hold Russia accountable. But there are real concerns on the impact that this might have on central banking system, on the primacy of the dollar, the euro, and so on. And so my question is, have you seen just the act of freezing these assets and not seizing them, but simply freezing them? Have you seen deleterious effects on the primacy of the dollar, the confidence in the central banking system? Is there any visible downside from the act of freezing that's visible so far in the 2 years since we've done it?
I can't point to any. I can't point to any.
Okay, so that's an interesting observation when we think of taking the additional step of actually seizing them, that at least so far. Because,
Bonds are
to my
climbing
mind,
back up,
having
so
them
watch if
frozen
it breaks
is
back
as
up again.
violent and as violent
Again,
as
I think we're going to
seizing
need
them
more
outright.
updates on the banking thing.
That's interesting that so far we haven't seen that.
KRE's
now, in
regional
terms of
bank
the
ETF,
Basel
FAZ
III
is like a bank
and so
share
on,
inverse, but I don't know if
there
FAZ is
a,
related to the regionals. I think that might be
there's a
related to the big
frustration I've
banks.
had
I would
over
target
the
the
fact that
regionals, or you could
directionally
play
the
bonds.
effects of
I mean,
these are
again,
clear,
maybe
but
this
the
is what
magnitude
gold
of
was
effects are not.
sniffing out.
For example, if you talk about the effect on the
We're gonna have
prices
to
seen
see,
by
though. It's
derivative
very, very
end users
interesting.
of increased capital requirement.
SPY
Directionally,
could
it's clear.
ignore
If
SPY
you
again. If
raise
bonds
capital
may get a
requirements,
big bid
banks
off of it,
will
SPY might end
withdraw
up
from
liking
these
it.
markets
Oil on the
to
low.
some extent. Other
Yo,
players will
CVX.
step
I don't know
in
if it's oil or is
partly
that
and take
CVX
up part
in
of the
general.
slack, and
Yo,
the spreads will
CVX
increase
dying.
and so on.
CVX,
Is the data
check
that you've
news on
collected
CVX.
enough,
I don't think oil is
for you
dropping.
to actually estimate the magnitude
I
of
guess
these
oil's
effects
coming
instead
down a
of
little bit.
simply the direction?
I think it's really hard to get down to the micro
USSEC
level
votes
and
3 to
and
2
try
to
assess
adopt
that,
climate
because
risk
you're right, there would be
disclosure rule.
multiple effects.
Exxon,
But you do know
Chevron,
that- you
Guyana
know the
arbitration
direction,
to
you know
take
what si-
place
the
through
science.
ICC.
That's right, but, you know, if you can
Yeah,
avoid
oil's came
financial
down a little.
crises
I
with a
mean, oil's down almost
microscopic
$1 off the high.
increase in prices seen by end users, that's one thing. If it's a very large difference in the price, so the magnitude matters a lot.
See,
when
as
you're
long as
doing
it
these
bounces from
balancing
there,
things.
it's over.
And,
I'm not too
and
sure
a
what
lot
the
of it
arbitration
depends
is.
on, actually, you need a model for how the different market players will react. And is that really not going to be in the scope of the analysis that you anticipate from the quantitative?
I believe we have done some
It's
work
still
on
dropping,
that.
though.
And I think the banks and other participants have done work on that as well and come up with a range of answers.
I also see the
But
SEC
you know, this is
adopts climate rule.
I mean, there are just an awful lot of variables in these
expected.
equations, so it's hard to say with any confidence. I mean, that's why it's
Chevron
it's hard
attempted to
the
circumvent
job of
Guyana
deciding the
contract
precise
rights.
level of appropriate capital is a hard one.
Yeah. And now with
Another
with 10
candle.
years, we've had
Chevron's
two
still
major
dropping.
crises,
Regionals
with
are
both
still
the
going
fiscal,
lower. I don't know if
and
NYCB
monetary
is unhalted.
response.
It is.
Are there the lessons that
267
you
down
can learn now
17.
that,
It may get
I
halted
believe,
again.
and it seems like your testimony indicates that we're kind of approaching back to normal now. And we've seen in the crisis of 15 years ago, we
See,
saw
it's not
what
halted
many
yet. It
people
lasted
thought was
longer than
an
a minute.
inadequate fiscal response, that the fiscal response was, less than half of the output gap. And we limited by political will to do things. And then, of course, you were limited by the zero bound in what you could do for most of a decade, and we had a long recovery. And the comparison, to the COVID recovery
Gold's
has been
coming
very
down.
sharp,
Bonds
and
are
it's quite
still holding.
remarkably put us right back on that track. Are there any lessons that you've sort of drawn about
NYCB, it went a little lower there.
importance of getting
So
the
again,
right
still hasn't
balance
been
of
halted. It's
fiscal
fighting
and
on this
monetary
candle, but
response to these
then
shocks?
Chevron, big candle. Netflix on the high. Micron
so we
going
think
up.
about that
I mean, S&P still
a
near the
lot,
high.
and
The Nasdaq's
I
right
think
under
it's-
1% green on the day.
I have to start by saying it's too soon to really tell, because the answers you would give today, the picture looks very different than what it looked like a year ago. And so, and a year from now, we'll be looking back going and saying, we've learned so much more. So I think the pandemic is still writing the story of our economy right now, and we should just be prepared to be surprised with the next chapter, as we were with 2023, the very strong growth, the sharp decline in inflation while the labor market remained very strong.
Gentleman's
Very
time's
few
expired.
forecasters had that, but we can talk about it.
Gentleman's time has expired. We'll now go to the gentleman from Ohio, Mr. Davidson, for 5 minutes.
Thank you, Chairman. Chairman Powell, thank you for being here today and for your testimony. I'd like to start off, first of all, by completely echoing everything Congressman Barr said. A lot of us have talked about Basel III Endgame, and I think Congressman Barr kind of nailed the thought process. I do hope you'll kind of withdraw that and take the comments you've heard from here and from so many others about the hazards with the current approach. But I'd also like to address one of the other practices by the Federal Reserve, and it's the practice of paying interest on excess reserve balances held with the Fed accounts. It's my strong belief that rewarding banks with returns for taking no market risk actually harms our economy, and it discourages financial institutions from lending money into the economy. Instead, they park it at the Fed. This has little to no impact on very large corporations, but it can have a crippling impact on small and mid-market firms. And we especially saw this in the long recovery as Dodd-Frank was implemented in the Obama years, transition to the Trump years. We changed some of that mindset with a lot of other policies, but we saw a strong surging economy. So our country would pay a price for this market distortion by the Fed in two ways. First, they're unable to obtain loans at competitive rates because the money's sucked out of the market. Frankly, a lot of them don't even have access to lending except through bank capital. So it forces them into other forms of capital, equity capital, and others. Second, they ultimately pay higher rates whenever they have these alternative means of capital. And so today I've introduced a prohibition on the IOER Act, which would prohibit the Federal Reserve from paying interest on excess reserves. By eliminating IOER, we can begin to return our economy to the undistorted free market economy it's supposed to have. The alternative is you could simply raise requirements. We see some of those moral hazards when you do it across the board with approach like Basel. So
I wonder what
what's
he's
your
gonna say.
case for why you should keep
Interesting
paying
bill,
interest
not
on excess
bad.
reserves?
Well, as you know, we don't see the
And then
the
SPY
downsides
hitting a
that
new
you're
high,
talking
my
about.
friends.
Banks have a
Again,
cost
gold
of
came
funds.
down
and
a
they
little
have
bit.
what
A
they
lot
can
of names
earn,
are
and that's
going
what
up.
really matters,
Airbnb
is the spread.
52-week
And if
high.
they wanted to do it, they could simply
Chevron
buy
down
treasuries on their
5124,
own,
so
and they
you
can
may
do
get
that
like another like
independently.
10 points, I think.
I suppose they can independently keep it
They're
at
like
the Fed.
5128
They don't
to
have to buy. They
5130
don't even
now.
have to put it on their own balance sheets
That'll
in the
take you to
same
the
way. They've
previous
got
lows
immediate
there again.
liquidity with Fed over
These are all recent levels,
overnight
so
account. So I don't see
take
how
them with a
that's
grain of
different
salt.
than what they could already do.
What I was
Yeah,
gonna say
NASDAQ
was,
is above 1% now.
Banks can earn
Russell's
a much
below.
bigger
SPY's about to
spread
go
by
1%,
lending
and
to
then Dow's
corporates. So
0.59.
their incentive to lend is the same as it always was.
NYCB
This doesn't
halted
affect
again?
that. You know, really, it's their
Yeah, I guess it
they
just
have a
dropped
cost of
almost
funds
another
and they have the
10%.
ability to have
Down 23.
reserves, but you know that's not going to. They're
Netflix
not
on
earning
the
a
high.
profit on that. So or a big one. They can earn a much bigger profit.
Again, BNB
by
keeps
lending
hitting
to small
52-week
corporations.
Well,
highs.
speaking
That's
of profit,
beautiful.
I mean, the Federal Reserve isn't officially supposed to be a
MO,
for-profit
Intel
corporation,
too.
but you
Intel's
are
at 45.
supposed to pay
Pfizer coming down a
for
little
your
bit.
operating
Again,
costs
SPY's
off
still
of positive
going.
cash flow. And right now, the Fed doesn't have positive cash flow. In fact, the Fed has negative cash flow. So it's not entirely unrelated that the Federal Reserve operated at a $114.3 billion loss in 2023 and currently is carrying a $133 billion loss on its balance sheet this year. So it's, not the right approach, I think, to be paying essentially that much out in excess reserves to banks that are holding capital in the Fed when they could be deploying it into the market. So right now, the interest you're paying banks and money market funds exceeds the income you're getting on the $7.6 trillion balance sheet assets that you have, to the tune of $133 billion asset. So, effectively, the Fed is operating at an operating loss. So what's the path back to cash flow positivity for the Fed?
As you know, we've, for many years during the QE large balance sheet period, we've contributed way over $1 trillion in net earnings to the bank, which to the Treasury Department. So you can't look at the loss without mentioning that we've been, giving effectively $100 billion a year in profits every year to the Treasury Department. So the other side of that is when we raise rates to do the job you've assigned us to get inflation under control. When we do that, we absorb paper losses. It has no effect on our operating, the way we operate the Fed. And if we retained all the earnings we have, then it wouldn't be a problem. But we don't do that. We give that money to Treasury.
Thank you. And I think the last thing is I just encourage you to halt any effort to develop a central bank digital currency. It doesn't need designed, developed, and it certainly doesn't need established. I yield.
The gentlewoman from Ohio, Ms. Beatty. Mrs. Beatty is recognized for 5 minutes.
Chairman, and thank you to our ranking member, and thank you, Director Powell, for being here. Let me start by saying thank you for the monetary report. I've had a chance to try to peruse it, and there are headings in there that says the labor market remains strong. You'd probably agree to that, your report.
I would.
Let that say that's a yes. Also, it talks about unemployment rates being low by historical standards. You'd agree with that? It also states that the global pandemic played a huge role with the inflation rate,
pause
and
wait for the
inflation
rhetorical
rates
answer.
are on the decline. It's reported in several charts in here, and also substantiated by the Federal Reserve of New York.
Bro, high ticker is ripping.
Michigan
Again, we're just still hugging the
surveys
highs.
that are read. It also talks about job gains and uses the word robust.
Chevron coming back
jobs.
down.
So I want to thank you for educating us on that. And Mr. Chairman, I'd like the record to show that all of this also resulted during the Biden-Harris administration of making sure. So often we hear in this committee and other committees about what the administration is not doing and what our economy and jobs look like. Now let me move on to something that's very dear to me, and want to thank our ranking member for bringing it up, and that's the lack of affordable housing, which is one of the primary things that I hear about when I'm back home. I'm on more panels to try to explain what you do, oftentimes what we don't do, and why we have this. While I know that interest rate hikes have successfully brought down the inflation, rising rates have also had an adverse effect on the cost and the pace of housing construction.
Coinbase, Ripin.
Are you concerned about the effects that interest
and
rate
Micron
hikes
too, and
are
again,
having on
Intel's
the
up
cost
4, almost
of
5%.
financing new construction? And the second part, how do you expect to control for long-term housing inflation that might have a potential rate cuts, how it might affect that?
So our policy to bring inflation down is to raise interest rates, and that works through several channels. One of them is probably the most important, is interest-sensitive spending, and within that you have housing and durable goods and things like that. So, you know, during the early days of the pandemic, the housing industry was about to all go bankrupt, and all of the facilities that we did really supported that industry through their critical time. When we're going in the other direction, when we're raising rates, housing is definitely affected. We understand that. It's not something we want to have happen, just it is the reality that housing will slow a lot when you raise interest rates. We've done that, and we're doing it for the longer run benefit of the people we serve to restore price stability, which is beyond value for people to have price stability. We get it that in the near term, that's higher rates, that's fewer sales, people are locked into low-rate mortgages. We get all that, but we got to do this because
down
it'll benefit
32 now. They have to halt to that again.
And I have a great appreciation
it might be dead
for that. But
again, they're doing
also
an equity
when
raise.
I
That's
go
it.
back home
The
to
last time,
district,
the last time this
what I
happened was
hear a lot
SVB,
from
and even then,
agencies
similar
and
reaction. The question,
individuals
I mean,
who
do
work
people
with
pull their money
advocacy
out
groups
from
that the effects of
NYCB? But
interest
again,
rate
the real
hikes
issue
are
is their
not
commercial
going
loans.
equally to all American households.
I think it's
So
already halted
we hear
again.
that, and there's no doubt that low-income and minority communities are hit the highest or the hardest by these monetary policy changes. Black households and business owners have historically faced challenges with home ownership and access to capital, and they're disproportionately impacted by the rate hikes. Does the Fed, do you have anything that you could help me with this dilemma and how we can better achieve economic goals in a more precise and equitable manner?
So I think it's working. You see inflation coming down, and that's why I do think it's likely at some time this year, if the economy, proceeds along the path we expect, that we will begin to reduce rates. So that's really the path that we're on, and I do hope it works out that way.
And when you say, I don't have a lot of time, but when you say economy, what does that mean? Helping poor people and Black people get more jobs, more money?
So our forecast is for continued strong growth, a continued strong labor market with wages going up and also with inflation coming down. So that kind of an economy.
Okay, my time is up. I yield back. Thank you.
The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman McHenry and Ranking Member Waters, for holding this hearing, and thank you, Chair Powell, for being with us today. I'd like to start by discussing the Independent Automated Teller Machine Owners or Operators section of the Bank Secrecy Act Examination Manual. I want to ensure that financial institutions will not be discouraged from providing banking services to the independently owned ATM industry. In 2021, you made it clear that the industry does not automatically present a higher risk for illicit finance. I'd like to know what efforts have been made by the Federal Reserve to fully communicate that position to financial institutions across the country.
I will have to get back to you on that one.
All right. Thank you. Well, and so I might just add, listening to independent ATM operators over the time that I've served in Congress, I've come to understand that unfortunately, and it was in the Bank Examiner's Manual up until just about a couple years ago, these operators were identified as being extraordinarily risky, and that was causing them to be debanked in many cases. So I do hope that you'll take a look at that and make sure that we're communicating that to financial institutions and, most importantly, to the regulators. Chair Powell, Tennessee is home to over 1,000 foreign-based businesses that have chosen to invest in our state and create more than 160,000 jobs. These jobs are reliant upon cross-border financing provided by global banks, including foreign banking organizations. The Federal Reserve has long maintained the principles of national treatment and equality of competitive opportunity when regulating foreign banks and assessing them based on their U.S. operations. Are you still committed to these principles?
Yes.
And how will these principles be reflected as you move to finalize the Basel Endgame proposal?
So we have received a whole separate set of comments from the foreign banks, and we'll look at those, very much in that spirit and make appropriate changes.
Thank you. Chair Powell, the Basel III Endgame will incentivize firms to transfer credit risks off their balance sheets. One avenue for such a transfer is synthetic securitization, the framework of which must be approved by the Federal Reserve. However, it is my understanding that there is a substantial backlog of reviews and approvals of these securitization frameworks. It is concerning that the Federal Reserve is directing the risk transfer, yet also impeding it, in my view. Can you comment or can you commit to reviewing this approval process and taking steps to reduce the backlog of pending securitization applications?
So, as I understand it, these transactions are becoming popular right now. There's a lot of appetite to do them, and we're not stopping them. We're just being careful because there were similar things that happened about credit risk transfer during the global financial crisis that didn't actually work out. So we want to make sure that these structures really do actually durably transfer, and we think that they do, but we just need to be careful because the last experience with these was difficult back in the last crisis. So it's just something that we're not intending to slow these down, and I think we'll try to get through it.
NYC back
Is it a lack of available resources to apply to the approval process, or is it an intentional slow walking to make sure that every I is dotted, every T crossed?
I don't actually know, but I do. What I heard was, what I've been told is, we're not stopping these, but we're going to be careful with them and just be absolutely careful that they really do transfer credit risk in a durable, kind of sustained way, and that's the thing. And I don't think it's an intention to go slow or to have a backlog. It's just, and so I don't know what the staffing issue is. We'll check.
All right, thank you. As the Federal Reserve continues to consider proposals designed and debated in Europe, such as Basel III, has the Federal Reserve's Supervisory Climate Committee or the Financial Stability Committee had any discussions regarding the adoption of ESG risks in capital requirements?
I don't know.
Has there been any discussion in other committees regarding the adoption of ESG risks in capital requirements?
Any discussion, I really don't know. Let me say that's not something we're considering, but when you ask me any discussion, I don't know.
It's not a priority in capital requirements.
To put it mildly, yeah.
Okay. Thank you. I see my time is running out. I appreciate your answers, and any further light you can shed on those matters, I'd appreciate. I yield back, Mr. Chairman.
The gentleman from Illinois, Mr. Caston, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Chairman, for being here today. I want to start just with following up on the exchange you had with Mr. Sherman. As I think you know, I led a letter with 106 of my colleagues with concerns about specifically the clean energy tax equity provisions in Basel. I appreciate your commitment to look at that. I wonder if I could just put a little bit of a sharper point on it. Can you look at that before the rule is finalized and potentially issue some sort of an addendum to the rule? The concern I have is the number of banks who are a little bit frozen right now, waiting for some clarity on that, and I'd prefer we not slow down the rate of clean energy investing in our country if we don't have to.
I don't know. I mean, I think there's a proposal, and we're well aware of the commentary, and we're going to react appropriately. I don't know that we can pull one thing out of line and deal with it. But we're making good progress, and I think we'll be back reasonably soon with some answers.
Okay, well, time is of the essence. Appreciate anything you can do. Second thing, good thing about
Foot Locker, they're breaking new lows. Again, this was bad earnings.
Congresswoman Garcia here.
But they were just staying pinned.
I really appreciated your comments in the 60 Minutes interview last month when you
NYCB
mentioned that
down
immigration
40,
is a big part of the story of the labor market
again,
coming
right
back
after
into
it opened.
balance. Now, generally, and correct me if I'm wrong, more immigration is generally going to ease inflationary pressure. Is that all else equal? Is that a safe characterization?
It's probably closer to neutral, actually, because people come in, they also spend, so it's not clear that immigrants coming in. They add to GDP.
Okay,
They
so
also-
either we're going to get economic growth and/or
Right,
downward
so
pressure
there'll
on
be
wages.
more workers, so that wages might
Headlines
might
on the
go up a little
Apple
bit
Unity
less, but
thing.
At the same time, they're also
Troy
spending.
posted
so
something on that a
we had
little
this
bit ago.
conversation. It depends on what you assume, but I think it's better to just assume it's sort of broadly neutral from an inflation
Okay,
standpoint.
so I guess, and maybe you've answered the second question, but given as you all are using the Census Bureau data that is more conservative than the CBO data, and obviously we're all making estimates in the future, can you speak at all to whether your forward views on economic growth and inflation, how sensitive are they to your assumptions about that census versus CBO data on what the actual level of immigration is to the country right now?
I think the CBO assumptions are meaningfully higher and would affect growth and would be part of the explanation why growth was strong last year, and would be a reason to expect. I mean, it's not the main reason, but it would definitely add to growth this year. And I wouldn't say that we accept one version of the other. We study the CBO numbers carefully. We're just trying to get to the right answer. And I think the CBO shows, and they say so, stronger growth, higher growth, more people. I don't know the per capita growth goes up, but the absolute level of growth goes up.
Okay. Last question. I think there's a lot of good news in the monetary report that you all just issued around wage growth. We've seen, the lower quartile of earners starting to close some of those historic gaps. We've seen minority groups and women start to close some of those gaps. What I didn't see, and I don't know if this is because you all haven't done it or I just didn't read closely enough, have you seen any gaps regionally within the U.S.? Are there parts of the country that are seeing stronger wage growth than others?
There are. I don't have that off the top of my head. I want to go back and if I can just, when I talked about immigration, I think that the immigration story for last year was part of the positive supply shock and was part of the reason why inflation came down. I was really asking the question over the longer run.
Fair enough.
And there, I think it's more
Fair enough.
be neutral.
I appreciate that. I want to just close on this regional piece because the Atlanta Fed, which is the best I could find that looks to do at least some of by census regions, that as I look through, there's and you look at which regions are consistently running above. I think that New England and the West are consistently showing wage increase above average, and the West, South, Central, Texas, Oklahoma, Arkansas, Louisiana are consistently, I think going back to like July of 2022, consistently seeing wage growth below average. And I appreciate you're not going to wade into a political question here, but those are all right-to-work states where it's harder to unionize, where it's harder to organize. And what I'm wondering is, without asking you to opine on policy, have you all at the Fed done any analysis that says, as we look at when there are gains in labor productivity, does that gain in labor productivity, is it more likely to accrue to workers in those states where there's a stronger union presence, easier to organize, and more bargaining power for labor as opposed to capital?
My guess is there's plenty of research around that area, not necessarily at the Fed, but we'll take a look and come back to you.
Okay. All right. Thank you. I yield back.
Yeah, bonds are curling back up.
Now go to the gentleman from South Carolina.
Again, NYCB unhalted and halted again.
And thank you, Chairman
These
Powell,
two
for
have a
being here today.
connection.
We continue to appreciate your work and the work of the Federal Reserve on behalf of the American people. In August of 2023, the Federal Reserve, FDIC, and OCC released the NPR requiring the issuance of long-term debt for Category 2, 3, and 4 banks. As you may know, I, along with many of my colleagues, authored a letter to each agency expressing concerns regarding the lack of tailoring in the proposal and shortcomings in estimating the actual cost of the proposed rules. I'm concerned that these shortfalls will negatively impact lending in my district, and when combined with the other ongoing regulatory proposals, could cause further consolidation of the banking industry. It appears that the Federal Reserve has primarily deferred to the FDIC concerning the proposal. Could you shed light on the Federal Reserve's role within the rulemaking process concerning the long-term debt proposal? And have you provided input regarding the proposal's interplay with Basel III Endgame?
I think we're one of the proposers of the rule, just like the other agencies are. And right now we're looking at the comments that we've gotten. That comment period, I believe, has closed. Yeah, and so we're very much in reading those comments as the law.
You're in the
wants
middle
us
of
to
it,
do.
fair to
We
say.
are.
Okay, thank you. I'm concerned that the long-term debt proposal's lack of tailoring contradicts the statutory requirements of the Economic Growth, Regulatory Relief, and Consumer Protection Act. Instead of applying tailoring principles, this proposal creates Category 2, 3, and 4 financial institutions identically for the purposes of long-term debt issuances. Additionally, the proposal unduly burdens Category 2, 3, and 4 banks by requiring them to issue long-term debt at both the parent holding company and bank level, which actually could be viewed as reverse tailoring, considering GSIBs are only required to issue debt at the parent company level. What is the underlying rationale behind this dual requirement, particularly when such a mandate is not imposed on our largest banks? And do you believe that this represents a tailored approach as required by the statute?
So that tailoring question is one of the questions we'll be asking ourselves as part of our review of the comments.
Thank you. It's my understanding that Category 4 banks were not included in the original advance notice of proposed rulemaking for the long-term debt rule released in the fall of 2022. Is that your understanding as well?
I didn't catch that.
Did the advance notice that was released in the fall of 22 include Category 4 banks? It's my understanding that it did not.
I can't confirm that, to be honest.
Well, I think that's something that you should take into account because the Category 2 and 3 banks have had an additional year to foresee this challenge, and so Category 4 banks are really behind the 8 ball. And yeah, so I guess my next question is, do you believe regulatory agencies should provide smaller regional banks longer than the 3-year phase-in period to meet any final long-term debt requirements?
It's a good question. That's one of the comments we've gotten, and we'll be looking at that.
I appreciate it. I just think if we're going to impose these new regulations, giving everyone the same opportunity to comply with them is something worth considering. I guess one final question. If these proposed regulatory changes had been in effect prior to the fall of SVB and Signature, do you believe the outcome would have been different? Because honestly, I don't think anything would have changed.
You know, it's a hypothetical. I'm tempted to say that if there had been more long-term debt there that was specifically there to absorb losses.
They were nowhere near being solvent. But I guess that's something I think y'all should take into account, whether if these proposed changes to our system that are designed to make it more resilient would have actually caused SVB and Signature to have a different outcome. Because again, it just seems that my colleagues across the aisle let no crisis go to waste, and these are changes that would not have in fact prevented the calamity that they are justifying the changes based on. Thank you for being here today, and with that, Mr. Chairman, I yield back.
Thanks. Gentleman yields back. The gentlewoman from Massachusetts, Ms. Presley.
Anybody want to bet money?
5 minutes.
If any congressperson brings up what's going on with NYCB, unhalted, this time green, I think it's halted right away.
Rising to 20-year
Yeah, this is NYCB. They announced the equity raise,
and mortgage-ready home
and
buyers
they got clapped.
without a path to home ownership. This is a problem for everyone. It's an urban issue. It's a suburban issue. It's a rural issue. Chairman Powell, I welcome the decision of the Fed to pause rates at the end of last year. But for families in my district and across the country, that is not enough. We need the Fed to start cutting because, like the rent, interest rates are too damn high. Chairman Powell, you've previously indicated that the Fed may cut rates this year. What would you expect the impact of lowering interest rates to be on the housing market specifically, including the rental, purchase, and construction market?
So we know that higher rates, of course, have slowed down the rate of activity. So if at such time as we start to lower interest rates, housing market will pick up broadly across new home construction and new home sales. The number, as you know, many households are in very low rate mortgages, and they really can't sell because they have to refinance into a high rate mortgage. That'll go away over time. So ideally, the housing market would go back into a more normal phase, but one with lower inflation in the broader economy.
Right, so just to further reiterate that, interest rate cuts would have a great benefit. Just yesterday, actually, I met with a number of representatives from state housing finance agencies from throughout the country, and they were talking about the barriers to affordable housing projects given the current interest rate environment. Obviously, higher interest rates have raised costs for affordable housing developers, and many of them have chosen to slow down or halt construction entirely.
So fewer homes are being built, which means fewer people are being housed. So given that we already, which you agree, so given that we already had a massive shortage of affordable housing supply prior to the pandemic, when interest rates were below 2%, the current rate, 5.5% rate, has been devastating. And the price of homes across the country have remained stubbornly high. It's clear that the current state of our housing market is impacting everyone and disproportionately hurting those who need stability the most. Does this concern you?
So our job is to do price stability and maximum employment. We don't target the housing market. And we're doing our jobs. That's what we're doing. It's not something we want to see, but
does this
is
impact
the
on the
path to
housing market?
restoring price stability.
But does it concern you, Chairman Powell?
Does it concern me?
Yes. Fewer homes are being built, so fewer people are being housed.
This is the job we've taken on.
All right. Well, it concerns
NYCB
me greatly.
news
Chairman
pending.
Powell, the Fed's interest rate hikes have not been sufficient
So
in
it may
addressing
not trade
housing
the rest
inflation.
of the day.
Do you agree that we need a more robust fiscal response to increase the supply of affordable housing and to lower
Halted
costs
due to news
nationwide?
pending.
We don't take opinions. We don't express opinions on things like that. I will say that there is a structural housing shortage in the United States. And that's
maybe
really
either
the
FDIC or they're going to
problem.
announce that they
Problem with high
sold. They
interest
could
rates is
raise the
short-run
capital.
problem. The
Maybe
longer-run
somebody
problem
gives them the money.
lack of supply.
But it's either one. I mean,
Well, that's why it is
can
critical
flip a
that Congress
coin
pass legislation and
and let you
appropriation
know,
bills that
but-
will make those necessary investments in housing for all. Given the way that Ranking Member Waters fought for a $150 billion investment in housing and Build Back Better, I know on this side of the aisle that my colleagues and I are ready and waiting for the Republican majority to take housing inflation seriously. Housing affordability is the #1 issue I'm hearing about from my constituents. Families in my district and throughout this country need relief now. I truly hope the Fed will listen to them and cut interest rates. Thank you. I yield.
Gentlelady yields back. The gentleman from South Carolina, Mr. Norm, is recognized for 5 minutes.
Thank you, Chairman Powell. I think other people have noted about the crisis in the office building market across this country. That's a line of work we're in. I can tell you it's real. I can tell you the buildings that are effectively vacant, it's going to have an effect on the taxes paid. It's going to have an effect on rents. As far as affordability in housing, the rates are one thing, but my good friends on the other side of the aisle don't realize that housing has got over 200 components to it. One of the biggest is gas prices. And as long as we're buying gas from countries that hate America and don't manufacture our own, housing isn't coming down. I don't know how you define affordable anyway. It's going to continue a downward slide. And I'm from a state in South Carolina that people are moving in. And we're not going to have the housing starts that we should have.
Determined by the gasoline that you're buying from people who hate America and what's affordable anyways.
On regulations, on Regulation 2, which is has the guardrails for credit card fees.
I think we get our boy tomorrow.
And I know
think
the
we
caps
get Kennedy
you're looking
tomorrow.
at adjusting that. How do you answer the charge that this is really should not be, you're getting in the way of banks charging fees according to what their costs are? How does the regulations affect that, particular Regulation 2?
Is this a Fed regulation we're talking about, or
Yes,
is this a CFPB regulation?
This is, for my record, it's the Federal Reserve has finalized the routing restrictions and proposed tighter and adjusting the price caps that currently exist. Is that not right?
It doesn't ring a bell with me. It may well be right. I'm not familiar
If you
with
could
that.
look at that, I know all the credit unions and banks have got some concerns on that.
I will come back to you on that.
Okay, I appreciate it. Do you need a letter from us? Or
No, we'll come back to you.
Okay, thank you. CRA, for those of us who have been involved with banking for a long time, the regulations, having a clear set of standards that we abide by and know where to put the money to, when should we have regulations out that we can read about what's going to be acceptable and what's not?
Sorry, I didn't get your question.
The regulations on the changes in regulations for CRA.
Right. What about it? I'm sorry, I missed your question.
When are the regulations going to be out that we'll know, the banks will know what's acceptable for CRA and what's not acceptable.
So the final rule, of course, is out. I think we're working on, there's a lot of work to do. The requirements don't really kick in, most of them for a couple of years at least. So I think we're working on the follow-up regulations.
Okay, that's really important for a lot of all the banks, because they want to make sure they qualify, and where the dollars are spent, they need to make sure that it's going at the right spot, because the credits won't be applied unless that's it. The Fed now, where the Federal, I think, Reserve launched and is operating this now, how is the participation rate going with that?
Slow, real slow. It's early days. There are network effects. These things they go slow until they don't. And it was the same way with ACH. You may remember back in the day.
Right.
So we're at fewer than 500 banks are in there now. We're working away at it. We expect it'll take some time, but but it's there, and we think it'll be beneficial. We had a lot of support from smaller banks to build it, as you know.
Is the pricing below cost?
I don't believe so, no, not longer run cost.
Okay. Okay, that's all the questions I have. Thank you for being here.
Gentleman yields back. The gentleman from Nevada, Mr. Horsford, is now recognized for 5 minutes.
I want to thank the chairman and the ranking member for this hearing, and to you, Chair Powell, for appearing before the committee to discuss the recently published monetary policy report. As we continue our work on behalf of the American people, we have to keep in mind that our mission here is to grow the economy from the bottom up and the middle out. It seems as if there has been a constant series of shocks to the economy, both domestically and globally, and yet we can all see just how resilient the labor market has been as it has maintained its strength. With a robust gain of 353,000 jobs, the January numbers are a continuation of the trend that Democrats in Congress delivered through historic investments in our workforce, putting people over politics. In light of this relative economic strength, I really want to implore the Federal Reserve to take stock of the holistic economic picture before making decisions on monetary policy, and to pay particular attention to those communities that have been historically left behind during times of accelerated recovery. I want to add to the questions from my colleague, Congresswoman Presley, Chair Powell. At a time where it has become increasingly difficult for working people and people of color in particular to purchase a home, I worry that rising mortgage rates will put working families even further behind on accessing the wealth and equity that a home provides. So what actions, if any, is the Federal Reserve considering to better understand and to mitigate the impacts that your Basel III proposal may have on minority borrowers who disproportionately rely on high LTV mortgages due to the generational wealth gap that persists?
We've received comments, including many, on the mortgage changes, and we understand the concerns, and we're looking very carefully at that. Haven't made any decisions, but we will announce them when we have.
Are you concerned that these shifts in risk weights will reinforce the decade-long retreat of banks from the mortgage market and push more originations to non-bank institutions?
That's a question that people are raising, and it's something we take very seriously, and we'll be taking that into consideration as we decide about that change, that recommended change.
Could you discuss why you feel it is necessary to include new requirements around operational risk in Basel III in light of recent claims that it will significantly increase the cost of or prevent banks from offering altogether necessary services such as underwriting, investment advisory, or insurance?
That is one of the concerns that's been articulated about the proposed changes to operating risk. We take those concerns seriously. As I mentioned, we're in the middle of looking at these things, and then we'll soon, in the process of turning to the question of what changes to make.
Well, I just would underscore the sense of urgency, because the longer there's uncertainty in the market, it creates really negative effects to end users, which are all of our constituents who are looking to see these costs come down. Let me shift. This Congress, under the leadership of Ranking Member Waters and former CBC Chair Joyce Beatty, I've made it a focus of my efforts to educate my colleagues and the public at large on the far-reaching benefits of increased diversity in the workplace, in our boardrooms, and in society as a whole. Despite the efforts by some on the other side to take away the very tools of economic opportunity that create inclusive work environments and improve performance, there has been a really misguided assault on everything from diversity, equity, and inclusion to other programs following the aftermath of the Supreme Court's ruling on affirmative action. So Chairman Powell, as you know, your Office of Minority and Women Inclusion has a focus on this. So as we anticipate the upcoming release of your annual report on inclusion, would you be able to speak to the necessity of collecting this data that minority and women-owned businesses are included in the board's contracting and acquisition opportunities?
I do believe we collect that data and we monitor that very carefully.
And why is it important?
Well, I think diversity in the workplace is an important thing, and you won't know how you're doing unless you measure it.
And just as the McKinsey Institute released in their Diversity Matters Even More report, companies that have more diverse management teams actually outperform companies that don't. That goes to the bottom line of our economy, and I wish my colleagues on the other side would stop their assault on diversity, equity, and inclusion and actually work with us to grow the economy
Gentleman's time
for
has
everyone.
expired. The gentleman from Wisconsin, Mr. Stiles, now recognized for 5 minutes.
Thank you very much, Mr. Chair. Thank you for being here, Chairman Powell. Appreciate it. You're navigating a difficult situation where we've had stimulative economic policies from the Biden administration, in particular, excessive government spending, investment in infrastructure, specific tax credits. At the same time, we're seeing a regulatory environment from the administration that's also restricting economic growth. We've heard a lot about the Basel III endgame, which you have a chair of in your opening remarks. You noted that high interest rates are impacting business investment in a negative way. High interest rates are also negatively impacting the housing market. As we look at Basel III endgame, I've heard from a wide array of stakeholders, from those that are commenting on increase in bank capital standards, the negative impact that would have on the housing market, as well as from the business community, the impact that would have on their ability to invest in capital infrastructure and increase employment. Does the broad diversity of voices who hold concerns on the Basel III endgame concern you?
I would say that I've articulated concerns, and we're reading those comments, and we're very much in the process of assessing what we need to do to address them.
Thank you. I appreciate your time on that. Shifting gears slightly, as you may know, the Securities and Exchange Commission held an open meeting today to approve the final climate change rule. It's a significant regulation that I think would have a significant impact on the economy. Can you comment how the Fed thinks about the economic impact of this new regulation or regulations more broadly, and in particular their impact on both inflation and on employment?
We don't comment on regulations of other agencies, sorry.
And you'll review that if it's put in place, or you'll review the economic impact as the empirical data comes forward?
We're not in the business of scoring, CBO does that. They'll look at this and make a careful assessment of the economic impacts and budgetary impacts and that kind of thing.
Thank you. I'll shift gears again. One of your two mandates is to maximize employment in addition to maintaining price stability. As you know, government hiring has accounted for a large share of total job creation. More than 600,000 public sector jobs were created last year, and the federal government now employs nearly 3 million workers. So when you're examining employment data, how does the Fed view the impact of the public sector employment growth relative to private sector economic growth? In other words, how do the two data points factor into your assessment of how the broader economy is performing?
So the jobs are jobs, right? But I think we would tend to look at private sector jobs to get a better assessment. Private sector job creation is a better indicator of kind of the private sector momentum in the economy. But we look at both. They both count.
And does the dramatic increase in the private sector number of jobs give you any pause or concern as it relates to—
You mean in the public sector?
In the public sector. Sorry if I misspoke. Yes, the public sector.
The truth is the public sector was unable to hire at the beginning because wages went up a lot in the private sector at the beginning of the pandemic inflation. And public sector can't respond to that. So there's some catch-up hiring going on there now. Now that things are settling down to normal, I think there's some catch-up hiring. I'm not sure it's an issue we're concerned about.
Okay, I'll shift gears in my final minute just to talk a little bit to get your perspective on the macroeconomic developments that are having an impact on our monetary policy, specifically as we think about the potential for a productivity boom from AI to work at home to other factors. The data is probably too early to tell whether or not we're having a true productivity view, but how does the Fed view the adoption of some of these new technologies, in particular AI, as it relates to labor productivity?
So everyone's looking at AI for that question, and it's hard to say, actually. We've had really nice productivity in the last year or so, but it's probably still very much affected by the post-pandemic factors that we're seeing. I think we need to see more to understand whether there is a longer-term boom. AI certainly has the capacity to either augment labor or to replace labor, and that's a key question. We really don't know which of the two it will do. Tons of money being invested in it, and so it's likely to drive significant productivity. I would say right now technology, but also higher labor mobility. A lot of people quitting during the really tight labor market, and also the rise in startups. There were a lot of people started companies during the pandemic. Those are the kind of things that do add up to higher productivity over time. So there is hope that we'll see some productivity out of this.
Thanks for your comments today, Mr. Chair. I yield back.
Gentleman yields back. We'll go to the last questioner of the day, the gentleman from New York, Mr. Torres, for 5 minutes.
Thank you, Mr. Chair. Mr. Chair, I have several questions about some of the most common complaints that I've heard about Basel III Endgame. I have an open mind on the subject, but I want to hear your response to some of the arguments that have been leveled against it. First, the Fed has repeatedly reassured the public that the banking system is well capitalized. Yet the Fed is advancing Basel III on the assumption that the banking system is undercapitalized. So the first question is, how do you reconcile the Fed's repeat assurances about a well-capitalized banking system with Basel III's assumption of an undercapitalized banking system? The second question, if the purpose of Basel III is to align U.S. banks with their banking peers elsewhere in the world, why is the Fed imposing requirements that are more stringent than those prescribed by Basel III? In other words, why is the Fed, quote unquote, gold plating? The third question is, how do you reconcile Basel III's recommendation for standardization with Congress's statutory requirement for tailoring? Standardization would seem to be in conflict or in tension with regulatory tailoring. And the fourth and final question, do you think that Basel III could have the unintended consequence of reinforcing the trend toward shadow banking, which would mean less regulation, not more? Is there a sense in which we are transferring risk from the regulated sector of the financial system to the deregulated sector? So I bombarded you with 4 questions, and I'll give you the time you need to answer them.
I'm going to have a hard time reading my handwriting here, but I'll start with yes to the fourth one. I'll give you that one because that is clearly a risk. We've seen intermediation activity moving out of the regulated system, and this has the risk of doing more of that. So what was, in a word or two, what was the one again?
Just you said, you testified
capital,
and
capital,
yes,
yeah.
repeat reassurances about the capitalization of the banking
So
system.
I addressed this in my remarks in the open board meeting. Higher capital is always going to add to safety and soundness, but there's a cost.
Right.
And so identifying the precise right level is very, very difficult. It's hard to do it objectively. I've said for years in these rooms that I thought that the level of capital in the U.S. banking system was about right. So I posed, and I voted for all these increases during Dodd-Frank, so I think it's a very fair question. We'll be looking at that. The second one was?
The concern about gold plating.
About?
Gold plating?
Oh, gold plating, yeah, no, it is, and I said this in my public remarks, that we're exceeding the minimums with this proposal, and we also exceeded what the other big jurisdictions are doing, and so that's a question. That's a good question. I'll agree.
Okay, great.
And the third?
And the third is, I think you more or less, and standardization versus tailoring.
Standardization of, it was something specific.
Yeah, so Congress passed a statute requiring regulatory tailoring.
No, that's
and do you think Basel III is in compliance with that statute?
I addressed that in my comments too. I think you're right. We do need to take on board the lessons of Silicon Valley Bank as it relates to the smaller, large banks. But We don't need to throw away the tailoring that's required by the law, but also that is appropriate if we're going to have a diverse banking system.
You know, the collapse of SBB was largely a story about liquidity risk and interest rate risk, yet the focal points of Basel III are credit risk, market rate risk, and operational risk. Like, what is your response to the criticism that the Fed should focus its energies on addressing the forms of risk that were responsible for the SVB bank failure rather than focusing on forms of risk that were largely unrelated to it?
So I agree with that, but I would say we are working on a package of liquidity measures which directly addresses the Silicon Valley Bank situation. We've also taken a lot of supervisory actions with other medium and small-sized banks that had a lot of uninsured deposits and a lot of real estate risk and things like that. So we've been doing quite a lot on the supervisory section that it doesn't require new rules.
And then finally, as you know, the crippling cost of housing accounts for a third of inflation. One of the most powerful tools for producing and preserving affordable housing is the low-income housing tax credit, which has financed nearly 4 million units of affordable housing. The banking system accounts for 85% of LIHTC investments, and there's a concern that Basel III, in its present form, would diminish the availability of LIHTC and the amount of affordable housing development. And so I'm just curious, is that on your radar, and is that something you're willing to examine?
Yes, it is.
So with that, I'll leave it at that. Thank you.
Gentleman yields back. That's the final question of the day. We committed to the chair that would be done with a hard stop by 1 p.m. It's nice when we can honor our commitments. So I'd like to thank Chair Powell for his testimony today.
Mr.
Without objection,
Bowtie.
all members will have 5 legislative days in which to submit additional written questions for the witness to the chair.
All right, thank you. I don't think we're going to get anything crazy. I think it's good timing to close it out, baby. Actually, very good timing. It's around 10 o'clock. Not too bad, ladies and gentlemen. It's honestly been a wild day. I don't know if you guys saw me looking at that. I was going back and forth between yesterday and today. So, well, like, I don't know. How do you want the news? You pretty much you've given back, or you've gotten back almost all of the losses of yesterday. At one point, we're a little bit below that. We did move a lot pre-market. We did have the jobs data. It's kind of crazy because today's like a decently big move, but Powell didn't really say anything, and the jobs data wasn't too crazy, but we have this move. And then, if anything, during that speech, I have KRE up here, NYCB. They announced that they're trying to get an equity raise to raise capital, so that wasn't good. The bonds got a bit off of that. They got clapped. They're halted now pending news. So all of that is very interesting, but a pretty eventful day. I mean, a lot of movement, to say the least, Chad Adonia, and then even Coinbase ripping. I have that. Airbnb hit a 52-week high. The value plays got a bid. NASDAQ 1% right now. Russell 0.97. Dow 0.45. SPY 0.81. Not bad, ladies and gentlemen. Not bad. Not trusting it. Well, we have jobs on Friday, but like I said, I mean, I thought the jobs were going to be confusing, and even today, though, it all came in line. So we'll find out what Friday brings. But Powell didn't really do much. We're going to get him tomorrow. I only look forward to potentially hearing Mr. Kennedy. Exactly. I can't wait to ask Powell a couple of questions about the soft landing and rainbows. Exactly. So we'll find out what that brings, but he shouldn't say much. Again, we weren't expecting Powell to say much. So I don't know if that's the good news or the bad news, but yeah, like I said, on the watch list 2 years ago, in March of 2022, Powell was before Congress, and he started talking about how he wanted to raise rates and shocked everybody, and that was new, and then that caused a big market reaction, but not this time. Not this time for Mr. Powell. You want to play some ZQs after the NYC? Oh, yeah, huh? Ooh, I kind of like that idea. Not going to lie to you. I like that idea a lot. What are they at? ZQK24. It all depends. I mean, limited amount of loss. Where is it? Oh, no, ZQ. I'm trying to pull up all the contracts. Ethereum is up. Hey, yeah, crypto's killing it. That's for May. March only has 22 days. March would be the one that is like closer to the floor. Let's see. September ZQK was that low. So you can still lose a little bit. It all just depends on how big you want to go. A small play could still do a decent amount of work. I mean, where was it? What is ZQK? You have to say it out like Jacques. Jacques. You have to yell it like that. That's how you pronounce it. But it's Fed futures. So it's the interest rate probabilities. Yeah, you got to yell it. You got like kind of like get more. But it's the Fed futures. So I made a play. Like literally, I was like clapped on this one earlier in the year. It was like end of last year, and then I got out of it beginning of this year. Actually, a couple weeks ago. But it is like betting on interest rate probabilities. But now Danny brings it up related to the banking stuff, which is a great idea. And then, you know, what I usually do, like my thing is when I see it ever like pricing in like 99% probability, I like to buy them just in case, especially if something is going to happen or ahead of a data event. So ahead of jobs and then even ahead of the banking stuff, that's not too bad of an idea. The odds it's 20% though. 22% still. So I don't know. You're still not near. You're still taking some risk. So they're not near the floor, but you know. You're close though. You were higher last March a year ago. It's kind of crazy, not by much. And then all that stuff happened. Bitcoin's going up. And then Abivi too. I'd be down to play that though with the data coming up. March is bet. I mean, March you're next to the floor, but March is in 2-3 weeks. But then again, if you really wanted to play like, if you really wanted to play something happening with the banks like causing an issue, that would be it. But I don't know. I think that's like immediate. But that's the play where I don't even know if you'd lose. I don't even know how much you'd lose per contract. That contract is like dead. I don't even know if you could trade it still. It doesn't even look like it has been. Or maybe ZQJ. Palantir. They got a government contract today. Coinbase about to go to 240. That's a pretty big deal. April, there's not a meeting though. I don't know. I don't think the ZQK is that bad of it. It's a cheaper bond play that hasn't moved over the last couple of days, but then it's harder to get that thing moving. But depending on the data, or again, if something kind of pops off. That could be a good gamble though for non-farms. Non-farms, I don't think Powell will move it. Airbnb, another one. Did Coinbase hit 240? I think that's a big level. Regionals are staying pinned. Airbnb, wow, Habibi, 52 weeks. It's still nowhere near the high, the all-timing, but still very good, Habibi. Wow, good job, Airbnb. XOM, that's oil. That's Exxon Mobil. Yeah, and Chevron, they had that news. They're coming down actually again. Good timing on asking that question. Where's Pfizer? Those Pfizer plays, the ones we made free yesterday, they're up 300%. 378. That's actually insane. Ater while you still can. What's that? That's from yesterday. That one sounded a little less threatening than the first. Then yesterday was sounded a lot more threatening. Good to see you, man. Good morning. Good morning. It's still pretty early. It's 10 a.m. 10 a.m., ladies and gentlemen. So you still got like another half of the day. I don't think we have any other data for the rest of the day. And then tomorrow, a little bit more jobs data. And then Friday, that's really where all the magic happens. You have chip earnings after hours. So Broadcom. Oh, wait. No. Broadcom's on Thursday. Excuse me. Today, actually, I did all the earnings previews while Powell was talking. So there's a bunch after hours, but I don't have previews for literally any of them. But there's a lot tomorrow morning. Broadcom's tomorrow after hours. Getting ahead of myself. But those chip makers, those are important. But then again, Broadcom already made a run up here today. No threats. Christ is king. He'd like you to purchase Ater. That's crazy. He told me to ban you. See, this is how wars get started. So, see you tomorrow, buddy. See you tomorrow. Bro, that Zaza play is tempting. The Zuck. Zucke 24. You have to yell it. But I don't know. I could be calm. I can relax a little bit. Coin rejected 240. A couple things. Airbnb hit a high and came down. Intel's still going. Zillow's on the high, but SPY, I mean, we've been dropping for about like 30 minutes. Bonds have been climbing up. So, again, I think bonds, I was expecting them to react to the regionals a couple days ago. Maybe this was some of the follow-through, but now they're going up. And maybe that's what gold, that was a good point somebody brought up while all that was happening. Maybe this is what gold was feeling all along. I think gold is still up, though. Yeah, I'm down $100 on my gold short. But gold's $4 off of the highs. Again, set a new all-time high. LT is doing great today. The long-term benefited off of Pfizer, MO, Airbnb, 52-week highs, Coinbase even coming up. I mean, there's one more in the long term, but yeah, long term did good. Everything but Disney, I think. Oh, Abivi too, even that's in a 52-week high. Uber, all of it, they do good, man. We bought MO literally yesterday, so that was just good timing. Luck of the draw, I guess, but it was overall very good. Cannot complain. Abercrombie on the low. Oh, Abercrombie sold off like $7 in the last hour here. A good half of that here in the last like 30 minutes. Where do bad rainbows go? To Prism. It's a light sentence, but it also gives them time to reflect. It's a good one. That's a good one, my friend. Good morning. Good morning. Oh, I see you have a lot of these dad jokes going on. I like that one. That's a good one. Yeah. That's a good one. What do you call people who only believe 12.5% of the Bible? An eighth theist. It's a good one. It's a good one. I like the rainbow joke. It's a light sentence. NYCB is halted until news. So either they're going to announce their sale, their plans to sell like equity, or the FDIC is going to close them down. So one or the other, Habibi, one or the other. TLT new high. Man, now I kind of regret selling those bonds yesterday. Could have doubled it up. I guess now it's a decent amount. But still, you are still holding. Bonds are slowly melting up. Again, Abercrombie, that's in the bottom right. They are still melting down slowly. CVX on the low still. Gold is trying to make a move up. Where's oil? Oil, where do you go, Habibi? Oil's just right below 80. 10 cents below. Powell did not really say much. We listened to him for several hours. I think what? Was that 3 hours of Powell? I'm surprised. He didn't even have to go to the bathroom. Good for him. He's like 60. So that was a lot of hours of Powell. And then now we're back and not much, but we made a lot of movement. And then even the jobs report today, the jobs openings came in line. A little bit more movement on the private payrolls, the ADP, but for the most part, we have recovered most of yesterday's losses, at least the gap down. You're still off of the all-time highs, and then now we are chilling with a couple of earnings after the bell, a lot more tomorrow morning, and then after the bell tomorrow. And then a little bit of a bank failure fear lurking. Bonds catching a bid, gold hitting an all-time high, oil going up. You actually do got some problems, Red Sea. They said a couple of people died. So you got a little bit more conflict there, even more Russia conflict. I don't know if you're interested in all that, but I guess a lot is happening in the world today. Apple's still doing bad. They had news with Epic. They didn't have any like major bad news today, but they still went a little lower. The 3-4 day, multiple day sell-off of Apple has been pretty ugly. Yeah, man, there's a lot to juggle. Albemarle, they sold off yesterday. They were talking offering, I believe, some like equities, when they bounced 8 today. A lot of things bounced today, though. Again, like literally, MO was down 3.5% for no reason yesterday, and now it's up 4. I think Pfizer did that the day before too. That even got the pump. SPR is moving. Check news on that. Because again, SPR, we sold out of it the other day, but if we could get any info on that price related to their buyout. But SPR just shot up almost like 50 cents there in a couple minutes. Octa on the low. SPR still going up. Come on. NVIDIA almost at $900. Oh my goodness. Yo, that's kind of insane. 890, 52-week high. So you're like what? Almost up another $25 from their earnings? Like one of those earnings highs? NVIDIA, I mean, 900 is in sights. You're up another 3.5%, $31 on the day. My goodness. And then SPY's not even at highs right now. I don't know where SMCI is. Abivai hitting a high. SMCI starting to move. Zillow's on the high. Zillow's kind of moving. Redfin's already up too. Yeah, Palantir, they got a government contract too. I think wasn't AI moving as well. Gold is on the high. Gold's about to tap another high there. Where's ARM? ARM's kind of been chilling at the same price the last couple of days. MP Dubs came down. Airbnb, wow. NVIDIA 891 now. Habibi. Bone move before SPR. Oil's coming down here a little bit. Do you keep NYCB? Like, what's your play? Because if you have, like, upside plays or shares, it's, it just depends on the news, but you might get clapped. Otherwise, if you have a put or short, I mean, again, your downside is limited. So, all just depends. At 300. So you bought at $4. 300 shares. Well, it just depends on the news. You might get clapped. I mean, you're already down before they even halted it for the news. It's already down 40. Yeah, NVIDIA 8-9, dude. NVIDIA is trying to make the $900 push right now. Now the SPY's even responding, but like NVIDIA is paying in the high ticker. That's going crazy. 890, 433. It is not stopping, Habibi. Habibi, not one stop in sight. I don't see a one stoppage, you know? Zillow, YPF, Abivi even hitting a 52-week high. I love how Apple is just not moving on any of this. At Disney, they got to outperform the other days. Yeah, they're down 2.2. There's not that many names down. I want to say there's 10 names down. NVIDIA overtake Apple, Habibi. This is crazy, man. I don't know. Will it though? Hold on. Apple's at 2.6. NVIDIA's at 2. It might, honestly. Wait, now that I think about it, that's kind of crazy. Is Microsoft the most valuable? 3 trillion. Oh, Amazon, you ain't got shit on that. Yo, that's kind of nuts, actually. He's $400 billion. Zillow's ripping still. So again, we called that out a little earlier. I don't have any news on Zillow. SPR moving a little bit more. I don't have anything on SPR either, but it is, guys, got to pop there. You're in at $68 on Abivi. Do we ever sell any of it? Do you not know the answer, or do you want me to say it and soothe your ears? Because the answer is I hold forever, my brethren. So unless I needed the money, but, you know, ideally, I would want to hold that, collect that drip, get that good yield. I have been, I mean, and it has rewarded. It has rewarded heavily. 10 years minimum, 10 years minimum. Hasbro on the high, Kenview. Disney, I think it just needs to underperform. It's actually the worst on the Dow right now. But I think it's just taking a breather. The other days it was outperforming literally yesterday. So a lot of things kind of flip-flopped. But right now you have 7 names red on the Dow, 23 names in the green. NASDAQ 100, 25 red, 75 in the green. And then S&P 500, 118 in the red, 385 in the green. NYCB can be halted all day. SPR getting a red candle now. Again, we don't have any news on that. NVIDIA's outlook positive by Moody's. They're like, okay, take it to 900. Who cares? We don't care about credit, but take it. Yalla. Senior unsecured rating raised to AA3 from A1 by Moody's. SPR just gave up all of that gain. Market's trying to work its way up a little bit. And now, where is it? Bonds. TLT, man. He got a little juice, you know? Back to December level. Tesla hit 173? Really? I didn't even realize that. I think it's at 179 now. Oh, Tessie. No, I got out of SPR yesterday. I think I got around this price. It was like 35, low 35s. No, I sold out of NCLH yesterday. Kind of wish I held that one. I think you would have got close to 1,000. Or you got like 500% on it. Tesla's trying to climb up. Nivda. Abivai, bro. I mean, it hasn't had like a crazy breakout ever since hitting the highs, but I've been waiting for some craziness above 180. Yeah, NYCB got halted. Yeah, I still have Vanny. I want to wait a little bit before an average there, but they, what's it called? I either want them to either fill the gap or we wait before the non-farms. But I still like them. I still think they're going to have one more hype headline on Ozempic shit. They better at least. Where's crypto? I didn't look at crypto today. After they hit the highs and sell off. But I started seeing videos pop up of people making videos about like Dogecoin and crypto. So like it might be happening again. That was a good sign yesterday. We hit the all-time high, but like I saw more people discussing crypto. Disney on the low ticker. Disney Big Reds? Kind of. It's flushing 110. I mean, didn't it just hit 114 yesterday? I feel like every time Bob Iger talks, he does that. He like gets it to pop and then it sells off heavy. Well, yeah, you literally hit that level and then just sold off again. They did that like twice. There's Disney. Where are we on the SPY? 5124. So again, that like even like 513, I think. Yeah, 5127 and like 2930. That's like the lower end of the last couple days, and that fills the gap. So pretty much 5130. So technically, you haven't filled the gap from 2 days ago or a day ago. You want Biden impressions? You think I could just pull him out of nowhere? You think he just shows up out of nowhere? Yeah. I gotta go to the bathroom. Hold on, let me go to the bathroom and then I'll give you something else. Here's your friend.
Powell once again signaling that while a strong economy will keep officials on hold for now, he does expect the Fed to cut rates this year. S&P up 45 right now at 51.24, close to session highs, up 0.9%. Dow Jones Industrial Average up 202, up 0.5%. The Nasdaq Composite Index up 174 right now, higher by 1.1%. We've got the 10-year yielding 4.09%, with a 2-year that's yielding 4.53%. Spot gold up 0.9%, 21.47 a barrel, an ounce on gold. In terms of the barrels, West Texas Intermediate crude 79.54 did see an 80 print earlier this hour. Right now, WTI up by 1.8%. Oil stocks advancing as well. Case in point, ExxonMobil up 1.5%. ADRs of BP up 2.1%. Chevron up now little changed, up 3 cents to 149.62 on Chevron. Bitcoin keeps on going, up 6.1% at 67,191. And a headline on the Bloomberg Professional Service. Democratic Representative Dean Phillips of Minnesota is ending his long-shot primary challenge against President Biden. Recapping stocks higher. S&P up 46, up 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. For those of you just joining us, you are watching an extended version of Bloomberg Business Week on this Fed Wednesday. Carol Master along with Tim Stanovic live on radio, TV, YouTube, and Bloomberg Originals. It's a Fed Wednesday because, as you know, Fed Chair Jay Powell up on Capitol Hill earlier today, first of 2 days in this semi-annual testimony on monetary policy before U.S. lawmakers. Chair Powell, Tim saying a lot of things.
Yeah, as expected, he reiterated that the Federal Reserve is in no rush to cut interest rates. Here's what he said.
We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%.
And that, of course, was none other than Federal Reserve Chair Jay Powell in day one of his 2 days of semi-annual monetary policy testimony before U.S. lawmakers.
All right, so back with us with some more analysis. Longtime and resident Fed watcher here at Bloomberg economics reporter Steve Matthews. He's out there in our Atlanta bureau, and a go-to on all things U.S. rates, Bloomberg News rates reporter Michael McKenzie. He's here in studio. Steve, let's kick it off to you. Tim and I and many Bloomberg users kind of glued to our live blog today as Fed Chair Jay Powell was up on Capitol Hill. You wrote, all in all, a pretty balanced view on Fed policy that reflects where the rate-setting committee was at its last meeting. So not much new stuff there.
Yeah, it was pretty much down the middle and very similar to what you heard coming out of the January meeting and press conference and the 60 Minutes interview. You know, although it's like some people took his comments to be just very slightly dovish. I saw one report in the clip that you mentioned where Powell was talking about that they could cut rates at some point this year, that he chose the wording at some point this year as opposed to later this year. And this is how Fed watchers parse the language, because if it were later this year, that might imply maybe the second half, maybe some time away. At some point this year, that could mean tomorrow. I mean, that is totally open-ended. So
it's like managing a young kid, right? We're going to do it sometime, maybe later this year.
I also just appreciate the view into the way that, you know, Steve has to really parse everything that comes out of Jay Powell's mouth in order to understand what he's doing. And it is important, though. We laugh, but this is what traders are trading on. Hey, speaking of the trade, I want to bring in Michael McKenzie and talk a little bit about the bond market reaction today. We're seeing yields now down across the curve, Mike. Give us your idea of the way that the trade evolved throughout the day and sort of how things ended up after we heard from Powell.
Well, the trade, the market got going pretty well early on because the ADP numbers came in a little bit softer, and that was followed by 10 o'clock when the JOLTS numbers came in softer too, and there was a downward revision for the past month. So that gave a bid into the market, and that bid was also sustained, I think, because Powell, some people in the bond market were a little bit wary that coming into this, that Powell could perhaps reference some of the recent uptick we saw in inflation data. He didn't. He pretty much stuck to, as Steve said, the middle of the road. He kind of just, you know, nailed the drive down the middle of the fairway. And so that combination of that data, Powell sort of...
On the fairway. On the fairway, ladies and gentlemen. So get ready. Get ready. We still got jobs on Friday. And then again, this bank thing. I'm surprised nobody. We'll see if somebody asks him tomorrow about NYCB. We'll even see what happens. Disney's still dying. Nvidia's still running. Apple's still doing nothing. Yeah, Disney's getting flush below 110. Who doesn't like below there? Again, that's like Airbnb in its home. I think Airbnb hit another high. Airbnb. See, this is why we wanted him to go to his home. See, another like on the high. Wow, even the AMAT. Hello, yeah, AMAT. No, there's no news later today. Airbnb, man, it's great. It's great. It's a good guy. But Chattadonia, good timing. It's a great day. Beautiful timing. We have a lot more. I still have that AMAT call. It's up 39%. It's 30, and I still have something else for you. Chattadonia. How you doing? I hope your day's beautiful. I hope we can make it a little bit better with some philo. I hope we could talk about some things, get you thinking. Above all else, I do wish peace and blessings to all of you. Gold is hitting a high right now. My goodness. There's a lot going on every single day in the market, in the world. We just had a recap of all of it, but Big shout out to the people who are taking care of the things right at their doorstep and handling the matters that they have and that the matters that are in their control and those taking personal responsibility. It's been something I've been shouting out here, man. So it's been a good start to the year, and I've been loving to see it with everybody with Philo and people making improvements. Y'all been telling me a lot of stuff beyond just wanting Philo, man, and if not to, other people, I'm praying for you all, man, so keep praying for me as well. But, big shout out to the people who have been making the most of these moments and taking info, man, and beyond just listening and hearing and getting excited, getting mad, getting angry on the internet, but, like, turning it into something real, baby. Turning it into real life. And, that's always the goal. And to see that, man, and to see the fruit of it, man. I hope that's what you get. And big shout out for everybody making the most and taking the most out of it. So, God bless you, Chattadonia. But today's Philo, I'm going to tell you another long story. So we have another 2 hours. This one's going to take me an hour and a half. I'm going to explain the story of the mythical beast and the giant and no, I'm just kidding. I'm just kidding. No story today. But bump. No, and then the trees got to grow. No. Don't worry. I'm gonna still. Did you guys know what the story was that he thought about though from yesterday? I might have to leave you guys hanging on that one. Actually, this one I said it's gonna be a mini philo today. I might maybe what day is it today? I'll make you guys wait on that one a little. We'll touch base. We'll come back to that to the story. But today's philo, I'm gonna give you guys something. You guys may enjoy this. I think some of you may enjoy this one. Is this one biblical? No. Have I talked about this one before? Kind of, to a degree. But today I'm gonna share with you actually one of my favorite philosophers. I'm not gonna go too in depth with it. But I just want to share with you one pillar of one of his beliefs, and I want to share it with you. So I'm not going to go over all of it, and I'm not going to dive too deep into it. It's actually a very deep concept. But, Chad, today we're going to talk about making moves. Yes. I want to talk about making moves. Yes. Do you make moves? Do you want to make moves? You making moves, bro? Have you ever asked somebody seriously, are you making moves, bro? Have you ever asked that question to somebody? Serious? You making moves, bro? Huh? You making moves? What's the move, man? We making moves? Ooh, little Raul. We making moves? Spy making moves? I ask myself every day. Definitely not. Moves like Splinter Cell. Real Z's moving silence like lasagna. Whoa. Raul. What is this, man? So gold just hit a new high and now we're dumping. Bro, everything kind of just took a dip there. Bro, you just hit VWAP. Bro, what just happened? They did not like the philo? Okay, SPY's making moves. You just dropped 20 points almost? Whoa. 20 points in almost 2 minutes? I do not have anything. Why are we tanking? I have no idea. You are right back to opening candle. Hi. Great timing on Philo. We making moves. The Philo's about making moves, so I guess this is good timing. See if it bounces or not, but that's huge. Honestly, that's 20 points in like 2 minutes almost. That's like just under 20 points. I mean, the bonds are already up, so I don't know if you want to blame the banks or not, but if anything, maybe a delayed reaction from equities. Otherwise, if I was going to blame this on banks, I'd look for another move on the bonds. But my goodness. Hi. Well, gold's still up there. That fell. I think oil was already dropping. A couple of names came down. Nvidia off the highs. Yeah, oil kept going a little lower. Well. Okay, getting a little green candle. Wow. That's philo for you, man. That's philo for you. So on that note, Chattadonia, making moves. So today what I was going to share with you is from the philosopher David Hume. Have you ever heard the name David Hume? So he's really intense. This is like an OG philosopher. He has a lot of things that he's written on. You could go read the Wikipedia about. I don't think he's the biggest fan of God. So for some of you, you may like or not like that aspect. But I like Hume. He brings up a lot of good points. Doesn't sound familiar? Yeah, David Hume. He's a well-known philosopher, but he talks about something, and this is just something I'd like to share with you. Is just very simple, and I'm not going to dwell on it too much, but it kind of relates. We talked about a philo related to one of the offshoots of what he discusses, but I just thought it would be good to share this with you today. Are you ready, Chad? David Hume, he brings up a good point, and if you want the little tagline of what he says, simply is that action is produced by passion. Oh, Chadadonia. Action is produced by passion. SPY is still going lower. Now, the thing about it, when he references passion, it is a little different. It's not like, oh, I am passionate about. He does mean it to a degree like that. Like some of you may be passionate about things. Literally, the S&P is just dumping right now, almost 20 points in a couple minutes. You may be very passionate about that, depending on what puts you hold or don't hold, right? You could get passionate about saving the animals, saving the whales, the penguins. There's a lot of things that people get real passionate about. Maybe you're passionate about who's going to be president, right? Or you're passionate about the laws that are being passed in this nation. Or you're passionate about Trump's shoes. I don't know. You could be passionate about a lot of things, but in this sense, David Hume, he's not really referencing that type of passion. So, like, bro, we are dumping still. Hold on, David Hume. All right, let me get one more scan here because we are now down 20 points in 4 minutes. Yeah, like actually a little bit more, 23 points. Maybe like 5 minutes. But you're getting to the low of out of nowhere, off nothing. I don't have anything at all. Nope. I don't see anything. Honestly, I don't know if the dollar's moving either. Bonds are even coming down. All right, you're getting a bigger candle. We'll resume at the next green here. It could be because NYCB, but then again, bonds, everything else is silent. The only thing that moved was gold. Gold hit another high. Literally, right as I hit the desk, my gold coins started to move. Banks fall in fear. Could be. No, I think we got over the government shutdown for a little bit. NYCB is probably your most likely culprit, but even then, I'd expect a little more oomph from the bond market. Maybe even the dollar make a big move, huh? But that was still pretty wild. JP Morgan. Yeah, didn't JP Morgan just hit a new all-time high? Well, anyways, back to the passions of life. But David Hume, he brings up passions, right? But his passions that he's talking about, he's actually talking about like his 4 passions of life is love, hate, pride, and humility. Okay, those are the main passions. So, but believe it or not, even in his definition, this is where philosophy, like actual philosophy, starts getting a little weird because, again, you start defining things. He considers these the indirect passions. He says these are the secondary effects of a previous feeling. So I don't know, you guys, have you ever felt love, hate, pride, and humility? I think that's the beauty of the human condition, is that we could all say we have gone through that. I think some of you have either felt love you've loved something, even if you've not loved a person. I'm sure you've loved like chocolate at one point or ice cream. Maybe hate. Maybe if you've never felt love, at least you've probably felt hate. Maybe I'll argue everybody has at least felt one of these in their life. Love, hate, pride, and humility. Can you agree with that? Disagree? Honestly, even me asking this rhetorically, I'm just opening up the door for some crazy answer, because it's pretty much well known you have all gone through this. So, but what he says is that these are like, this is a secondary feeling, believe it or not. So something motivates your love, right? You have love as an effect of feeling something else, right? You have hate, pride, humility. Something will make you feel a certain way. Like his example, he talks about like an artist. He's like, if you paint a picture, like he says, if you see a pretty picture, it makes you feel a certain way. And then it produces a feeling, and then it produces a passion from there. Or if you are an artist or you're not an artist, if you like the painting or don't like it, it produces anything good or bad in you, could even motivate you. But do you get the whole point here? I hope you do, Chad. Love, hate, pride, and humility. I like love a lot. That's a good one in what I believe. I've given you a lot of philos, but maybe this is a good one to think about. How are these driving your life, my brother? Yes. I want you to think about it for a second. Love, hate, pride, and humility. If you had to throw in all of your actions and what you do into one of these baskets, where would they be going towards? Why are you doing what you're doing? Is it based off of love, hate, pride, humility? Now, that's not the main point of the philo. Believe it or not. That's why I like it. This is why it's a good one, man. But there's something I'd like that you could take as a, I don't know. This part, here's the whole point with philo. It's hard to call this an objective truth because people have argued this, right? Everybody has their own little take on what gets people going. Some people don't think it's the passions that motivate us. They think it's other things based off of morality, of selfishness, off of others. People think it's just in our human nature to do certain things. But Hume, his thing is that what he really argues is that reason and using reason as opposed to passion will get you nowhere when it comes to motivating human action. He says action is produced by passion. He argues reason is inert when it comes to motivating conduct. So, do you remember this? We were talking about reason sometimes and getting limited off of the logic sometimes. And I said sometimes you got to think with me and you got to think a little positive and get a little bit outside of the box. But even without any like hippie philo stuff, anything of that, what Hume argues is that reason does not get you motivated. Reason alone will never get you to move, is what Hume argues. So I need money. I have zero money. I have good reason to get money. I need to get money. I am in a certain... Hume will argue you will still, just because you have a good reason to do something, does not mean you will do it. It will not get you up motivating any sort of action, moral or immoral. What you do after that is a whole nother topic. But he does argue that reason alone will not get you moving in any way. Everything is produced by the passions of life. Passion for wisdom. So that could be love. That could be built into it. Again, he brings up the indirects. But exactly that's the whole point, though. Certain passions of life, the things in life that will produce certain feelings, that's what he says you're going to go after. But it's not going to be reason. So, I ask you guys to humor me when it comes down to spiritual things. I think you could humor me when it comes down to this topic. Like, what would you, if it's not based off of reason, what are you getting motivated off of? What is producing action in your life? This is from David Hume. What's it called? It's called I think, is it called like the Chronicles? I forgot what it's called. Or the Treatise, I believe. Number 2. He has many, many things that he has many books and that's why I'm saying, like, this is just, I'm speaking very, very broadly on this topic, because you could go very deep on the work that he has done. But this is from the philosopher David Hume. Well, there's a lot of things that could drive the passions, and I hope you think about it. But one thing alone, we did talk about this the other day, and I'm saying just hopefully you have something beyond reason that is driving you. Here's the irony. Are you ready for the irony of all of it? This is what he says. This is what David Hume says. But I say this is ironic because I want you to. That's what I'm saying. Humor me. I want you to really think about this. Because he says without any emotion, we would not engage in any action. So why I'm saying this is ironic because, we talk here about, how you control your emotions. And Mr. David Hume is saying emotions are going to drive all of your actions. And he's actually saying you need an emotion to drive some sort of action. So what emotion in your life is driving the actions that you are doing now? Even better, what emotion will you use to drive a further action? So Chattadonia. Thought I'd drop a little David Hume philo on you. I'll let you meditate on that one as well. Let that one ponder. See where your motivation is. What emotion is driving the action. Give yourself a little to think on. Give yourself a little to chew on. But take that one to the bank. That is your philosophy, ladies and gentlemen. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hard chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watch is the main channel. First link for the Scream Alerts boot campaign real estate course. Follow me on Instagram at the Trading Fraternity. God bless you all, Chattadonia. That's it. Your philo is over. And we're almost at 11 o'clock. Good timing. Good timing. And you know what song I am going to play? Even though as a giant, and honestly, we're done, and now the spy's flushing again. But even then, I have to play it. Yeah, I have to. Airbnb, 52-week highs, baby. But then, no, it's not anymore. But yeah, bonds are going up, though. So now this time around, take a look. Hold on.
I want to ride that.
If bonds start breaking out on a new low, you may have something. You get a 12 high.
Wrist. Nah, I don't want to ride that. Pull up in a bed body, I don't put a tap back. Hit me with the divvy, I don't even need the NASDAQ. Skinny and she pretty, I don't even need the ass fat. Guinea was a freebie, I don't even need a fast one. I was never greedy, I just never fucking had shit. Now I bet that I ain't never fucking going bad shit. Please stop backing, y'all need man skin. Little more balance and a lot of bit of counting. Pull it to the valley, got these motherfuckers counting. Pulling up the Lancho, got it looking like a mountain. Remember when I put them on the motherfuckers daddy? Put it some more fighter, I don't give a fuck about it. I'm still in the game like a screaming athlete. Got a little fame, but it ain't changed nothing about me. Nah, same OJ, you smoke more J, still make dumb plays, but I play less games. Always ready for the war, I ain't playing campaign, but I really need a reason for I pop champagne. Pop before the fall, so I gotta stay safe. Lot of money on the table, boy, that look like bait. I'ma think before I get it, boy, that look like fate. Either way the story goes, no, I love that fate. Had these motherfuckers hated me before they love me. Now they selling half and they ain't playing with their money. I told them take a tenth and pay yourself, cause that's your money. Put me on the bench, cause I ain't playing with you dummies. They ain't gave us nothing, even if they did, no, I wouldn't take it from them. They was took a shit, but we still try to love them. Got so many wins that I can't trip about a folly on my wrist. Nah, rather get a B&B and rent it for the scenery. And maybe live the season and keep on buying stats every month. Spread it evenly and shout it out to people that believe in me. I hope you living peacefully and same thing for the people that don't speak to me. I do this shit for everybody equally. I guess it's just G and me. And when we done with that, we going back to the reality. Yeah.
Back to the reality. You're on a little lower. My goodness, Chattadonia. My goodness. Airbnb by Uncle. And that's it, man. Gold even coming down. Oil flushed. Oil gave up half the gains. Bonds are breaking out now on that second dip. So that makes everything a little bit more spicy. You're kind of near the low of the day. But again, this is still above 5,100. You're in between yesterday's low and then the other all-time high. Bonds are getting a little bit more vertical right now. There's actually no cold real estate today. So you guys are lucky if you have any real estate questions. I will answer them, and I won't chastise you tomorrow because I can't be like, oh, there was cold real estate. Still no news. No, none at all. None at all. But again, there was a lot to chew on from all day today. It could be the bank stuff. Those bonds are catching a bid now. I really want to play the bonds, and I don't want to play the bonds at the same time. It is quite the dilemma. I should have just held them from the other day, but then again, it's been a nice little run. They keep going. TLT is starting to break out a little bit more. LZM, Air Bam Bam. Dollar didn't move on any of that. And then literally right before all of that, NVIDIA was just about to hit 900. All that happened was NVIDIA and a Philo, man. That's crazy, bro. Are we expecting a crash today? I don't think so. I mean, if the data was more like, if it was bigger data, that was more surprising. Data was more in line. I mean, there was a couple of surprises on the ADP, but generally there wasn't any surprises. Powell didn't say much. I mean, yesterday, Bostic surprising. That was probably the most surprising out of all of those. Where is it? I'm looking, rate cut odds didn't even move too crazy. Honestly, this move's pretty wild. It's just big. That bounce, like, it got a little bit of relief, but that first move was huge. But again, there's nothing here. The bond's now just moving. That's the only thing giving you some level. Other than gold, again, gold did precede this whole entire move. That hit a high as we were dumping, like right before. Tesla Berlin plant to remain without power till end of next week. Yeah, March last year was the SVB and the banking collapse. Good times. Good times. XLF's green. Yeah, not bad. By a quarter. It's not a bad day. I mean, that's the crazy part. Even at the low of the day, we're still up like 0.5%. NASDAQ was just up. Everything was just up double. And then there's still, again, a couple of names who are hitting highs. Where is the value? Altria was up a little bit more. Pfizer still held up. It does kind of feel like the non-farm day. But this is what I was saying, where we might get one of these days where, but I'm expecting more crazy moves like this on non-farms, not today. I was just hoping we get a big data move, but other than that, like, we do have to see the how the market trades on the non-farms. I think it will be something like this, all dependent on the report. Crowd. They got clapped a little bit from the open. I mean, those options are up. And then THO, we were up on that, and then those just rocketed up. That was a weird open. ADMA. What was the other one? Wasn't like ADM or AMD? No, that's AMD. Then Disney, they died below 110. They came back up a little, but still dead. APM, that's the one. Yeah, that one's still holding. I have no idea what that is. But that was running during all of this, too. SPY getting another red. We'll do earnings previews here in a little bit. I have most of them already ready to go. But like I said, I don't have that many earnings previews for after hours. So Thursday has more after the bell, but today after the bell there's earnings, but like I literally have 0 previews for today after the bell. Powell speaks tomorrow. We had Powell for like 3 hours today. And then bonds again a little bit red from there. Powell, I think, speaks at the same time tomorrow. We do have Beige Book at 2 p.m. I did forget about that, but lately we haven't really reacted to it. But yeah, you do have the Beige Book today. Summary of economic conditions. MP Dubs came down. What today? Nvidia's up. Meta, all big tech, I think, except Microsoft's break even. Apple and Google. I think 2 p.m. today for the Beige Book. That sounds right. XMTR. Reloaded. That'd be a big one. That was a crazy drop, but now we're just 5,100. It's a good level. This is where you opened up after 2 days after Nvidia. So not too bad. Stayed stagnant for like 2 weeks. Thursday. A little higher than last. Actually, you're higher than both Thursdays. Actually, not too bad. Just didn't move. And then he did hit a new high in the process. NYCB is halted. They announced the capital raise. MSOS, I'm down $75. I forgot about that one. Airbnb, keep going, Habibi. SWTX. Couple of random names on the high ticker. Yeah, wheat stocks didn't do anything. Bowen. Beige Book leaked. Oh, that should come out. That's 2 minutes, right? I still have the gold. I have every play, I think. I didn't flip out of anything from today. I should have got rid of the oil. I had good games. Yeah, I'm down 124 on the oil short. Lee. LEE. Oh, this thing. A liquid as hell. Pop though. 12%. Spire getting right back to open and VWAP. 1 minute for Beige Book. We'll see. We could read a little bit, but we're not expecting much. Again, even then, you literally just had Jerome Powell and his whole entire... I mean, we did melt up while he was speaking, but I guess it was kind of a decent move. But for the most part, it's not like that generally changed anything too heavy. I didn't short oil. I shorted gold. I just think gold hit a high. I don't know why it's up. I think it could still go up, but I wanted to get a small one. I think it's going to be pretty volatile just because the dollar's still high. And then we have data. But I went with a micro so that it doesn't move too crazy. Like, I'd be down like 600 or 700 if this was a big contract. No, I don't have any long terms on Robinhood. Remember, if you have puts on NYCB and it enters receivership, your puts are worth 0. That is true. Remember, that was the dilemma last time. Beige book is out. I see Boeing headlines. Sometimes they lag on the beige book. Oh, there it is, March. No, I have it. Can I have the AI read it to you? Overall economic activity increased slightly since early January, with 8 districts reporting slight to modest growth in activity. Other 3 reporting no change. 1 district noting slight softening. Consumer spending, particularly retail, inched down in recent weeks. Several reports cited heightening price sensitivity by consumers and noted that households continue to trade down and shift spending away from discretionary goods. Activity in the leisure and hospitality varied by district and segment, while air travel was robust overall. Demand for restaurant, hotels, and other establishments softened due to elevated prices, as well as other unusual weather conditions in certain regions. Manufacturing activity was largely unchanged, and supply bottlenecks normalized further. Nevertheless, delivery delays for electrical components continued. Ongoing shipping disruptions in Red Sea and Panama did not generally have a notable impact on business during the reporting period, though some contacts reported rising pressures on international shipping. Several reports highlighted a pickup in demand for residential real estate in recent weeks, largely owing to moderation in mortgage rates, but noted that limited inventories hindered actual home sales. Commercial real estate activity was weak, particularly office space, though there were reports of robust demand for new data centers, industrial and manufacturing spaces, and large infrastructure projects. Loan demand was stable to down, and credit quality was generally healthy despite a few reports of rising delinquencies. The outlook for future economic growth remained generally positive, with contracts noting expectations for stronger demand and less restrictive financial conditions over the next 6 to 12 months. That's overall economic activity. Hold on. It's weird spacing. I'll give you a little one. We'll try with your boy Liam.
Employment rose at a slight to modest pace in most districts. Overall, labor market tightness eased further, with nearly all districts highlighting some improvement in labor availability and employee retention. Businesses generally found it easier to fill open positions and to find qualified applicants, although difficulties persisted attracting workers for highly skilled positions, including healthcare professionals, engineers, and skilled trade specialists such as welders and mechanics. Wages grew further across districts, although several reports indicated a slower pace of increase. Employee expectations of pay adjustments were reportedly more in line with historical averages.
Ta-da! This is for the beige book. This is like literally the beige book. Again, it's on the Fed website. It's a big document. Again, I'm not going to go segment by segment on it.
Price pressures persisted during the reporting period, but several districts reported some degree of moderation in inflation. Contacts highlighted increases in freight costs and several insurance categories, including employer-sponsored health insurance. Nevertheless, businesses found it harder to pass through higher costs to their customers, who became increasingly sensitive to price changes. The cost of many manufacturing and construction inputs, such as steel, cement, paper, and fuel, reportedly fell in recent weeks.
Okay, and that's all the districts. I don't know. Do you guys want all the districts? I don't even think it moved too much. Again, they said employment rose. If anything, I don't think that's good. They said labor market eased further, though. Then they say wages went up. but I don't think we're going to get a reaction off that. We'll see. And then Bonds and SPY moving around. That is it. Going to do nothing but chill. SPY getting a green shoe. What is this, Lee? Hello, you go Airbnb. Tesla's coming down. Microsoft's hugging green. I don't know, man. Is NVIDIA, they might go for the 900 move again. They're getting froggy. KRE, dumb pop. Yeah. Is somebody buying them? Bank of America CFO says consumer asset quality pretty good. Who is it? It has to be somebody. It's not NYCB. It has to be another one of these regional banks. Somebody's moving. Why is KRE moving like that? Bonds are dropping now too. NYCB raises more than $1 billion in equity, led by Mnuchin's firm, like Steve Munchkin. So NYCB got money. No way. So if that's the news, then they're not going BK and they're not getting into receivership. So somebody gave them $1 billion. Literally, Steve Munchkin. They're like, who you going to vote for if we give you this? Okay, don't play around. All right. SMCI, that's big though. Regionals are moving. SMCI gained a little pop again. I think NVIDIA creeping right around 900. That's the important one. Monday BTFP ending. Well, they just secured $1 billion. $1 billion. The gold short worked. Not really. Kind of. I'm down 48 bucks now. So it came back a lot right there. Gold just flushed. Oh my goodness. Gold is insane. Still fascinated. But then again, maybe that's why gold is dropping, literally. I didn't even think of the bank stuff. We were just saying how gold could have been maybe one of those factors, but that's good news if they got money. NVIDIA will hit 1K next week. I think it'll hit 1K, but I don't know when. Maybe it happens today, next week. Maybe it goes to, I don't want to say it out loud, but maybe it goes to $899.97 and then drops another $150 for like 2.5 months. And then like 3 months from now goes to 1,000. I've seen it happen. So like either or, it's one of those two options. You're either hitting a 900 right now or 1,000 soon, or it's going to like go like right there. And then, yeah. Yeah, KRE, again, I mean, the news looks like they're getting, if NYCB raises $1 billion. And then the Allah. All right, my gold short is about to go positive now. So that news is killing gold there. But I think gold will hold up, and then oil stop moving. NYCB, I don't know if they're unhalted. It's wild, though, that the index is moving like that. I don't know if NYCB moving on the after hours bid, but the index is moving, but I'm wondering which regional is going again. Hitting again. Where did gold go? Yeah, gold 2151. I'm like right below there. Broadcom, they have earnings tomorrow. I kind of do. KRE's running. I kind of want to short the bonds. But then I'm like, maybe I'll just keep the gold one for now. But with the bank thing, if that fear fades, but I don't want to push because bonds are still elevated. You could either go for a quick flip on it or we hold, but I don't want to get trapped on there because I just closed out the bonds 2 days ago. H-Ban Pop. Why does that name sound familiar? Is that a liquid one? H-Ban Huntington Bank? Oh. A regional. KRE calmed down a little bit. NYCB still halted. Can I go all in Broadcom or Costco tomorrow? If you give me half of your money first. Like if you're asking me, like if you have permission, I give you permission if you give me half. So you give me half of the money and then go all in. And then we'll see what happens. NKTX high. Yeah, New York Community announces $1 billion equity investment anchored by former Secretary Mnuchin, Liberty Strategic Capital, Hudson Bay, and Reverence Capital. Joseph Otting to become CEO, and Alejandro Danello to be named as non-executive chairman. So they're adding people to their board. And a new CEO. So this is all for NYCB. Are they putting Munchkin on the board? Yeah, that's hitting the wire right now here too. So yeah, big news. Again, bonds moving around a little bit too. Gold already came down. I mean, SPY kind of dancing. Regionals still negative on the day. They're like right below when the NYCB stuff first came out. But not bad. No, not a bailout. This time it's private. I mean, that's it. At the very least, the bank raised $1 billion from a private investment fund. I mean, this time it was a former government official, but yeah. Well, I don't know. Buying Pfizer on margin, a good idea for the dividend and growth aspect? Oh, no, not at all, my friend. Because if you buy Pfizer on margin, you're paying margin. So usually margin, I don't like, what brokerage do you use? But like most margin rates are like 13.75 right now, I think. You hold Pfizer for the entire year, you'll get back 5-6%. But if you're holding it on margin, I mean, you are down 13%. So you'll still be losing like 6-7%. Robinhood margin is 8. Coin about to hit 240 again. So yeah, I want to be buying that on margin. Oh wait. There's more details. Whoa. So reconstituted board and management positioned to deliver well-capitalized $100 billion national bank with diversified de-risk business model. NYCB will sell and issue in aggregate to investor shares of common stock at a price per share of $2 an issue. So they're going to dilute and then sell them at $2 a share. Liberty is expected to invest $450 million. Hudson Bay will do $250 and Reverence will do $200 million. Transaction expected to close on or around Monday, March 11th, 2024. Investors will receive 60% warrant coverage to purchase non-voting common equivalent stock with an exercise price of $2.50 a share. In connection, company will add 4 new board members, including Steve Mnuchin. Holders of preferred stock will not have voting rights and will be entitled to quarterly non-cumulative cash dividends as declared by the board. Each share of preferred stock is convertible to common stock on a 1-to-1,000. We believe we now have sufficient capital should reserves need to be increased in the future. And that's it. Whoa, bigger flush on the SPY. Said Apple. Again, that's all the details for NYCB. Apple is flushing to another low right now. They did not like that. I don't know. It sounds like it sounds like NYCB is still diluting. So I don't know. KRE might come down. So they found a way to get money, but it sounds like they are just diluting investors. JP Morgan getting clapped. Oh, man. Apple, I mean, I'd kind of be down to flip it, but like, I don't know about long term. I think it need to give up a lot more. Like, if you want like a short term flip, but if it does break from here, it could get pretty ugly. I mean, they're just still elevated. There's still a lot of premium, but then it has given up a lot. Like, I think Apple is one of the worst performers next to like Tesla as far as like major mega cap tech. All right. Oh, we should. The previews. We got a little bit of time. Let me go to the bathroom. Follow me on Instagram at the Trading Fraternity. I love you, Chattadonia. God bless you. Good morning. And here is your daily dose of anger management training.
Government now. And also, because obviously the White House has long resisted specifically pushing for his resignation, even if you aren't doing it now. So can you just talk about the timing of this encouragement of why you're doing everything the way you are right now?
And we're not pushing, as you just stated in your question, for the Prime Minister to resign. This has been a long time conversation that we have had with our Haitian partners, with CARICOM, on making sure that there was a path to restoring democratic order. So that has been consistent with what we have been trying to do for some time now. And we believe, it is the Haitian people, they need to have an opportunity to democratically elect their prime minister. And so there needs to be a plan in place, obviously, to do that. And so that's what we're encouraging. But we've been having these conversations for some time now.
And one domestic matter, back in February of 2021, President Biden said Donald Trump should not be given the traditional intelligence briefings that were given to former presidents because, quote, what value is giving him an intelligence briefing? What impact does he have at all, other than the fact that he might slip and say something? Does the president still feel that way now that Donald Trump is on the way to becoming the Republican Party's nominee, and would be entitled to the briefings that a party candidate would get?
I think the president's words stand today, as he stated them however long ago. I don't think his mind has changed on that. I just don't have anything to add.
Did he do anything to block him from getting these briefings later this year?
I don't have anything to add, but the president was very clear about how he felt about that, and I would say those comments certainly do stand today.
Thanks, Corinne. Can you confirm that the White House invited the Ukraine's First Lady to the State of the Union, but that she declined to attend?
So the White House did invite Mrs. Zelenska to the State of the Union. She was unable to attend. I would refer you to Ukraine as to her reasoning why, but she did indeed receive an invitation from us.
And there was also an invite that went out to Navalny's wife. Can you talk a bit about how the president may address foreign policy issues? Of course, he's going to be speaking to Republicans, many of them who he wants to convince to back more funding to Ukraine.
So, look, I'm going to be really mindful and not get ahead of the president on his State of the Union remarks, so not going to lay that out and how he's going to address Republicans, as you mentioned, who will be in front of him. But, you know, the president, as it relates to certainly Ukraine, the president's going to continue to make his case that House Republicans need to move forward. The Speaker needs to put the National Security Supplemental on the floor. We know that it would get overwhelming support. And also, it's also about our national security, our own national security. And so we can't let politics get in the way of our national security. So the president's going to make that clear, and I'll just leave it to the president, as he would say, stay tuned. Stay tuned for tomorrow.
Just to be clear, he'd make those points clear at the State of the Union.
He's going to continue to make that case clear. You asked me how he's going to do that or lay that out tomorrow in the State of the Union. I just don't want to get ahead of the president. But our message continues, right? As it relates to national security supplemental, obviously the Ukraine aid is included in that supplemental.
Justice Navalny also invited and couldn't attend.
So I talked about this yesterday. Mrs. Navalny was indeed invited personally by the president. She was not able to attend. I would refer you, obviously, to her to explain why. But yes, she was invited.
Lastly, on the Russian missile strike, it was only about 200 feet away from President Zelensky. That's according to one of our sources. And a source close to Zelensky tells us that they believe Zelensky was the intended target. Is the U.S. looking into that strike? Do they believe that Zelensky was, in fact, the intended target?
So I can't speak to what they were targeting. That's not something that I can speak to, but it appears that it landed near, as you just said, the convoy. And I think Russia's actions speak for themselves here, but I can't speak for their exact target.
Karine, do you have any reaction to the sailors that were reportedly killed in the Houthi attack?
So let me say a couple things about that. That happened earlier today. So today the Houthis have killed innocent civilians by continuing their reckless attacks against international commercial shipping, which impacts countries throughout the world. The ship they attacked was a Barbados-flagged, Liberian-owned bulk carrier. It was not a U.S. ship, contrary to what the Houthis claimed. These reckless attacks by the Iran-backed Houthis have not only disrupted global trade and commerce, but also taken the lives of international seafarers simply doing their jobs. We offer our condolences, obviously, to the families of those who lost their lives, and again condemn the Houthis for these attacks. And we will call on governments around the world to do the same and join us in bringing to a halt these appalling attacks.
Thanks. And then one more on Haiti. We understand that the Prime Minister, Henry, is located in the United States right now in Puerto Rico. Could you talk a little bit about what his status is there and what the United States is doing as far as his travel logistics?
So I cannot speak to the Prime Minister's travel. He would have to speak to it himself. I just cannot speak to that.
Okay. And then should we expect any policy, like detailed policy rollout associated with State of the Union tomorrow?
I don't have anything to share at this time. The president, I'm not going to get ahead of the president, certainly, as he would say, stay tuned, stay tuned. Okay.
Karine, did the president have any reaction to Dean Phillips suspending his presidential campaign?
I don't have any reaction. I would have to refer you to the campaign on that specific.
Can you tell us generally whether you know if the president thinks there's, you know, legitimacy behind some of the main reasons that Phillips decided to run for president? Concerns about the president's age, concerns that he is a vulnerable general election candidate. Is that something you've ever spoken to him about?
So, going to be really careful. We're talking about an upcoming election, and obviously in November, so going to be really mindful. Look, this is why I think the State of the Union is going to be really important. The president's going to lay out what he has done the last 3 years, the successes that he's had, historic successes that he's had. He's going to speak to how he sees the future for this country on behalf of the American people. And I think that's going to be important. And I would say this as it relates to part of your question. The president has been very clear. He's been very honest about his age. He knows that. He makes jokes about it, right? He makes jokes about his friend Jimmy Madison, right? He gets that. But this is also a president that has gotten done more in the last 3 years than most presidents have in their 2 terms of presidency. And that is what we've seen from the data. And a lot of that is because of his experience. His experience matters. His experience as 36 years as a senator, 8 years as vice president, and now into his first term as president. It has shown that he can get things done. We see that with the economy. We see that what he's trying to do with lowering costs. We see what he's trying to do with lowering healthcare costs, and a lot of historic pieces of legislation that was done, that are now law, obviously, that was done in a bipartisan way. And that's because of the president's experience, and I think that matters. And I'm just going to let the president speak more to his future, his vision, what he sees for this country tomorrow night.
Just a quick question on State of the Union. You know, there was obviously a universe where a ceasefire and hostages deal was reached before the State of the Union. It seems increasingly clear that that's not going to happen in the next 36 hours. So given that, can you give us a little bit of insight into how the president has been working to draft a speech that addresses and speaks to just the anger and frustration that a lot of people are feeling about the fact that he is not willing so far to call for a permanent ceasefire?
So look, as you've heard the president call for a ceasefire, a period of time, a pause where there's a period of time where obviously the fighting stops, right? And with that is a hostage deal where we can get these hostages back home to their family and their loved ones. And let's not forget, the hostages include about 6 Americans. And so that's incredibly important. At the same time, let's not forget getting that all-important humanitarian aid into Gaza, to the Palestinian people. And so that is important. That is a first step that we need to get to. The president's going to continue to work on this, as he has been for the past several weeks, for the past several months, along with his team. So we are steadfast, focused on that. That is not going to change just because there's a State of the Union tomorrow. And so the president is going to be optimistic. He is. As it relates to his speech, look, these speeches, all of them, you know, they take massive undertaking, right? They take a lot of work, and to actually meet the moment of where we are as a country, and also lay out the future for this country. So not going to get into specifics as to how he's working through that. You'll hear it from him directly, but the president certainly is going to meet the moment where we are as a country, lay out the progress that we've seen in the last 3 years, and not just that, how do we build on that progress?
Do you happen to know what about the speech writing process this time around the president has found most challenging?
This is his third State of the Union address, as you know. This is going to be, as you can imagine, a very important, as he sees it, a conversation that he'll have with the American people. Millions of people are going to be watching. And so it's not just about the people who are, the elected officials who are in front of him. And so, you know, I would say this. I would say this is certainly a continuation of those conversations that he has with the American people when he goes out, and travels on the road, right? He hears directly from them. He hears what they are dealing with. He deals with what their family is dealing with. And so it's built on that. It's built on those conversations, that experience that he has, and knowing and having his finger on the pulse is certainly about what the American people have been going through these past 3 years. Going to be really mindful, not going to dive into his thought process. I think when he delivers his speech tomorrow night, you'll get a good sense of where the president is and how he sees where we are at this country, the State of the Union, obviously, hence the opportunity that he has tomorrow. And so I will just leave it at that.
Yeah, thanks. After Nikki Haley withdrew this morning from the Republican presidential primary, President Biden issued a statement and a direct appeal to her voters. Does President Biden plan to reach out to Nikki Haley at some point, and has he yet, or hasn't yet?
That's for the campaign to speak to. I don't have anything on that for you. Yeah. Okay, Mike.
Yesterday, I believe, Jake Sullivan announced that the administration backs a bipartisan bill that would lead to the banning of TikTok. Does Jake's views represent the views of the rest of the White House?
So just a couple things, and I'll get to your comment about the banning, but I do want to say a couple things at the top. The administration has worked with members of Congress from both parties to pursue a durable legislative solution that would address the threat posed by certain technology services operating in the United States that put at risk Americans' personal information and broader national security. And so what we see is this bill is important. We welcome this step
Yeah,
on
KRE's
ongoing
bottom
efforts
right
to
is
deal
ripping
with that,
right now.
to address that, and we appreciate the bipartisan work. I think that's important
Snap
that this was
kinda
done in
moving
a
off of that.
bipartisan way, and so we look forward to working with Congress. Obviously, we provided technical assistance, as we normally do when pieces of legislations are like this are being put together. But I would have to say, we don't see this as
Wall
banning
and
these
Zion, I
apps.
keep
That's
seeing
not what
those.
this is. But by ensuring that their ownership isn't in the hands of those who may do us harm. This is about our national security, obviously, and this is what we're focused on here.
And the president would sign a bill, though. I mean, the bill explicitly gives the administration the authority to ban the apps if those ownership questions aren't resolved, and the president would sign it, right?
So we welcome the bill. We obviously are working with them, and we think.
Jake's words were to quickly act, urging Congress to act quickly to
Yep.
send it to the president's
And
desk.
that's what I was going to say. We welcome it. Obviously, we've been working with them on it, and we would want to see this bill get done so it can get to the president's desk.
Final question, is the president planning on talking to TikTok influencers on Friday after the State of the Union about his speech?
That's a good question. I don't have anything for you on that, on his schedule for tomorrow. Once we do, we certainly will share that.
Friday.
For Friday, pardon me, for Friday. As you know, he's
Yeah,
going to be on
Biden
the
just
road on
made a
Friday. I
TikTok.
don't have
And if
anything.
he does, you wouldn't see any contradiction between the fact that the president would be using a technology that he's urging Congress to.
Here's the thing, and I've been asked this question multiple times about TikTok and our use of TikTok.
like,
As it
"I'm the
relates
one
to
who's
the
doing it."
campaign, I
Like,
know
come on, you
the
guys, calm
campaign
down.
has created a TikTok account. I would let them speak to that. That is their strategy. Would let them speak to that. And we've said this before. We are going to try to meet the American people where they are. We are. I mean, we're trying to reach everyone. The president is the president for all Americans.
Like, we
And so
gonna
that's
ban
what we're
weed,
trying to
don't
do
mean we
there.
gonna smoke a
Doesn't-
blunt with you.
It's a dangerous
But
platform.
it doesn't mean
simple.
that we're not.
why? Come on, we
going
trying to get
try
elected
figure out how to
2024,
protect
baby.
Our
What's
national
up?
security, right? That's what
Why
we're
you
doing
being
here.
so
That's
whack
what you
about
see
it?
in this
Come on.
bipartisan legislation that's being moved forward. That you heard from Jake about.
I
That you
don't
heard
see
that
no
you're
cops.
hearing from
I
me
ain't gonna
about.
snitch if
Doesn't
you
mean that
don't
we don't do
snitch,
the
is all
work
I'm
to make
saying.
sure that we protect Americans, and that's what we're going to do here. Got time.
Thanks, Karine. My colleague reported that U.S. officials, members of Congress, and
All right, Karine. Thank you, Karine. Chattadonia. That was Karine. That was your 10 minutes or so of anger management courses. Some of you did better than yesterday. Some of you didn't. It's okay. Work in progress. Airbnb does not have earnings, sir. So don't worry. Nothing. If Airbnb is just doing post-earnings things into the highs. But now, Chattadonia, it is that time. And today is going to be a little different because we have a very interesting calendar, but it is time that we go over earnings. We're actually starting a little later, and that's because I'm probably going to skip a lot of these. We only really have to do the ones in the morning unless you guys have any special requests. Maybe we'll get through it again. I don't know. I think if anything, I'll probably be saving my money for the plays for tomorrow, but either or, what we are about to do right now is go over the earnings, go over the previews if we have them, see some of their past earnings reports for the companies that report today after the bell, and tomorrow morning we're going to go look at the option chain, see what they are pricing in, do the calculation, and then we are going to apply our own strategy, the Ghetto Standard Deviation. You could go YouTube, search it, Ghetto Standard Deviation. You'll find the tutorial, and then we are going to double up what is priced in and look for plays that are cheap with a high reward and hopefully a low risk because the options are cheap enough. So we had a play yesterday, kind of decent, but there was a couple of plays the week before, and then a couple of plays we made 4 or 5 plays, and then we did not hit anything, but the ones we didn't play ended up going. Why I'm telling you that little story is because these are very random. All of the 2 standard deviation plays that we make, they are very low probability. So these are not the plays you want to be going for a long shot on, trying to put your whole account on, going crazy, gambling. Do not let this info and what we do lead to blowing up your account. In the phrase of 2024, money that you need is cursed. Okay, so don't get into any trouble with this, but it's very simple. Once you know what is priced in, you can apply this to any option strategy you would like, and then go from there. And we'll see. I don't even think I'm going to make too many plays here. So, but even then, be careful. Don't go too crazy, okay? Okay, are we all on the same page? Is everybody, are you feeling me? Do you understand what I'm talking about, buckaroo? Yeah. Buckaroo. Buddy. Comprende? Pal? You understand? If I'm sport, big guy. Yeah? All right, word. Good. That's good. I'm glad to hear. Well, like I said, we might do this a little differently unless, does anybody have a company that reports today after hours that they really like? Otherwise, I say we just start with the companies in the morning, because I literally do not have one preview for any of the companies. I don't even have a preview for Victoria's Secret. We could go price in Victoria's Secret. Airbnb does not report. Where are you getting this from, sir? I don't know, pal. KGS, Visco, Costco. That's Costco's tomorrow after the bell. Visco, I'll just price it in. I don't really care about expected guidance on the bras. You know what I'm saying? Even then, I don't even think it's covered that much. EBS as well. All right, well, we could price those in. Broadcom's after hours. These are just today after hours. So today my list says Triple Point, Victoria's Secret, Inovio, Rush Street, Honest, Supo or Grupo Supervel, Vet, Infinera, OneSpan, and Yext. So very random names. Random names. So I have zero previews on any of these, but let's price in Victoria's Secret. Let's see. They might be. I'm sure they're probably pricing in what? This is probably like a 10, 20%er. You know, a lot of retail. I mean, Nordstrom's actually did do bad. Retail's kind of been hit or miss. I want to say retail's good, but then Nordstrom's kind of threw a wrench in that one. What is it? Visco. So they have no weeklies. They are pricing in $4.75. It's like right in the middle. I'm going to use $4.75. So literally, Victoria's Secret pricing in $4.75 One Direction. $18.9% One Direction. So, yeah. You're going to need about like 36% for 2 standard deviations. So 1 standard deviation expecting to move 475. 2 standard deviation, an outsized move, that would be 950. So in this case, that'd be like what, 34.50? 40 cents. So you're still, even for a 36% move, you're paying more than 1 share. I do not like that. I think that is expensive. And then we said what, 950 to the downside? That's like what, 16 or 15.50-ish? 10 cent. Still limited. This will move like the Snapchat. So yeah, I'm not a fan. Not a fan of Victoria's Secret. You said EBS. Are you sure EBS reports today? Emergent Biosolution. Quickly, get to the odds. It's emerging. Emergent Biosolution. It's a biotech. Hurry, Joshua. Hurry, now. Are you sure they have earnings? I'll just do it real quick. Just because we played EBS in the past. March 15, 173 to 169. Oh, wow. These 150. 150. Mine's lower. I'll go 150. So, yeah, it's pricing in 50%. It's still a lot. 100% both ways. So, big expected move. I don't know if you want that. If you want that for shares, that's all you. And then someone said HNST. They report. I don't have a preview. They've actually moved a lot. I'm not going to lie to you. I've had an Honest tea before. Well, like, I've had a tea made by Honest. Ever if I say I've had the Honest tea before. I need to tell you something. I've had the Honest tea before. One time. But I haven't had one in a while. Don't they make like? Oh no 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 no. No 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 no. I'm not gonna lie to you. Yo, I'm not gonna lie to you. Does anybody in honesty? No, it reminded me. How can I forget? I'm not gonna lie. I'm not gonna lie. There's one thing about honesty. Let's see if you can figure it out before I price it in. They're at $2.97. 80 cents. This ain't, why am I pricing it higher on these? Maybe, I don't know. That says 64. 64 still prices in 20. I'm like 25 or 30%. We'll go with 60. So 20% move is priced in one direction on honesty. $1.20. You're looking at like what? 320? A little less. No, not Jessica Alba. Yeah, you guys don't know. Y'all didn't figure it. I priced in the stock before you figured it out. Maybe I'm the only one. Y'all ever had them honesty juice boxes for kids? It's like a juice box. They sell them at like Whole Foods and Costco, I even think. It's like a little juice box. They're horrible. I love them. Oh man, I love them. I love them. Yeah, that's what I was like, I can't remember the last time I've had this company. I steal them anytime I go to my nephew's house. You just drank one? Yeah, they're fire. They're good. No, 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 no. There's an honest juice box. I'm fairly certain they make a juice box. They aren't the ones. Are you sure? No way. It's just honest. Yeah, honest kids. I'm pretty sure it's them. So, besides that though, pricing in 20%, 40% for 2 standard deviations. That being said, I think we're going to skip all of the ones for after hours. And let's begin with the ones in the morning. So, good morning. Bright and early. How are you? I already have, I don't need that one. I need the other one. All right. So, first one up on the list is Kroger. Kroger. They've kind of been pinned. They've been holding up, though. So, Kroger, they're expecting fourth quarter IDs excluding fuel loss of 1.4%, revenue $37.07 billion, gross margin 22.2%, OG&A 16.3%, adjusted FIFO operating margin 3.2%, EPS $1.13, full year guidance January 25, IDs excluding fuel positive 0.9%, revenue $148.97 billion, gross margin 22%, OG&A 16%, adjusted FIFO operating margin 3.0, EPS $4.30. Since last quarter, November 29th, they are up 13.1, S&P is up 12.8, XLP is up 6.5. Near-term options imply 4.7% move. Last 4 quarters, gain of 1, gain of 3, loss of 3, gain of 5. Revenue has beaten 12 of the last 20 quarters, and EPS has beaten 18 of the last 20 quarters. Is NYCB, they're not unhalted, are they? Oh, it's saying $4 on the bid, though? Is it out? I see the can. Did it halt? Well, maybe that's well, there you go. End up being good news. So, my friend who had the shares earlier, you should be good, Habibi. Yeah, Zion, all the other regionals are going nuts, too. Again, regionals are up almost 1.5 on the day. They're all near the highs, though, holding. Damn, that's crazy. Welcome to the bank shenanigans. That's nuts. Well, back to Kroger. So this one's not bad. I mean, it's crazy they've kind of moved a little bit already. The thing about Kroger is that 4.7 priced in, that's not pricing in a lot, but Kroger doesn't really move. And then they've already kind of had a decently sized pre-earnings run-up. So 50, 50, 259, what, 268? So I got here 268. We'll go with that. So $2.68 priced in one direction. It's about 5%. So 536. So 55, 55.70, 55.80. $0.30. Not bad. Cheaper than the stock. It is a lower price stock. I mean, again, yesterday we made plays on more expensive stocks for less than that. But that's not too bad. If they surprise, even though they're already near at 52-week highs, they may have a lot of upside. And then even for the downside, too, it would be like 45. And those are cheap, 9 cents. When was the last at 45? Was that 45 a couple weeks ago? A little less than a month ago? Yeah, NYCB's up 30 now. I don't even know if there's even trades. That's crazy. Did Mnuchin just double up his $250 million? Anyways, again, they're in at 250. I'm going to skip Kroger, though. May come back to that. The puts aren't bad, though. $9, $10. Semi-cheap. It's like kind of right in the middle. Let's just see if we grab anything else. Not too bad, though. All right, the next one is Big Lots. I like Big Lots, but they've moved already. I haven't looked at the option chain, but in general, I know they've been going through kind of a little bit of that recovery story. So they got a lot of upside, limited downside. They could still die, though. They're expecting comps a loss of 8.5% versus guidance of negative HSDs. Revenue $1.43 billion. Gross margin 38.1 versus guidance at 38. SG&A 35.9. Operating margin 0.2%. EPS loss of 23 cents a share. Next quarter expecting comps of negative 4.3. Revenue $1.06 billion. Gross margin 37.6%. SG&A 42.4%. Operating margin loss of 7.3. EPS a loss of 283. Since November 29th, they're up 9.2. S&P is up 12.3. XLP is up 6.5. Near-term options imply 28% move. Lost 4 quarters, 10% gain, 27% gain, 13% loss, 6% gain. Revenue has beaten 13 of the last 20 quarters. EPS has beaten 14 of the last 20 quarters. Short interest is 25%. I think, yeah, NYCB, they got unhalted, and then halted again. GoDaddy targets 33% normalized EBITDA margin in 2026. Oh, crap. Who's this one? Oh, this is Burlington. Oh, wait. I didn't price in Big Lots yet. I just went over it. But it's pricing in 30%. I don't even think I want to do this. Is that $5? Literally $1.45 priced in. So I guess what, $5? That's 30%. Yeah. Pricing in 30%. Is GoDaddy moving off that headline? Not really. There was just a headline on GoDaddy, but it didn't move. Oh, it's halted? No way. And something on Meta, text, and AI. But yeah, Big is pricing in a lot. So $1.45, that's one standard deviation, 30%. 2 would be 60. That would be like what? 280? 290? So 680? 20 cents still? You could buy 3-4 shares. Yeah, I don't know if you want to gamble on shares, or maybe you could look at the ones that have a little bit more time. Those are still kind of expensive. Someone bought those for 30 for a $30 call. Yeah, I don't know, man. Not a fan. So no big lots or pick and save if you really know what's up. I don't know about pick and save. All right, next one is Burlington. What's their slogan? It's not "You're gonna like the way you look." I want to say Burlington owns Men Warehouse, but what's Burlington? Don't they have a slogan? Or more than great coats? Burlington Coat Factory. Didn't they have a song? Tailored Brands. They own Men's Warehouse. That's crazy. You don't know what Burlington is? I don't think I've ever bought anything from Burlington in my life, but I've been in there. Burlington. Style for everyone. Is more than a tagline. It's a way of life. It's part of us. Part of you. Why did I think is you're going to like the way you look? That's Men's Warehouse. That's a good slogan. You're going to like the way you look. Oh, okay, I do. Nice. All right, anyways. Burlington, they're trading at 205. They're killing it. They're expecting comps of 1% versus guidance of a loss of 2% to flat. Revenue of $3.07 billion implies 12% gain versus guidance of 5 to 7% year over year. Gross margin of 41.5%, SG&A 29.1%, operating margin 9.9%, EPS $3.31 versus guidance of 304 to 319. So analysts think they're going to do a lot better than the company guided. Next quarter expecting comps of 2.1, revenue of $2.33 billion, gross margin of 43%, SG&A 33.5%, operating margin 4.6%, EPS $1.10. Since last quarter, November 20th, they're up 52.4%. S&P is up 12.8%, XLP is up 7.3%. Near-term options implied 10.3% move. Last 4 quarters, gain of 21, loss of 9, loss of 4, loss of 2. Revenue has beaten 9 of the last 20 quarters with 1 in line. EPS has beaten 15 of the last 20 quarters. Wow. You're going to like the way you look. I'm just going to keep saying that. They're pricing in a lot. I mean, they moved double last earnings, and then the earnings before that, they moved 10. Kind of expensive, I feel like. Burlington. They are up a lot. They have weeklies. 205. Ooh, $20. Yeah, $19.99, $20 flat, baby. So $20 is priced in one direction, about 10%. So the market maker, one expected move or one standard deviation, what is expected is a $20 move. That'd be $2.25. So we're going to double that up, and that's going to leave us with $40. So it'll be $2.45. Go to next week. $2.45. $1.80. Habibi. That's expense. I can't do this one. No. That's too much, Habibi. And then 40 to the downside. That'd be like what? 165. Ooh, 80 cents. Kind of pricey still. But then again, they were just there. They recovered a lot, though. I don't know. That one's tempting. It's a little up there. Maybe we'll add that to the list of come back later. We'll still come back to Kroger. It's up there. It's up there, man. You're going to like the way you look. Sorry, that's not the slogan. I know. Anyways, the next one, American Eagle. Oh, you thought Abercrombie? Huh? You thought they were the only one in town? What about American Eagle? When now, son? Okay, no. I don't know that their slogan is. American Eagle. Is it Aeropostale? Aeropostale? Yeah. We don't know what caused the sell-off, but we do know Airbnb is hitting a 52-week high. You're going to like the way you look. Guarantee it. All right, anyways, American Eagle, they're expecting 1.66 billion, implies 9% versus guidance of low double digits year over year. Gross margin 36.6, SG&A 25.4, operating margin 7.7, EPS 50 cents. Revenue next quarter $1.14 billion. Gross margin 38.3, SG&A 28.8, operating margin 5.7, EPS 24 cents. Since last quarter, November 20th, they are up 22.1. S&P is up 12.8. XLY is up 8.6. Near-term options imply 11.7% move. Last 4 quarters, loss of 16, loss of 3, loss of 12, and gain of 1. Revenue has beaten 15 of the last 20 quarters. EPS has beaten 15 of the last 20 quarters with 2 in line. So not bad. American Eagle. Fly like an eagle into the rate cuts. No? Check, keep on slipping, slipping, slipping. All right. Well, let's see what we got. So stocks at 2367. These 2350s. It's 280. It looks like we're right about there. 279. We've been very close here today. You're going to like the long term. Josh guarantees it. I like do and I don't. It's not a guarantee. None of this recommendation. I'm trying to assume we're going to lose on my financial investment. Lose on financial advice. On purpose. Only think you have a wonderful day. You know, but you're going to like the way you look. But that being said, they're pricing in about $2.80. That's a little bit more than 10%. So one standard deviation. The expected move is about 10%, 280. So we're going to double that up for the low probability play. That leaves you with 560. 29.32. 20 cents. Ooh. It's cheaper. I don't know, maybe. But you still need a 20%. Haven't they moved 20% or is that just once? They moved 16. And then I don't think Abercrombie did good. But Abercrombie had a high bar. So I don't know. It's not bad. That's the as far as like a cheap pricing in 1020. At the very least, at least the option is cheaper than the share price. It's the only thing I like about it. NYCB, it's coming down after that gap up and unhalt. Again, there's that news, that private placement pretty much. They raised that $1 billion, selling shares at $250 a billion worth. I think they're issuing more shares or warrants for it. Yeah, so AO's not bad. They just need a beat. I think their bar is still kind of high though. I already closed it. Of Low double digits. They got a high bar too, actually. All right, we'll skip that. Next one is BJ's. We just did Burlington. We already went over that. They're not bad. They're just pricey. I don't think Burlington could be an interesting one. You just got to spend a little bit more. So next one is BJ's Warehouse. I've never been to one of these in my life. I know you guys have these on the East Coast. We just go to Costco. It's like a Costco, right? Isn't it like a fake Costco? Do you guys get mad if we call it a fake Costco? David Sarandos, baby. You have them in the Bay Area? Really? I thought it was an East Coast thing. You went to Costco once and never went back to BJ's? Sam's Club's fake Costco. I could get behind that. Huh. Well, BJ's quarter fuel loss of 0.3, gross margin on sales 16.5, SG&A 13.9, operating margin 4%, EPS $1.06. Revenue next quarter $4.89 billion, comps excluding fuel plus 0.1, gross margin on sales 16.8, SG&A 14.5, operating margin 3.8%, EPS of 93 cents. Since last quarter, November 16th, they are up 8.2%, S&P is up 13.8, and XLP is up 7.5. Near-term options imply 7.5% move. Last 4 quarters, loss of 5, loss of 5, loss of 7, gain of 2. Revenue has beaten 15 of the last 20 quarters. EPS has beaten 18 of the last 20 quarters with 2 in line. GoDaddy unhalted. Again, they just came out with like updated guidance. Damn. Well, they're already near highs, but they might be able to rip off of that still. Because they didn't really